most of the time was spent talking about long-range weapons for Ukraine. And everybody said that the solution was within range.
Good morning, everyone. Give me 1 second while I send the links out.
But Russian missiles and Shahis are still here. And we still have the coordinates of the factories where they are made. Today, they target Ukraine. Tomorrow, it could be any NATO country. And here in Europe, we are advised not to mention tomahawks. Not to mention tomahawks to the Americans. Not to spoil the mood.
Good morning, everyone. Today is January 22nd, 2026. Good morning, Tyler. Good morning, Oscar. Good morning, everyone in the WhatsApp group. Good morning, Harry. Good morning, Edison. Good morning, Alexis. Good morning, B. Turner. Good morning, John. Good morning, Cheyenne. Good morning, Chris. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only, and I am not a financial advisor. Time is 9:21 on the board. My internet should be fixed today. They are saying. Let's see. IWM is at new all-time highs. NVIDIA is in some sort of a hover stage in this purple box of yesterday's close. SPX is opening somewhere here below the gap. QQQ is opening at the gap. Tesla is holding and playing the gray box. Good morning, everyone. The news we have overnight is that Trump's latest tariffs U-turn is sparking a global market rally and reviving talk of the quote-unquote taco trade. Global markets were cheered after Trump retreated from threats to put further tariff on several European countries. The news and market response revived talk of the taco or Trump always chickens out trade amongst investors. Donald Trump's Taco Bell has rung a bell. Much to joy financial market, says one market watcher on Thursday. That's the meaning of the taco trade. Trump always chickens out. Good morning, Ali. Good morning, Zach. Good morning, Priscilla. Good morning, everyone that is coming in. Wow. The most important thing to mark is the QQQ gap and the previous day high, which is at the POC, as well as the previous day 4 p.m. close, as well as the SPX gaps above, and the QQQ gap, which we have marked. IWM is scary bullish. This thing is going higher and higher to new all-time highs. Higher and higher. You know what? I'm going to delete this shit, and there needs to be a new Fibonacci from the bottom of Tuesday, Wednesday, and today is Thursday. This is the third bullish day on IWM. IWM. Good morning, David. Thank you, Arkatim. Good morning. My internet should be fixed today. They are almost guaranteeing me, so I'm really happy. But the documents were already signed this morning, and tonight they might also stable fucking Wi-Fi connection. But last night, Mark Rutte had spoken to President Trump. President Zelensky is speaking at the Davos World Economic Forum live right now, just like how President Trump was speaking yesterday. So things move faster than we. Things move faster than Europe. And how can Europe keep up? Dear friends, we should not degrade. Good morning, Francisco. Secondary roles, not when we have a chance to be a great power together.
We should not
Good morning,
accept
Donna.
that Europe is just a salad of small and middle powers seasoned with enemies of Europe. When united, we are truly invincible. And Europe can and must be a global force, not one that reacts late, but one that defines the future. That would help everyone from the Middle East to every other region in the world. That would help Europe itself, because the challenges we face now are challenges to the European way of life, where people matter, where nations matter. Europe can help build a better world. Europe must build a better world, and a world without war, of course. But for that, Europe needs strength. For that, we must act together and act in time. And most of all, we must have the courage to act. And we are actively working to reach solutions, real solutions.
All right, let's see another popular video by the CEO of Goldman Sachs, David Sullivan.
Goldman Sachs. So we got a lot of ground to cover with you. That was not where we were going to start, but let's start right there. Chairman and CEO of Goldman Sachs. Welcome.
Thank you.
Nice to see you.
Nice to see you guys. Always nice to be here with you guys. We have a confluence of some very stimulative things that make us pretty optimistic about the level of growth that we could see in 2026. I don't know that I would have thrown out, 8% nominal.
Though.
Yeah,
so
no, I wouldn't have thrown out 8% nominal, but I do think that our view on nominal growth this year would be higher than the consensus. You have very, very strong fiscal stimulus. You obviously have the things in the bill that are coming through. You have some stimulus that comes from the deregulatory environment that the administration has created. We obviously have continued AI infrastructure spend that's very, very significant. Plus, you've got productivity gains coming as
IWM is up
AI, is implemented into the enterprise.
1.98%. SPY is up 1.15.
In my mind, some
Nvidia
sort of an exogenous event or a change in sentiment that's created either by
Tesla's up
geopolitics or
2.95.
some other speed bump that we don't see. I think the nominal growth that we see will be ahead of the consensus. So I think the
Good morning, Iso. Good morning, Chris. Good morning, Henry. Good morning, Shira. Good morning, everybody.
The expensing thing. The factories that previously wouldn't have been built are being built. Someone was going to make batteries. They didn't even make batteries.
Pulled back yesterday before it closed.
Now, because they can write it off immediately, they're actually starting breaking ground on a factory.
Well, I think the expense depreciation benefit is a big benefit to spur investment. There's a lot of talk about investment from U.S. companies and from foreign companies in. I think one of the things that we're trying to do, I think everybody should be doing, is tracking what actual investment's occurring and how it's occurring. These things, Joe, and this, they take time. To build factories, plan factories, actually get them in place, get them online, takes time. And so we're at the beginning of what is the potential for a much more significant investment cycle.
When you're tracking it? What numbers?
It's early. In other words, right now it's more talk than it's actually happening. But there are a lot of people making significant commitments, and as people follow through, that is a further tailwind for growth. When you talk about the possibility for a multi-year run, I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. We're set up for that. That might not happen. A bunch of exogenous things could soften it, but I think we're set up with a better possibility for that than we've had in quite some time.
Can you square this circle for me? So the economy looks strong.
Man, crazy how the market moves crazy. Like these numbers on QQQ and SPY be moving up and down like a motherfucker. Like we were at 610 yesterday, now we're at 622. Holy fuck. Like, dude, this shit moves crazy.
With NATO last night, and the market goes up.
A little push up from yesterday is not a little fucking push. It's literally 616 to 622. Like, this shit is no joke.
What's going on here?
6,870 to 6,930. So that's 50 points. 60 points. I don't even know.
Underneath the sheets.
45 points.
We're in a geopolitical
overnight moves more than the market.
More fragile than it's been for some
intraday
time.
sometimes.
We have a president that's got
that
a clear
fucking
view
way more.
about how he wants to drive an agenda. He's got a certain style in the context of
word?
he drives that.
Conspicuously,
I think markets don't like
unsuspiciously, or as suspicious as shit.
Over the last couple of days, there's been a
hits out of nowhere
of narratives that have created a little bit more uncertainty, and then there have been narratives that have followed up that seem to have
bullish
taken
shit into Thursday and Friday and drop over the weekend. Like
the business environment sets up very well.
Crazy.
Business people feel unleashed, all over the world, and want to invest in their businesses and grow their businesses. They have an environment where they think they really can make progress growing their businesses. You've got technology innovation that's helping people in their businesses, and CEOs are very focused on that.
Are those U.S. companies or around the world?
I think it's around the world. I think what slows them down, and we're talking big multinationals, what slows them down is when there's uncertainty.
Spike up on the video.
Some of the noise around geopolitics creates uncertainty. One of the things I try to do is I always try to step back and say, okay, what's noise? What's actually substantively going on? And I think that's a helpful lens. But on a day-to-day basis, when you're listening to the news, when you're listening to the speeches, if you're sitting here, there's going to be noise mixed in with the substance.
Is it compartmentalized between economic issues and security issues? And I think there's a lot of overlap. I think maybe that escapes us sometime, whether it's Venezuela. That could be really positive for the Western Hemisphere if their oil starts coming out of the ground again. Think about the Middle East and what happened with the peace deal and what could happen in Iran.
IWM got cooked. Nvidia getting cooked.
The discussion was whether Greenland was worth it. Whether
I'm adding 3K to 180 right now next week here.
Spooking the markets, worrying that NATO is going to, dissolve because of an attack on a sovereign country. Was all that worth it? Would it be worth it if we did get a golden dome and had a greater control of what happens in the Arctic Circle, which is so important right now?
Again, let's get to the substantive issue that you're highlighting, Joe. The substantive issue for the U.S. and Europe is Arctic security.
Yeah.
That's the substantive issue. If we come out of this, with a strengthening of Arctic security for the U.S. and Europe, that will be a good thing for the world. So I don't have to debate every discussion and every way that we get there.
None of us were thinking about this on Inauguration Day. No one was worried about Arctic security.
Arctic security is something that's worth thinking about. Okay, there are different ways to get there, but if we wind up with a better structure around that, that would be good both for Europe and the U.S.
But we don't know at this point what
we don't know
it looks like.
And Nvidia,
it's both security, but you can't have economic prosperity without security.
IWM at 270.
Security is a very, very important
in a day or two.
Economic prosperity, for sure.
Is this shit cautiously optimistic?
Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, set the stage for us, the big picture take on markets,
Greenland,
especially
Nvidia,
I know you were across
jobs.
the shifting sands all day yesterday through this morning.
Greenland, Nvidia, jobs.
Yeah, we are seeing a positive move in the S&P 500 this morning, and that's not out of the ordinary, especially when you see that volume difference for the S&P 500
up trying to go lower to fill the gap.
Volume. We got fairly close to a 2 standard
IWM.
deviation move to the upside, and usually when that does occur, we usually do have a follow-through day, and that seems like that's taking place right now. I think if you're looking at the technicals on the S&P 500, you're looking at that 20-day moving average acting as your area of resistance, and that's pretty much where we are trading at right now if you're looking at the futures contracts. Obviously, the market's a little bit more optimistic. The tariffs are going to be put on hold, and they're not going to go into effect. That's obviously going to be a positive, but I think we are still seeing maybe some pockets of the market, especially if you're looking at the treasury space and the dollar. You're looking at a market that's still trying to figure out what this framework of a deal is actually going to be, and if Denmark is going to accept it. So we are not seeing the dollar kind of reverse aggressively the move that we saw over the last 2 days where it did move to the downside. And also yields are still relatively higher than when we started this whole process. So a nice little bounce back. You'd like to see some broad participation, but I would be cautiously optimistic where we are at right now, especially with volatility kind of crushing to the downside leading up to the last couple of weeks in January as well as February. February seasonally is a little bit difficult here. So cautiously optimistic here. Nice little start to the day, but let's see if the market actually sells into some of this strength.
Okay, and let's catch people up on where things stand with tariffs. It seems like it's kind of the familiar playbook. Not everybody's on Truth Social. Not everybody watched President Trump's speech. Where do things stand now?
Yeah, so it appears that President Trump is, spoke with General Mark Rutte, which is the NATO Secretary General, and they have a framework of a deal that could actually expand the presence of not only NATO but U.S. forces within Greenland, This also could include the expansion of the Golden Dome in Greenland as well, and then potentially looking at mineral rights. Now, once again, we have not gotten this confirmed yet, but that's really kind of the framework that the U.S. at least is kind of working under at this point in time, which is why we are seeing the pause in the tariffs. I think there's still a little bit more of a concern about the long term when it comes to EU positioning in U.S. equities as well as U.S. treasuries. There does appear to be maybe some thought that we could see maybe still this divestiture from U.S. assets, maybe not all, but maybe a little bit. And that's probably, once again, one of the reasons why we saw this about-face, this taco trade that we kind of talk about on, it seems like every 3 months or so, that kind of took into effect here. So that's the framework that we have right now. I'm sure we're going to get more details today and tomorrow, and we'll see how the market actually responds to not only the comments from the president in the U.S., but also the comments coming from Denmark and the EU. I think that's really going to be important.
Okay, we'll hear from Jay Wood shortly with thoughts on the taco trade, because I know he has some. But let's get into the latest in Davos before we dive into GE earnings. You had Jensen Huang, NVIDIA CEO, speaking there, and he sounds, I mean, I suppose he would sound optimistic about AI. What are some of your takeaways here as it pertains to NVIDIA and beyond?
Yeah, he's still optimistic about AI, obviously, right? That's a part
Raj,
of his
if you want to come back in the WhatsApp group,
being taken as seriously as maybe some of the other critical infrastructure that we've seen evolve in the United States when you're looking at expanding the grid or even the railroads and things of that nature. So there's a heightened importance.
Someone on YouTube
the fact that, obviously a lot of economists as well as traders, investors are concerned that a lot of this AI is going to take away from jobs or eat into jobs when it comes to growth here. But he is saying the AI boom is actually driving stronger demand for skilled trades like plumbers, electricians, construction workers, steel workers, for that matter. And they are also seeing wages for those roles actually rising very aggressively. So it's just a reallocation of resources and capital, really, when you're looking at the labor force. And he's really optimistic about that. And that growth can continue over the next couple of years.
Just because that's something someone does and that's what they're interested in, I can't have that person posting shit in front of 100, 200 people like that.
Similar to what we saw once again in the telecom era, in the internet boom. We did see a readjustment, a generational shift.
If that was you, Dancing Diva, just type some shit for a day or two and you come back in, bro. But you can't do that in here, man. We've already had someone with the that is you. You can come back in like a day or two, but like don't do that because we've had numerous people do that before on individual stocks and on iron condors before. And I understand people do iron condors. I understand people do futures.
Some of the earnings, GE in particular, GE Aerospace. We got the latest results from them. Looks like a beat on the top and bottom line. What are some of your takeaways here?
Yeah, we're seeing the shares kind of gyrate here, a little bit flat to slightly negative about 5 minutes ago. So we're still kind of digesting these numbers, but they actually were fairly good. If you're looking at the adjusted earnings per share, it came in at $1.57. Street was looking for $1.43, and the adjusted revenue came in at $11.87 billion. Street was looking for $11.17 billion, around 20% growth on a year-over-year basis. And they did see and mark a $27 billion backlog of orders within the quarter for Q4. They're still optimistic when you're looking at the fiscal year 2026 EPS guide. They're guiding between $7.10 and $7.40. Street was looking for $7.11 here. And they just continue to talk about the fact that there is a shortage when it comes to narrow body engines, and that's really where they thrive. Not only there when they're coming to selling OEMs, but also maintenance and servicing those engines as well, which is a higher margin business. And that's something that they did see a lot of growth in. They say more than 70% of commercial engine revenue came from servicing those engines. So they are seeing a lot of strength. The backlog of orders is obviously a positive, and if Boeing and other airline and aircraft makers continue to see this ramp up or this refresh when it comes to current inventory, GE Aerospace is definitely going to be a beneficiary.
SPY is not broken.
Okay, let's get your levels today on the S&P 500. What are you looking for to the upside and the downside?
Yeah, to the upside, looking at 69.40. To the downside, 68.50. Volatility continues to crush. We are seeing the VIX contract, especially if you're looking at the VIX curve, normalizing here a tad bit. Let's see how we test that 20-day moving average on the S&P 500. Do we actually accept or do we reject it and move lower?
Not bearish or bullish.
All right, thank you, KG. That is Kevin Green, our senior markets correspondent for the network.
Sorry, I was messaging back somebody. I gotta pay attention right now.
Now, we want to welcome in Jay Woods, Chief Global Strategist at Freedom Capital Markets, for his thoughts on the gyrations happening in markets this week. All right, Jay, you just heard KG. He brought up the taco trade, which people have been talking about recently. I know you have thoughts on that. It does seem like there's been kind of this familiar playbook around tariffs. What are your thoughts?
Yeah, Taco Tuesday on a Wednesday yesterday. It happened quickly.
935
the market and a lot of the retail traders are getting used to this playbook. He's going to back away from these threats, and people that bought this dip were again rewarded. I'm concerned that one day, it's going to be a boy that cried wolf scenario, and all of a sudden people are going to get burned because he doesn't back away. We've seen his tone take a little different tact, from Venezuela to this. So I'm still a little jittery that this is just a framework of a deal. We've had framework of deals in other areas, healthcare, and we haven't had a deal. So this may have just assuaged fears for now, but let's see what this does when he gets back from Davos. I know there were a lot of leaders that were not happy with the way this went down. Macron left. So we'll see what happens. But for the market, now we're at a very interesting level. KG pointed out, what levels he's watching. A week ago, we were talking Dow 50,000 getting the champagne on ice, and it's still on ice. We're getting close. And then I look at the NASDAQ 100, and I'm looking at a topping formation and a potential breakdown. We held a key level there. If you look at it via the QQQs, 608 was level, 100-day moving average. It got to that number exactly, and then it rallied. It's really starting to coil. I think what it will come down to, forget all this Trump stuff, it's going to be earnings. We're seeing some strong earnings. No follow through. JP Morgan. 3M was okay yesterday, and it got decimated.
It did. But at the same time, it did. But I do wonder if some of that was kind of the broader momentum that was happening, too.
Well, we had broad momentum going into these names, and it just didn't follow through. So this is the fear. We're going into one of the biggest earnings weeks next week. We have 4 Mag 7 stocks reporting. We've got the 3 credit card companies reporting.
Tesla's reporting.
And American Express. And then we've got the defense stocks. So we've got something for everybody next week. And let's see, will those defense stocks continue to go higher with good earnings? They've been on a tremendous run. Those that have gone up into earnings have
no
kind
cycle
of
rejection
back.
happening.
That rotation
Cycles are
continues.
different on QQQ and SPY.
The energy sector, it's the material sector. Sectors that are now leading.
No cycle rejection on SPY and NVIDIA, at least.
Bull market participants. So it's not the greatest leadership, but it's good that we're getting money to stay into this market, to rotate to other sectors. But it doesn't really leave me with this rosy feeling that we're going to take that next leg higher anytime soon.
There are many who said going into this year that we would start seeing the rotation trade and that it would be healthy.
Bears are trying off candles alone.
Is that healthy? I know you mentioned the late bull cycle aspect, but is there a warning sign?
Well, the small caps leading. Small caps tend to lead in times where, there's a little uncertainty. They're usually the laggards. For them to lead, it's kind of, And then, you see the commodity trade. Gold, silver, copper, palladium, platinum. They're all, safe harbor trades. So to me, there are a lot of mixed signals in this market. Don't even get me started on Bitcoin because I still can't figure out the correlation.
There was a correlation to stocks, and then that kind of broke down.
Yeah, and Bitcoin's really on the ropes when you look at technically. This has potential to break down. But overall, when I look at the equity market, I think rotation is the healthiest thing. But right now, when we're seeing the leadership, it's not the best leadership. And where are we lagging? Apple broke down. No one's talking about that. They report next week. Microsoft, 6-day losing streak, breaking down. NVIDIA, Jensen was optimistic on AI. That's really not a big news story, considering he better be. If he's not, then we're in trouble. But that stock has been consolidating in a neutral phase for a while. It's not breaking out. So we're seeing some topping formations. Then you look at some of the CrowdStrikes of the world and the software stocks. Technology is where we want to see leadership. And every time you think it's going to lift its head, it doesn't. Watch Meta next week. Meta is the stock that crushed after last quarter's earnings. It has not made it back. It could be rallying into the 200-day moving average as we go into next Wednesday's earnings. Let's see if they can get back on track. That to me, Meta and Oracle are the two to really watch because they're broken down stocks.
Does there need to be a new Mag 7?
Well,
direction is showing south now. Let's see if they continue.
Acronym,
Or let's see if they come back into the algo
right
range.
Now, the leadership is Exxon and Chevron. You know, it's not. I mean, it's a great place to put your money. There's a lot of momentum there, but you know, the Mag 7 story was fading in the middle of last year, and then it really kind of blew apart. Tesla is its own little animal. They report next week. Watch 420. It looks like it wants to go a little lower. So yes, it is his favorite number. I know.
Is there a 1 minute gap
It is
here?
the key level.
Yes,
it just happens to be his favorite number.
Yes.
But yes,
45 is bouncing now off the LOD.
You know, crossroads, and I think earnings should be the guide next week, especially when it comes to tech. We're going to focus on that spend and then how we react to it. We saw what happened with Meta last quarter. Hey, it was a pretty good quarter, but the spend was
it's happening slow enough for me to draw this shit. That literally tells me that the market is just deciding and cycling.
Because you said, you know, one of the things that you pointed out is like, yes, it's worked for those who bought the dip, but there are
market is deciding right now, right here, that with the wind direction south on
and I could see
QQQ
that
and
happening
SPY line.
with the president, that he could follow
IWM is north.
You know, because he doesn't mince words, and yes, it may be, you know, kind of a negotiating tactic. What tells you that that trade is finally not working?
Well, well, an official breakdown in some of these indices, but when he does threaten, what we see is an overreaction, knee-jerk reaction to the downside. The uncertainty, the tariffs caused, you know, a quick sell-off, and it wasn't even 2%. But you know, these are tradable opportunities. But if it drags into something more and there's more pushback, then we could see a little bit more of a near-term sell-off, and then, you know, struggle to rally back. But when it's overdone dramatically, that sets us up for a nice pullback. I don't think we're going to break down dramatically anytime soon. I don't think we're topping, but there are topping formations in some of these tech names that have me concerned, and that could be a drag on the overall market. But overall, broadening is strong, rotation is strong. I think we're fine, but the leaders are not going to be, you know, breaking out our Dow 50,000 hats next week unless technology helps them.
Okay. Yep. All right. Well, we will see. Tech has a lot of heavy lifting to do. Jay, thank you.
Thank you.
That's Jay Woods, Chief Global Strategist of Freedom Capital Markets.
MACD and volume growing.
And join us now for a closer look at President Trump's message in Davos. Jason Miller, who served as senior advisor on President Trump's transition team and election campaigns. I'm not sure about the linkage of bringing you on after playing that. We didn't play it all morning, but we played it for you. But welcome. Thank you.
Thanks for having me.
Direction is south.
We were just
crazy.
talking
The video
off
puts
camera
coming back
about
too. Crazy.
The president coming here. You had something to do with the, I guess, organizing such a big turnout of administration for Scott Bessa and Howard Lutnick.
Time is 9:50.
The president himself. Has it been a good experience for the president? You said something about someone might like a world stage.
Gap filled on SPX.
As we know, President Trump loves the world stage, and I think the reception that he received here at Davos was really quite overwhelming. And even yesterday when he was delivering his remarks, I think a lot of folks expected him to come in and talk about Greenland, but they didn't expect to hear such a clear, concise case.
They want to
of why
decide
the
if they
US
want to go
should
lower
own
from
Greenland.
the SPX gap fill, or they want to stop right now. There's our here.
Big
Big time!
Mentioned Secretary Bessent, Secretary Lutnick. In fact, I bump into a gal that works at the WEF who's been with the organization for years, said she's never seen an administration have this large of a contingent at Davos. And the reason why? America has a great story to tell. President Trump has a great story to tell. Everywhere you saw Americans, you saw optimism this week. Except for Gavin Newsom, but you can't help him.
You can't help him. You were in the room, I guess, during the speech, and I guess people were listening quite intently to the president at that point.
I was in fucking 4K.
They were, and that's the thing that
uncomfortable things to hear for a lot of Europeans.
But I think that's a big part of the reason why people respect him so much, is that he's going to come in and tell you exactly what he thinks. By the way, you can also follow him on True Social and find out exactly what he thinks, as you guys do and react to almost every day. But I think Europe needed to hear that. And one of the things that this is my first trip to Davos, learning is that the sense of optimism that you have with the U.S., with Americans, not necessarily shared share by the Europeans. And almost all the Europeans I met with or spoke with seem to be pessimistic, seem to be dour. And I could see why they'd be frustrated with the EU and the overregulation. But Americans believe the country is back, the economy is back, and we're taking off like a rocket ship.
We don't talk about
rocket ship. I came in like a rocket ship, just going the opposite way of what everybody thinking.
All across Europe.
Amazing. They were saying a cup and handle on the video.
For the last 20
cup
years
and handle my
exactly
to that.
I'd be in a bad mood too, I think.
Fuck out of here.
I think that's a big part of the reason why so many people want to invest in the U.S. When you see
fuck out of here, bro. There was a guy that posted cup and handle at 7 in the morning because he's positionally biased, and I was like, dude, nobody cares. Like, you're not doing this shit at 7 in the morning. I've been up since 5:40 in the morning, son. I've been up since 5:40 in the morning, son. And I was like, nobody cares about your positional bias.
I think a lot of the outcomes, obviously, the outcome yesterday between NATO and the United States over Greenland is a positive outcome. But there's a process question, and I think even if you talk to a lot of the most influential, biggest name CEOs in America,
they should be going to 190.
Conflicted at best about how we get there, and in part think actually that long-term it could damage the underlying relationship and trust between European
I've been up since 5:40 in the morning.
European companies.
5:40 in the morning. I have sleep problems. I sleep 7 hours, 6 hours and a half, barely. Every fucking night when I feel rested for some reason.
Yeah, really good question, particularly for the markets as people are watching this. I think the Europeans needed to hear this message from President Trump. And unless they heard it from him here in Davos in very plain, straightforward, easy to understand way, they're never going to have the courage to make any of these reforms. At the current path, whether it be on the population, whether it be on the economic trends, Europe's heading in the wrong direction. You look at the United States and what we're doing, it's a great place to go and put your money and invest. But President Trump came in, someone had to tell the Europeans what's going on.
When Brigitte Bardot died,
the bullish MACD being used. There was no volume yesterday. They pumped the fuck out of pre-market, and then basically
France is changing, the immigration policies of Europe.
But no one knows how this is going to go. I mean, 1/3, 2/3, 3/3.
These countries, and I think they had to sit there and listen to the president.
Count this too: 1/3, 2/3, 3/3, and we're in the 3/3 of the 3/3.
That are unrecognizable from where they were.
Damn, that's crazy how that works.
Andrew, I want to go back to the point you were making also just about the process aspect of this. President Trump realizes he has 3 more years in office. Unless I can convince him to run again in 2028.
You're kidding.
That's a joke. That's a joke.
Yeah. Don't say that to
he looks like
IWM. If you do
the
first 3 campaigns, you'd have to stick around for the 4th.
IWM ran for 3
President
days.
Trump knows he has a finite amount of time to get the U.S. on track, but also to get our allies on track. We see what he's done with getting NATO, increase the spending that they're going with, because we don't know who's going to be next. I obviously hope it'll be Vice President Vance, but there are no certainties.
Let's see if the pre-market high is now being used as some sort of a cycle here.
Mark Carney's speech? Because there was a lot of people talking about that in terms of sort of a new world order, the idea that some of these countries ultimately that have been allies of the U.S. may be allies in some ways, but may have to find new friends, including friends like China, which is something that I don't think we ever wanted to push people into the arms of.
It occurred to you that sucking up and partnering up with a repressive communist regime is just that does not compute for a Western nation like Canada.
It may not, but by the way, they're going to have BYD vehicles in Canada, and they're going to be on our doorstep.
I wouldn't put it past Mark Carney to think that China is a better.
Today's one of those days, man.
I don't admire someone that would come to that conclusion.
He's clearly playing to his political base.
Yeah,
and that's a nonsensical statement to say that Canada might look to partner up with China. And to your point, Joe, if that's where Carney wants to go, then more power to him. The fact is, Canada should be a good ally of the United States and vice versa. But also, the United States can't be expected to cover everything for Canada or to be taken advantage of with trade deals. And so I think the president's right to push him.
Trust me, man, the people that give me the most shit I've seen, right, before even someone has sent me screenshots, I've seen them over there. So trust me when I say the shit I say, man. I'm not fucking making shit up. It's just, they keep
that might be a great place. Let's see if Mark.
I'm not suggesting this is the right path. I'm suggesting that the fact that Western countries even talking about that aloud.
Well, if he's talking about it aloud,
point trading at the floor.
That's my point.
Cycle is building off the floor.
And we're going to see. Do you think there's a way to repair the relationship with Canada?
MACD and volume is still in their territory. However,
President Trump knows he's going to get the deal done first before he can get better terms before we probably get to that point. But Carney needs to get on board.
Mark Carney.
One last thing about the Supreme Court and tariffs.
Man, this is the craziest thing ever. Like, tariff news,
very effectively.
Tariff cancel.
Possibility that the Supreme Court will say
no one knows if it's
uncanceled. Tariffs the same way.
I'm talking about.
Not say that you can't use tariffs
I mean, maybe the tariff news isn't going to come out, but like this market sentiment.
And the question is, if this mechanism changes,
market sentiment is like.
I mean, he's used these as sort of a chess piece in terms of leverage with all of these other countries over so many different issues, and how you think that dynamic shifts if, in fact, he doesn't have them in the same way.
So I'm not a lawyer, definitely not a trade lawyer, so I can't speak to necessarily the Supreme Court specifics, but the smart lawyers that I speak with, including Jameson Greer, our fantastic trade rep, feel very confident about how things will turn out with the Supreme Court. And there are all sorts of mechanisms that President Trump can use. And that's one of the transformative things that he's done with his presidency is use the ultimate soft power, which is trade. It used to be power would only be if you move a battleship or an aircraft carrier off the coast. Now you can use trade to move things, saving lives.
Stuck on something sticky.
In many ways, it's fulfilling the work that everybody has done. I mean, taking on the responsibility was something that it was pretty daunting for me to do that with my full-time day job. And but the amazing team behind Davos really assisted with me and helped me out. I have an amazing co-chair. And importantly, though, I think everybody was in need of having a conversation. You know, we as a board we talked about that we wanted to move the conversation and have a much more open, robust conversation, and that's how we came up with the spirit of dialogue as the foundation of today. But I think the confluence of so many things going on globally, I think we were able to be at the right moment, in the right spot, and importantly, let me start out with the foundational issues. I mean, the 55 years of Klaus Schwab was a foundation of what we were being able to build upon. But no place other than the World Economic Forum in Davos.
That's scary as shit.
Has a combination of world leaders, and we had 84. I think the only other place where you have 84 world leaders in one place is at the UN in New York. But we had over 800 CEOs and share. We had civil society. We had so many different people here. And I think it was that conversation, that spirit that really made it.
I guess it was touch and go because at times people were bracing for a belligerent speech from President Trump. So I don't know how you look at geopolitics and geoeconomics given what we've learned so far.
Into 3:30.
I think because of all that, everybody wanted to hear. I think Tuesday was just as important.
And old money bulls
the conversations we had with Europeans, with Mark Carney, with Emmanuel Macron, they were great, honest, open conversations. I think Mark Carney delivered an incredible conversation. I may not have agreed with everything he said. That's not what we're here for. We're here to have that conversation. But I really do believe the openness of those conversations on Tuesday led obviously to a large conversation with the President of the United States yesterday, and then we had the peace initiative this morning.
Handle by next week,
Wednesday, folks.
We'll see if it became a cup
Jensen,
and handle. We'll see if it became part of the downward
and what does that mean for all of AI? And to me, I learned a lot in that conversation.
Do you worry about AI bubbles? I mean, this is the thing that worries the markets. If you put your BlackRock hat on for a second, it's AI and it's geopolitics. Which one's more uncertain?
I don't think there's any uncertainty about AI. There's no question. Hundreds of billions of dollars is needed to build this out. The CapEx is going to drive more global growth. How that is going to be dispersed and where it's going to be really dependent on each and every government. But I sincerely believe there is no bubble in the AI space. That being said, like in everything else in capitalism, there's going to be some big failures. Okay, we always see a rotation, and there's going to be some huge winners and some losers. But do I believe the needed capital to build out AI is one of the great opportunities for the world to come? When you think about the hundreds of billions of dollars of infrastructure that's necessary, countries are going to have to rebuild their grids. We're going to have to source new powers of energy. Last night at a dinner, we had an amazing conversation on how AI is going to change science. and how it's going to improve human lives in terms of medicine. But importantly, there's a strong foundational belief that AI is going to accelerate new sources of power. And if we can have cheap sources of power, abundant cheap sources of power, maybe things that we can't even think of today through AI, imagine how that could lift the rest of the world.
You announced a big, actually, partnership with Microsoft that you've raised $12.5 billion as part of this partnership to bankroll data centers.
Yes.
Like, when are you thinking 30 million?
Huge.
30 billion, yeah.
30 billion. When's that coming?
Well, we raised 12.
They
flip
616
we're actively
somehow.
raising more money. We did it already making an acquisition in aligned data centers. The total enterprise value was $40 billion. But not only is Microsoft our partners, MGX of Abu Dhabi, NVIDIA is one of our partners, XAI is one of our partners. And so we have an incredible partnership group in building this out. And we are seeing more and more opportunity working alongside some of the best hyperscalers. And so we see nothing but opportunity, and that, but we have to be judicious and we have to be thoughtful about it. But I'm very encouraged about what AI can do for humanity.
I mean, the way we've covered World Economic Forum is also trying to figure out whether there was a move away from U.S. assets. Do you see that at all, or is it a conversation that you had with the Trump administration?
So if I go back to early Davos last year, I would say the average world investor had an unbelievable overallocation in dollar-based assets. And I think over the course of the last year, we saw probably a 5% reallocation. And that's fine. I mean, when your liability is another currency and you're investing in dollar, I mean, the value of the dollar is an important consideration in your total return. Could there be more reallocation of the dollar? I think the U.S., because of where we are at AI and the amount of capital being spent, I think we have the U.S. economy is really growing fast. I mean, we estimate it to be over 5%, in the first quarter. So the key is now, don't just focus on GDP, because GDP is heavily oriented to all the capex on AI and technology. The key is in that economic condition, are we creating enough great jobs? And so to me, that is what we need to be focused on, not just GDP anymore, because GDP is going to be powerful. And that's one of the reasons why I am still, I do believe the United States is one of the great places to invest, and will remain to be one of the great places to invest. But having a diversification, that we've seen a little bit here and there, I'm very relaxed about it. I think there's too much noise about that.
Okay. What have you learned here in Davos? I mean, you've spoken to everyone. Are people nervous about the relationship between the U.S. and the EU?
Look, I left in the beginning of the 2/3, and I'm not even playing the 3/3
What's been the most surprising conversation you've had?
I'm in NVIDIA, like really
How
big 180
needed
now. But
people needed to be here to have a conversation. I think people
I didn't do
came
yesterday.
here with a
SPX
lot of
huge too.
trepidation.
I missed out on a lot.
I think they came here with a lot of fears. And I do believe we're going to be leaving Davos with less geopolitical fears.
Cup and handle on Tesla. Cup and handle on NVIDIA, man.
If there can be peace
Cup and
in
handle.
Ukraine, I'm heavily involved in it. BlackRock's heavily involved in working on the Prosperity Fund.
Cup
I mean,
and
think
handle.
about that. If we could have that, that's a foundation of more global economic growth.
Cup and handle,
When
man.
you think about when we entered 2025, where we had a war in Gaza, we had all these different skirmishes, and we may be more nervous and focusing on all these
and handle.
issues. But the reality, the world is becoming safer, not less safe, in my mind.
Volume is still
And the last thing I
bearish.
want to say
Tesla
related to
NVIDIA is not
volatility,
going yet.
if you look at the 10-year Treasury on January 1st, 2025, April 1st, and October 1st, and then January 1st this year.
They said cup and handle,
If
bro.
you're
What
looking at those
happened?
4 points of data,
What happened to
at
the
the
fucking
10-year
run on
Treasury, the 10-year
SPX?
Treasury moved 3 basis
But they
points.
said it was bullish.
Okay, yes, we've had a lot of
But they said
volatility.
bullish. What happened?
My point is, the way I want to
What
talk
the
about
fuck
that, when you look at
happened?
these wider
Shut up,
points, there's been no volatility. And the
That's
key
how
and
they
the
do it.
message that we need to be
What
telling
happened to the market,
people
folks?
who are watching,
Say it with me. Candle
it's not about the moment, it's not about the noise. I mean, it is about long-term
Somebody say it with
investing.
me, please.
And when I think back,
And CS
if you
versus
invested
what?
$1 in the S&P on January 1st, 2000. And a
CS,
year later, you had a 30% downdraft because of the
Can they expect this?
But
No.
over that 25 years,
Can
you
they
made over an
expect
8%
down,
compounded
up,
return,
down? No.
better than almost any other.
Can they expect this gap fill?
I think there's just not
when
enough
it happens,
narrative,
though, they
not
could
enough
expect it when
conversation
they're going
about.
down. Yeah.
We got
when they're
to
going lower than
walk
this,
away
you're
from
like,
the
oh
noise.
shit, now on a 330, they want to maybe, yeah. But I mean, huh?
And that we can be better if you believe that your government, your economy is going to grow. You need to grow with it. I said something in one of my meetings earlier today. I don't remember which one now. And this one very powerful person in AI came up to me yesterday and he said, "You're right." And what I said was, we need to make sure if this AI transformation is real. I think we need to make a responsibility getting more people to be investing alongside of it, not watching. And I always say, if you believe in your country,
is cycle the only thing that makes a deduction?
Why aren't you investing with your country? And the best way of investing is in a broad index in your country.
That's a fucking speculation.
And I think one of the foundational problems of Europe
what is a deduction?
The underinvestment,
all things considered,
the lack of a capital
logical
markets
analysis
in Europe.
that you get.
When you think about the success in the last
24
months
that you get
Japan,
from your equation of all the primary factors and the equations, the factors that matter to you. What is the problem with positional bias?
NYSE account, which
One
is a
thing gets you
self-directed
stuck.
retirement account.
Right,
does
whether
that
it's
change
price
after
target, whether it's
the
technical
threats and
analysis,
from
whether it's
President
shape,
Trump
whether it's volume,
for
whether
Europe?
it's your hope
Is this
on
the
some shit.
time where they focus?
When you see
But
something,
I heard,
it gets you hoping.
Christine
When you see
Lagarde
news
talk
bullish,
about
you hope.
Europe
When you
needs
see
a
a
capital
little
markets, a
pattern
unified
forming,
capital
you
markets.
hope. When you see
I
price
think that's
target,
an
you hope.
important message for Europe.
Been saying on this stream
I think
since day
President
one,
Trump's
right?
prompting Europe to take more responsibility in defense and NATO. All these things are really wonderful. I think I actually am bullish on Europe because I'm starting to see Europe doing these long-term things to build vitality for the future.
Are you moving west to Detroit?
When it's logical charts, I'll shut up.
There has been
when it's not speculations, I'll shut
there
up.
has never been a formal conversation or a conversation at the board level or at the governance committee about any movement of Davos. There has been a broad conversation. How can we bring the vitality of the World Economic Forum in Davos to other locations? I will be in Istanbul with the World Economic Forum this spring in Istanbul. There is a spring World Economic Forum now.
There are
in
things that
Jeddah
I do not know too.
in
I
April.
love when people talk about the things
And
they're
so
interested in.
we need to have this foundation of conversation, not just here in Switzerland, but we need to have it in other locations. And to me, that is going to be the essence of of having these things, having more deliberate conversations. And it doesn't have to always be in Switzerland. But Davos is Davos. It is a great town. The weather is magnificent. The hospitality of the Swiss government has been amazing. I think having this Congress Center has really allowed us to have, intimate conversations, brilliant conversations, and importantly, open conversations.
Bears are in full control, right? Bears are in full control. 30-minute candle coming in, 40-minute, 45-minute candle coming in. That's just crazy though. 622 and we're at 618. We're at 616 yesterday. This is more logical and reasonable than not. To see it go from 616 to 622, people are bullish at the tippity top. Because they don't care. They don't really care about cycle analysis. And they do not care. They don't really care, dude. You think I'm bullshitting? Fuck with me and find out, dude.
Let's cut through the drama. Let's get to the big point.
Why am I saying the shit I'm saying?
What happened at dinner time the other night? I've heard all kinds of stories, booing, Lagarde storming out the room. What happened, sir?
Oh, this is so silly. So at the end of the evening, they called on me. I just published an op-ed in the Financial Times. And so they called on me. I gave 2-3 minutes of my FT, which basically said that globalization, right, and the outsourcing of your industry to the lowest cost in the world, right, had really harmed America, it had harmed Europe, and it had failed us, and that we need to reshore, need to take care of our own citizens. So that's basically the model. And when I was done with that 2 or 3 minutes, one person of the 200 odd people in the room booed.
Tesla
And
bearish.
I felt honored because it was Al Gore, an Al Gore boon, and I was like, really?
So Madam Lagarde wasn't throwing bread rolls at you from the bank. That wasn't happening.
No, I mean, I put it in the FT. I mean, I wasn't like trying to be quiet about it. I mean, I think that globalization, right, and the idea of global supply chains and finding the lowest cost, I mean, that is just not the way to take care of your auto workers, right, who are in Ohio and Michigan. And so
apparently they had some Jensen news come out on the video yesterday.
We started auto tariffs. We started working on it in March, and we finished in November. And we were done the last day when we finished. General Motors and Ford stocks each went up 10%. General Motors ended the year up 60%. If I told you on January 1st that General Motors was going to be on 60%, you would all say, oh, stop it. And how about this? On that same day, Sean Fain, who runs the United Auto Workers, called me and said, I can't believe I'm calling a Republican Secretary of Commerce to say, thank God for you and your administration. You're the first administration who's actually taking care of the auto workers of America. So think about that. You can, if you really think it through,
it's good to use price levels and fib retracements to have part of your deductions, but the price levels and the fib levels start becoming people's hopes, and it becomes the only thing that they're relying on to be like, oh, my trade is the correct one.
That's why Donald Trump
absolutely
wins
not right.
the union vote.
Nothing determines that. Only the market participants doing it live, market cycling, blah, 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 trapping bulls, trapping bears,
it's not a political thing. These are great jobs for Americans. Let's get more of them.
There's a lot of money set to come into the United States and big bets, a ton of FDR. We can get into that in just a moment. I just wanted to stay on G7 allies. This week's been quite a week. Emmanuel Macron, the French president, has said, basically accusing the US of trying to subordinate the Europeans. The Prime Minister of Canada, I'm sure you heard his speech, Mark Carney, the other day, said this is not a transition, it's a rupture. How would you describe relations with those countries at the moment?
Bounce up and catch up to.
Our relations are perfectly
IWM
fine,
the video
right?
and something, or go here at least, or
the relationship
the video and Tesla's going to start going lower into
when Greenland was going back and forth before we sort of settled it with a framework agreement, right? I called it a kerfluffle. Right?
That's
it's basically like if you have an argument with your spouse, that's
would align with
real,
somewhere here.
It's not a real one. It's like a small thing.
Your spouse doesn't go out there and deliver a speech after that argument.
With somewhere
That's the end of the relationship.
Fair enough, but you're right, and I think they overreacted, and it's proof that they overreacted because a day or two later there's a framework that makes sense, right? What did we say? We said
I'm not speculating here. I'm just looking at the possible deductions of what's happening live, which is basically what smart money deductors do at all times.
If you're going to build a golden dome,
there's a fine
the
line
United States of America, right? Wouldn't you prefer the Golden Dome cover Greenland? So when you're knocking out the missiles, you're not knocking them out right over your head. Like we've all seen Israel like knocking out the missiles right over their head with their Iron Dome. Wouldn't you prefer to knock out the missiles if you live on the East Coast of the United States of America over Greenland, a couple of thousand miles away where there's no people? Right? Doesn't that sound better? So this is sort of where we're thinking about it and how our national security team is thinking about it.
So what's actually in the framework?
That's what I understand.
Well, the framework is a national security-based framework. That's what the United States cares about. We care about our national security.
To keep my
and we care about
environment,
the shipping lanes.
my mindset
So let's talk about the
that's what I
national security and
truly
shipping
believe in
lanes,
life,
and let's see if we can't figure out a framework to do that together. And I think that's what the
Wolves and
president
Bears are all
about.
trying on
He
the
said
video.
We're going to try to figure that out together.
IWM is trying
those
bearish.
were the key
I have no
points
idea. This is the most
that the
confusing
United
shit
States
ever.
of
They could
America
be trapping
cared
bulls.
about.
They could be
And
trapping
I think
bulls
the
or
president's
bears.
been clear about it, and he just wants
think they're going to be
people
trapping
at the
bulls.
table dealing with it swiftly. I mean, think about this. He sends out a truth, and like within 4 days, right, we have a framework agreement. Like that's, by the way, that's a pretty effective
tool. We had tariffs on, tariffs off.
They were never on.
What does this do?
They were never on.
The threat of them are coming on for February 1st. What does
Maybe
this
they're
do
getting
now
ready
for the
to
agreement
get up to all-time
you and your
highs?
team struck with Brussels?
Maybe I'm
because
the one
legal
bugging.
implementation has now been put on hold.
Oh, I think it'll be put on hold.
Jeff, you are the one
probably
crazy because you know the
tomorrow.
market going crazy
come
down
on,
and the
that's why I
market
said
going
it's an
crazy up. So
overreaction.
technically, we should
I
just
mean,
go crazy up and
they
go break
know
all-time highs,
when the
Jeff.
president
You're
says
just
this is what's going to happen. I mean, what provoked the
blah, blah,
president?
blah.
What provoked the president was that they sent military people to Greenland. I mean, they didn't send military people to
I don't
Ukraine.
give a shit.
Like, why are they sending
I don't care if they're showing me
military
bearish or
people to
bullish. I
Greenland?
care about what
You know, it was so. It seemed like a provocation.
We spoke to the Finnish leader, and he suggested that was a miscommunication, and he cleared that up pretty quickly.
I care about
There's something I want to get into with you that I think is quite important. This, of course, is the end of the deal. We talk about it on the program all the time. The president anchors the story to the extreme. and then gets a favorable deal for the United States. I think that's well understood.
That I care
Something
about so much
happened,
because
though,
I
in the
do
last
use it.
12 months that I think is really interesting.
All drawings
we tried the same thing with Canada
analysis.
And totally upended the election
Sometimes
in Canada north of the border. Polyev was going to sail away
down or up,
the reason Mark Carney's here as Prime Minister is because the President took such an assertive stance on Canada. Now, at the time, I was finding the humour in the conversation. Then the Canadians started lighting up the Bloomberg terminal, sending messages. They were deeply offended. And we've seen that damage the economic relationship with Canada and the United States. And the risk here, Mr. Secretary, and I'd love your thoughts on it and your reaction.
We're making
an
N, we're making a W, right?
The points you're making about Europe and have made over the last week are valid points, and they're actually well received by a lot of Europeans.
Tesla is making a U cup and handle, true,
some of them are finding it offensive. Do you think there's a risk here that we damage the economic relationship with the Europeans in the same way we do with the Canadians,
IWM
and for that matter, derail the conservative movement in Europe?
I don't even want to know what the fuck IWM does today, but it's just actually
I think the fact is that you need to rethink. I think Europe is amazing, and it's got extraordinary opportunity and a $20 trillion economy. But think about this. If they had the right digital rules, meaning similar digital rules to the United States, we have $6 trillion worth of committed investment to build data centers in America, and we have a $30 trillion economy. So if they had a $20 trillion economy, you'd say, okay, if they had the same rules, they could get $4 trillion. Or how about $2 trillion? You realize $2 trillion for their economy, right, would be 10 points of GDP spread over 3 or 4 years. I mean,
that's the biggest troll I've ever seen on Gold. They burned the fuck out of the
bears
on Gold.
So we did a deal with Micron. Right? They're going to build $200 billion in America.
Dropped it yesterday when I was like,
last Friday, we did a groundbreaking of their mega Fed, $100 billion Fed.
Oh, gotta love to see that one. Gotta love to see that one because I ain't a part of that.
There hasn't been industrial building in upstate New York in probably 40 years. But if you think about it, it had a huge industrial base once upon a time. So what does it have? It has power because it has the power infrastructure for that. So what that does is it creates like this enormous
some sort of a test of 6902.
And I think Europe can do the same thing. I think the UK can do the same thing.
And 2 weeks ago, I don't even know. They're all playing right now.
Kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results without using words like calling leaders weak
bounce
or
and
their
go back into it,
decaying,
or let's see if
right?
they lose it and reject again.
Is it necessary to provoke the visceral feeling that we feel among a lot of leaders here and in conversations with international investors? I mean, is there any other way? Is that style
that would be the question.
More harmful than it is helpful?
Everything showing again back up.
It creates listening. Like people pay attention to it and listen to it. If you just sort of blend in, no one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right,
10,
that
10 to 10, 15
has
coming in
never
crazy.
expressed to the world that
they
have the
bounce
best
it, they tried to
deal,
reject it
the
every
second
single
best deal in the world. The best deal in the world is Mexico. Remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him. But do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain?
Mr. Secretary, in fairness, you've seen from the airplanes, you've seen about a 30% decline in Canadian visitors to the United States, if not significantly more. You've seen a similar type of decline from China. European travelers
all right, guys,
inbound
first poll
have
today
come
coming
down.
in.
There is a
This
sense
looks bullish.
that people do not want
bearish.
to come to the culture of the U.S., and there is this anger about it. And I just wonder if you think that that's just temporary, or you just sort of dismiss that, or you think it's irrelevant to the actual issues.
I think what that is political marketing. Right? The Canadians have the second best deal in the whole wide world. If they continue
this is just an opinion poll,
right? Which is a political path of a certain thing. I'm going to go fly to China. I'm going to open up my markets to China.
I don't even know if I'm allowed to say that shit before I even do the poll.
And do all sorts of this stuff. Then when USMCA gets renegotiated
this year,
I think it's bearish
this year, sort of like towards the end of the summer, in the middle of the summer. Do you think
everybody voting bearish except one person? One person voted bullish. 5 people voted bearish.
Such great friends.
Tyler says looks bearish, but I bet they're going to push up. So I mean, you're voting bullish then. All right, cool. So 2 people voting bullish, 7 people voting bearish.
You're excited about negotiating this, aren't you?
The Miller said bullish. So 3 people, 4 people now with Mike including.
So I guess we should change the
5 people with Chris
including. Right? You want to be like the rest of the world.
5v9.
You don't want to be this favored neighbor.
5v9 counting one life.
So for granted.
Right,
that you're willing to come to Davos and say there's 2 hegemonic powers in the world, and we're going to decide which one we're going to work with. Really? You're going to either work with the United States of America, where 75%
looks like
of
there's
your
some sort of algo range here at 10,
totally tied to it, or China?
There is.
Why would you say that? It just, I think it's political. You know, I think if we take it correctly, we should look at it as just political noise coming out of a prime minister, and maybe this is working for his election. Right? Because I don't think it can be real, because if you took out the math of Canada's economy and it doing business with the United States of America's
McAfee is coming in bullish, but I mean, they could be chopping here for quite a while doing this shit, building liquidity at the floor before they
No one would vote for changing what they had today. Now, maybe they're marketing it well, but they're
just a lot of fucking bulls and bears here, though.
They're surely not marketing it well for their fundamental economics for long-term. The United States.
The U.S. is doing deals with China, and I'd love you to walk us through what's going on with the H-20s. Is it accurate now that basically for China to get the H-20 chips, Taiwan needs to send them to America for us to put a tariff on them to make money off it and then send to China? And is it your understanding that China might be suspectable now to these chips, suspect because they're entering through the United States?
So it's the H-200, right? So that's the chip we're talking about.
Coming in.
Jensen Huang came to the Oval Office and he argued that this is a better chip than they can actually make at any scale, right? So if we sell them to China, right, and Chinese businesses, then they'll start using them, and they'll develop on the American tech stack, and that will take some money away from the Chinese tech stack. And it's an interesting argument. There are 2 sides. There are strong 2 sides. We shouldn't sell them any, or we should sell them the H-200s.
Where do you sit?
And I stand right in the middle. It was a really, really good discussion. Okay, and the president decided that fine, we'll sell the H-200.
I mean, the question is, do they pop it to here or do they pop it to down there? At this point, it already tested this shit. So
we should get 25% for the American taxpayers, right? Because we're creating something.
But do you think China wants to buy them, knowing that they're going from Taiwan
just
back
switch
to
them to
the
5?
U.S.
They're coming to the
China.
United States because in order to collect 25%, right? The process matter to do it right is you import it, put a tariff on it, and then export it again, okay? And so that's the model. It's the process model to execute a plan that the President of the United States of America made, right? So that's just the execution model of how to do it. It's just process, right? And it's the same H-200 chip. And the question we'll find out is that businesses in China want to buy it. That's for sure. The question is, does China's central government, right, want, when they have that same argument, do I want to give my companies this chip that they're all clamoring for? Or do I want to force them to take the pain of using lesser chips that are domestically made, but helping our domestic companies grow? And that's a question we're going to see how it goes. But I think the president put that question out there, and I think it's a really interesting one. I didn't say there's not 2 sides of that coin, right? Yeah. But the president thought having Chinese developers on the U.S. tech stack, right, given sort of the middle, he falls that way. And it was a really robust discussion. Both sides of the discussion were in the room. It was a deep and thoughtful discussion, and that's where he came out, and that's why he's the president.
So, just a final thought. Just listening to this
engaging conversation for the last 15 minutes or so. Do you realize what's going on? Crossroads, set up box.
I can see Crossroads,
set up box.
You can see him in the Eccles building.
Oh my God.
Can you imagine the magic of that news conference? These news conferences are pretty crazy.
For the news conference.
I don't know. They may be showing bullish a little bit here in SPY. They may be showing a little bit bearish on SPY. All I'm saying is, if big things move up or down, then there probably ain't no stopping that bitch. Real direction. So that's just something to keep in mind. That's what I'm thinking here. That's what Jay Wood said on CNBC or while this shit started opening. So that's, that's some deeper things that I'm thinking about. Jesus Christ. I guess Elon Musk is coming live in 7 minutes. Elon Musk is coming live in 7 minutes here. Elongated Musk coming in with a W on Tesla. SPY is now trying to form some sort of a cup and handle to VWAP, trying to. Time is 10:25. 5 minute on SPX is actually pushing up. This is the first minute of 10:25. There's an algo range at 10:20. I'm just not drawing it. I'm gonna run to the bathroom real quick before elongated Musk comes out. So 1 second. All right, I'm back. What a god candle. what a 5-minute pullback. All right, let's see it, Mr. Musk. Tesla CEO live at Davos. Whoops, Tesla. Check the live stream title. Tesla CEO Elon live at Davos, folks. And 1020 is algo ranging. It's that big ass dip. As soon as I walked away, I checked my phone. to look at the stream, and it just had a huge dip. They're boxing playing. This is crazy. They're showing bullish as much as they can, but there's a divergence at the floor. I don't like this bounce at all. I don't like this bounce, but they're showing a bear trap off 1025 too, like that crazy spike candle going up like that. Man, that's literally terrifying. 1 2-minute exit. 1/3, 2/3 from 1025. 1025 stopped it till 1030, so 1030 is now. Trying to go bullish into 3/3? Like, I don't like that. 1005, 1006, 1007, 1010. They could be bear trapping off that toe for quite a while with data time. This fucking looks bull trappy too, like what the shit. IWM helping SPY. Looking strong on IWM. QQQ looking a little bit weaker than SPY. SPY is now higher in the 1030 cycle than 1025, saying this is the 3/3 on SPY. QQQ is playing within 1025 for now. This is nasty as hell. To expect a pullback here is like almost a hope, right? That's why I'm saying it's fucking nasty. If they pull back, like, oh my fucking god. Now it's like bears are more hoping. Bulls are like, what the fuck? This is a shit show. And, this is a shit show until something happens here. I don't know if it's gonna chop up. I don't know if it's gonna chop. I don't know if it's gonna chop down. But like right now, uncertainty is there because of the divergence at the floor for me. Something's telling me it's about to be crazy. Shit, I'm gonna get copyrighted. Something is cooking. Look at that shit just flipped up in green when I switched fucking charts. Like, looking scary as shit. Nvidia and Tesla trading spots. Something's cooking on Tesla and Nvidia. That's what I think big time. They're tug of war on Nvidia and Tesla and probably other big names I see big time. That's the news of the day for me. That's the news I got from them saying it was bullish, them saying it was bearish on CNBC. That's the main fucking news I got from Jay Woods in the morning. If someone took part of that too, right? The important shit we saw. And they were like, oh, the CNBC title was Major Stocks. The 7 mega caps are at crossroads, right? And 2 of them I have set up on Nvidia and Tesla, and I literally see them in the setup box. That's a fucking bingo for me, right? That means setup box, crossroads. I don't give a fuck what they do here until they leave the crossroads and make a decision at the crossroads. What does a crossroads means? It's a fucking road that's crossed. So, I mean, until they fucking uncross it, that's what the fuck it means. For me, that's what I'm thinking about right now. While they're showing me bearish and while they're showing me bullish and IWM's going up, my puts are fucked into tomorrow. I ain't going front. This shit is fucked unless they dump 3%. Surprise, but like, it's going up. It's 1.2%. Some bullshit. Nvidia is up 0.75%. Tesla is up 0.9. Bullshit.
That was not a large applause.
Elongated Musk, folks. Let's get some cars emojis in chat for our elongated Musk.
That's better. Thank you.
Elongated Musk.
We're gonna make this interesting.
Make it interesting.
How many quotes are you going to want that are going to be after this session?
I don't know. I mean, 5.
Make it interesting.
Okay. So good afternoon, everyone. It's great to see everybody here.
New all-time highs.
It's been an amazing week here in Davos.
10:35.
Hopefully everybody saw that we are having conversations here. Hopefully everybody agrees. There are some conversations that we may disagree.
Thank you, Chris. Thank you, Chaya, for the Teslas in chat. That's a Tesla Roadster right there, red. Appreciate you, appreciate you.
The World Economic Forum is here to have. It's an important component of who we and what we are, and I'm thrilled to have Elon Musk here. He came all the way from California to be here to see all of you, so thank you, Elon.
You're most welcome. I heard about the formation of the Peace Summit, and I was like, is that PIEC? You know, a little piece of Greenland, a little piece of Venezuela.
we got one.
All we want is peace.
Okay, I'm going to, as I said, I'm a pretty proud CEO of BlackRock since we went public. The compounding return of BlackRock to our shareholders was 21%. Since Elon took Tesla public, his compounded return is 43%. This is just another advertisement for everybody, especially for Europeans. This is why more citizens should be investing with growth, investing with their countries. Imagine if a lot of pension funds invested with Elon when Tesla went public, and how much return would all the pension funds that invested side by side with Elon and the growth. So a spectacular return. There's very few companies. Well, I don't think there's any other company as large as Tesla today that has that compounded return. So congratulations.
Oh, thank you.
It's a good measurement.
Well, we have an incredible team at Tesla, and that's the reason.
So I want to get into the dirt, the meaningful component about technology, the possibilities. I want to talk about AI and robotics, energy, space, and the progress ultimately coming down to engineering discipline, scale, execution. And few people, if not anyone, has the experience and the fortitude to confront these issues head on. Not just the ideas, but the execution across so many different technologies, Elon. And that's why I thought it was important for us to have this dialogue here in Davos. So you're presently building on AI, on robotics, on space, on energy, all at the same time. When you look across those efforts, what do they have in common from an engineering standpoint?
Well, they're all very difficult technology challenges, but the overall goal of my companies is to maximize the future of civilization, like basically maximize the probability that civilization has a great future, and to expand consciousness beyond Earth. So if you take SpaceX, for example, that SpaceX is about advancing rocket technology to the point where we can extend life and consciousness beyond Earth, to the moon, to Mars, eventually to other star systems. And I think we should always view consciousness, life as we know it, as precarious and delicate, because to the best of our knowledge, we don't know of life anywhere else. You know, I'm often asked, are there aliens among us? And I'll say that I am one, but...
Or you're from the future.
They don't believe me.
Okay.
But I think if anyone would know if there are aliens among us, it would be me. We have 9,000 satellites up there, and not once have we had to maneuver around an alien spaceship. So I'm like, I don't know. Bottom line is, I think we need to assume that life and consciousness is extremely rare, and it might only be us. And if that's the case, then we need to do everything possible to ensure that the light of consciousness is not extinguished, because we're effectively, the way I view it is.
Oh, I'm so sorry. My mic was muted.
A tiny candle.
Yeah, we had a poll 2 minutes ago. I said there's 140 people here. Let's get the like buttons up. I am so sorry my mic was muted, and I did a poll. In your opinion, right here at VWAP, what is coming? Rocket up or rocket down? This poll is being done because Dancing Diva sent a rocket emoji. My mic was muted. Sorry about that. We had 6 people vote rocket up, and we had 2 people vote rocket down until I voted on the second vote for rocket down, and then the red candle came, and then it became 6 to 5. Now it's 7 people, or now it's 8 v5. 8 people saying rocket up, 5 people saying rocket down. If you want to vote in the YouTube chat. Sorry about that. My mic was off 4 minutes ago when everybody was here.
Solving
MX Station, just say hello in the YouTube chat for a day or two, and you can request to join, bro.
Standard of living.
Oscar said
up. The only way to do this is AI
up,
and robotics.
3 people, so 12 rocket ups.
Which doesn't mean that it is without its issues.
We have
we need to be very careful with AI. We need to be very careful with robotics. We don't want to find ourselves in.
And our poll is being cross-voted on.
Terminator.
I did the poll right here at the green candle, right before this red candle even came in. People were voting on WhatsApp.
But if you have ubiquitous AI that is essentially free or close to it, and ubiquitous robotics, then you will have
IWM, a really, really important watch right now. IWM is leading the bounce, leading the rally.
Beyond all precedent.
Then he says down.
Be broad,
yes,
or is it narrow? And
so 1, 2, 3, 4, 5 people voted up on YouTube. 9 people voted rocket up on YouTube. That's 14 people. Let's put it 15 rocket ups, and we have 8 or 9 rocket downs. Let's leave it as 9. So 14 to 9-ish. 15 to 9-ish, that's a huge number. Right? People that are coming back, I'm sorry you left while my mic was muted for 3 minutes. We did a poll.
Actually, my prediction
is this going to rocket up? We are at VWAP. That's the question. If you think it's going to rocket up, type up. If you think it's going to rocket down, say down. We will count the votes for the next 3 more minutes here.
Meaning you won't be able to even think of something.
Elon said if anyone knew where if anyone knew if aliens existed, it would be him. I somehow believe him. I want to invest in SpaceX. Oh my God, he says the most craziest shit sometimes, but like, bro, that's why everybody listens to Elon. That is why everybody listens to Elon.
Perfect,
He says the wildest shit sometimes. But every single time IWM going up,
it is a necessary.
IWM is an important watch right here, right now.
Like you can't have both. You can't have work that
maybe I'm wrong. Market will go lower with IWM going higher, but I really doubt it for some reason. This thing is just complete IWM control right now. Nothing else is fucking going up. What is going up? Somebody please tell me. Look at the market and tell me what's going up on the market except IWM right now. Nothing, right? So for me, I'm watching IWM.
Billions of human robots,
for me,
I think there will be.
That shit's crazy.
I think everyone on Earth is going to have one and going to want one. Because
is turning.
Who wouldn't want a robot to,
the blue line.
It's very safe.
That was trying to bounce for a minute.
Take care of your pets.
I don't know. No, it's not doing it without
elderly parents. A lot of friends of mine have said they have elderly parents. It's very difficult to take care of them.
Expensive.
Yeah, it's expensive, and there just aren't enough people to take care of there aren't enough young people to take care of the old people.
Right.
So if you had a robot that could take care of and protect an elderly parent, I think that would be great. That would be an amazing thing to have. And I think we will have those things. So, overall, I'm very optimistic about the future. I think we're headed for a future of amazing abundance, which is very cool. And definitely, we are in the most interesting time in history. I think there's a more interesting time in history.
So. Can we Can you and I reverse aging in this new history, or are we going to see it?
You know, I haven't put much time into the aging stuff. I do think it is a very solvable problem. Like you can. I think when we figure out what causes aging, I think we'll find it's incredibly obvious. It's not a subtle thing. The reason I say it's not a subtle thing is because all the cells in your body, you know, with some pretty much age at the same rate. Right. I've never seen someone with an old left arm and a young right arm ever in my life. So why is that? That means that there must be a clock, a synchronizing clock, right, that is synchronizing across 35 trillion cells in your body. You know, there is some
candles are going up with the volume being tiny. Like blue line on the RSI is bouncing,
we don't actually have a longer
above the
lifespan.
orange for now.
Because if people do live forever for a very long time, I think there's some risk of an ossification of society, of things just getting kind of locked in place, you know,
now NVIDIA
may become,
now NVIDIA and Tesla's trying to look like the market.
Just not,
oh my lord!
Lack vibrancy. But that said, do I think
MX Station, you can request to join, bro.
Ways to
Thank you for taking the initiative to say, hey, I want to be in the WhatsApp group, and I want to be active.
Aging, I think that's highly likely.
Do.
I'm looking forward to that.
Yeah.
So in the future that you talk about, the AI models, autonomous machines, rockets, depends on massive increases in
spike
compute,
down candle
massive
coming
increases
in 2/3
in
and extending
energy,
the fuck out of this shit.
expensive
with the
energy,
divergence at the floor.
Manufacturing scale. What are the bottlenecks to get there?
I think that's why the bounce looks scary right now because of the divergence at the floor. But IWM is leading this shit like nothing. So
not narrow.
It is going up, however, temporarily because of this shit.
I just think the natural thing is it's going to be very broad because AI companies will seek as many customers as they possibly can.
Oh, if it says you can't because I was removed, then you were probably not active.
Every year. I mean, you almost, the cost
but
of AI
it's
is
okay. Just stay active and then you can join.
Meaningfully changing on a month-to-month basis.
There's open models now everywhere. Yeah.
Yes, there's open
the
models.
WhatsApp group is not for everybody either, guys.
Open models only lag. There may be.
There's people leaving every day too, every other day, man. Sort of trust Ron G left by himself. Like it's not me kicking people out. It's just people are just they don't want to fucking deal with the fucking market being bullshit anymore. Tired of it. Can't handle it.
Which means
like I said from day one, this shit is hard as shit.
But the cost of getting to there, the compute, the chips,
test of everything basically.
The fab, the powering. That to me.
Vinny B, it seems like you're here every day. You should be in the group. Just send me a message.
AI deployment is fundamentally electrical power.
It's just right. It's energy.
Yeah. I mean, we're seeing the rate of AI chip production increase exponentially, but the rate of electricity being brought online is
crazy.
3%, 4% a year.
Yeah.
Max.
Yeah. It's clear that we're very soon, maybe even later this year, we'll be producing more chips.
Burning everything here too, though, by bouncing with this shit.
Except for China. China's growth in electricity is tremendous.
They're building 100 gigawatts of nuclear as we speak.
It's going down, burning coals, but it's burning all the bears from yesterday and below too.
I believe China's production capacity on solar is 1,500 gigawatts a year, and they're deploying over 1,000 gigawatts a year of solar. Now, for continuous solar load, you divide that by roughly, 4 or 5. Call it that's around 250.
Yeah, David, you could request to join. But trust me when I say this, the group is truly for people of all ages that are trying to open their mind to seek truth and the reality in themselves,
usage on average is
no matter
500
what.
Gigawatts.
Because that's what it takes, no matter what.
Just
a lot of people
in solar like that
seem to believe that the market isn't for them or them because of age or whatever. They're like, oh, I don't know, like
US electricity
it's nothing with age. It's just mentality. So
the biggest source of
man, this shit is cooking though.
Of energy.
What the fuck?
And actually,
IWM is not.
Even
NVIDIA is cooking me.
Certainly beyond Earth, the sun rounds up to 100% of all energy. This is an important thing to consider. So the sun is 99.8% of the mass of the solar system. Jupiter is about 0.1%, and everything else is miscellaneous. Now, even if you were to
I would not have imagined this type of bullish run into with this shit, but I mean, they're really doing it. I can't like.
The amount of energy produced by the sun would still.
I guess you could say it was there with IWM. It started with 1020.
If you teleported,
1020 was right here. So 1020 to 1045 was IWM taking control, but like this is just so crazy.
And everything else in the solar system, the sun's energy would still round up to 100%.
Yeah, whatever it is, bro. Should I say, or whatever it is, people are like, oh, you say some young ass shit, and you seem young. Like, I really don't care, dude. What I am really doing is just keeping my environment safe, keeping myself safe, keeping my mentality real, and just seeking the reality and the brutal reality all times. Without trying to be biased with no fucking, actual research or real deductions. Not just off one factor, so.
There's so much room in space, and you can scale to
some people love that. Some people dig that shit. Some people really don't understand that because it takes months to understand that. It takes weeks and days to understand that. I'm not really fucking kidding when I really mean that. But like people, go through it for weeks and days and they really do get it. Or some people try for days, some people try for hours and they don't care. They don't get it. They move on. Which is fine, but I mean, at some point in your life, you're gonna be like, bro, I want the truth. The truth is. You gotta find the truth.
I mean, I guess a rough way to think about it is 100 miles by 100 miles,
be like, oh, here's
160 kilometers
literally
by
just
160 kilometers of solar is enough to power the entire United States.
Up to you to see it, up to you to remember it, up to you to struggle through it, up to you to enjoy it.
100 mile area is, I mean, you could take basically a small corner of Utah, Nevada, New Mexico. Obviously, you wouldn't want it all in one place, but it is a very small percentage of the area of the U.S.
I'm shorting a little bit.
Generate all of the electricity that the U.S. uses, and the same is true actually. I mean, for Europe, you could take a small. You could take relatively unpopulated areas of, say, Spain and Sicily, and generate all of the electricity power that Europe needs.
So why don't you think that there's a movement towards that here?
There's a 1 minute gap on SPX here.
Well, there is.
As it is in China.
Well, sorry, there is on SPY, not SPX.
The tariff barriers for solar are extremely high, and that makes the economics of deploying solar so artificially high because China makes almost all the solar, and
what would it take for Europe or the U.S. to build it commercially, if it's that scale?
Yeah, I think. Well, I can tell you what we're going to do. SpaceX and Tesla is we're building up large-scale solar.
Right.
So the SpaceX and Tesla teams both separately are working to build to 100 gigawatts a year of solar power in the U.S. of manufactured solar power.
They want to go lower with the gap. They might come back to it.
I don't know, about 3 years
later.
Or something. But these are pretty big numbers, and I'd encourage others to do the same. We obviously don't control the U.S. Tariff policy, but for other countries, I would recommend that China makes solar cells that are incredibly low cost, and I think it would be worth doing large scale solar.
Gap filled.
I know you're going to be having a couple of big announcements on robotics.
SPY gap filled.
Do. I mean, when I went to the factory, you showed me those robots.
Yeah.
How quickly, you talked about the billions of robots, but how quickly can they be deployed in a manufacturing setting?
Market
how
is
quickly
cycling
can they be utilized and be functional and create that abundance that you talked about?
Well, humanoid robotics will advance very quickly. I think we do have some of the Tesla Optimus robots doing simple tasks in the factory. We expect probably later this year. By the end of this year, I think they'll be doing more complex tasks, but still deployed in an industrial environment. And probably sometime next year, I'd say that by the end of next year, I think we'd be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety, and the range of functionality is also very high.
Cheyenne, whoever you are, type in YouTube chat before you want added back.
You're
into
already
the
seeing
group
that in Tesla cars. The software changes that you're doing, and what is it? Every quarter now, a software change that upgrades the ability of the robot within the car.
We have a lot of people talking in the
Tesla full
WhatsApp group,
software,
but not on YouTube.
We update it sometimes once a week. Recently, some of the insurance companies have said
you can come back in a day or two. Just let us know who you are on YouTube, please.
Tesla full self-driving is so safe that they're offering customers half-price insurance if they use Tesla
1055 is deciding, cycling.
And that can be monitored by the insurance
This is
company.
not too strong bearish, but market is cycling at VWAP.
I think self-driving cars is essentially a solved problem at this point.
Right.
And Tesla's rolled out a sort of robotaxi service in a few cities, and will
it ain't that hard to just be like, hey, it's
by the end of this year within the U.S.
Takes 1 second.
And then we hope to get supervised full self-driving approval in Europe, hopefully next month.
Really, that quickly?
Yeah, and then
this is
maybe
terrifying.
Similar timing for China, hopefully.
I want to move to space because historically space is very capital
building,
intensive. It's
confirming
historically been done by governments.
Breaking low.
Probably SpaceX changed the whole model.
Bears are in the 3/3 now.
But we've seen it slow to
2/3,
scale,
3/3 going,
and now
trying.
we're starting to see it ramping up in what you're doing and other things. Talk to us about the automation and AI, how it's changing the economics in building
I'll go ranging
and
while I was
preparing
doing
for us
everything.
in operating in space.
Sure. Well, the key breakthrough the major breakthrough that SpaceX is hoping to achieve this year is full reusability. So no one has ever achieved full reusability of a rocket.
Right, in
which
these
is
critical moments, right?
The cost of access to space.
To say it's a
We've
trap.
achieved
I don't know
partial
which way.
reusability
In
with
WhatsApp
Falcon
group,
9
you
by
can't be
landing the
doing
boost
that.
stage.
You can do
We've-
that on
we've
YouTube.
now
I've
landed
said
the
this
boost stage
10,000
over 500
times, right? These new people do not understand because they've never been here.
We have to
You need to know
throw
rules.
away the upper stage. The upper
Rules
stage
aren't written,
sort of burns up
but
on
I mean,
the
if you were
full
here
Falcon
watching
9.
the live
So-
stream for a couple of
and
days, you would
the
know
cost of
because
that
they're
is
spoken every day.
equivalent to a small to medium-sized jet. So
Am I bugging? No.
but with Starship,
Real people that's
which
been
is a
watching
giant
understand what I'm
rocket,
saying
it's the
because I've been
largest
saying this
flying
shit every
machine
day.
ever
It's
made.
not even like
That's
I'm
a rocket
bugging out
that
and saying this shit
using
one day
for
out
the
of
idea
none.
of going to Mars, right?
Yeah,
Every
Mars
day.
and the Moon, as well as for high-volume satellite stuff. So Starship, hopefully this year we should prove full reusability for Starship, which will be a profound
Fuck, I want to drop so bad.
invention, because
On the video, on Tesla, on everything.
the cost of access to space will drop by a factor of 100 when you achieve full reusability. Right.
I want it today because the fucking IWM that I'm in tomorrow is just fucking bad.
Between, say, a reusable aircraft and a non-reusable aircraft. Like if you have to throw your aircraft away after every flight, that would be a very expensive flight. But if you only have to refuel, then it's the cost of the fuel. And so that's really the fundamental breakthrough that gets the cost of access to space, we think, below the cost of freight on aircraft. So, you know, under $100 a pound type of thing easily. Wow. So it makes putting large satellites into space very low, very cheap. And then when you have solar in space, you get 5 times more effectiveness, maybe even more than that, than solar on the ground, because it's always sunny.
It's cold.
It's always sunny, so you don't have a day-night cycle or seasonality or weather, and you get about 30% more power in space.
We have a 15-digit number trying to join. I don't think we can accept that. Sorry.
The net effect is solar is 5 times more.
The international number is 6.
Any given solar panel will do 5 times more energy in space than on the ground.
Is there any capacity in doing that and taking that power and bringing it back to Earth? Is there any way of doing that, or you're just taking that power and utilizing it for the needs, like building AI data centers in space?
I think the case, it's a no-brainer for building solar-powered AI data centers in space, because as you mentioned, it's also very cold in space. If you're in the shadow, then it's very cold in space, just 3 degrees Kelvin. So you have solar panels facing the sun, and then a radiator that's pointed away from the sun, so it has no sun incidence, and then it's just cooling. It's a very efficient cooling system. So net effect is that the lowest cost place to put AI will be space, and that'll be true
a heart attack
within 2 years, maybe 3 at the latest.
Wow. So looking 10 or 20 years out,
every single candle could bounce off crazy, like it's giving me a heart attack.
With AI or space technology, where do you see it?
This could be 2/3 building 3/3,
more
but
certain what's going to happen in the next 3 years or 5
just
or
looks
10?
so crazy. Well, they chop down, chop
I don't know
up.
what's going to happen in 10 years, but the rate at which AI is progressing, I think
one nice fat fucking candle to the lows of 1025. That's
AI
all I
that is
want, to be
smarter than
honest.
any
I may be
human
getting
by the end of
greedy as
this year.
fuck right now.
And I would say no later than next year.
Wow.
And then probably by 2030 or 2031, call it 5 years from now.
Yeah, my heart is beating crazy.
AI will be
Fuck!
than,
Come on, bro! This shit, I don't know. I have time on the video, but it cooked me on the video.
I want to humanize you for a second.
Holy fuck.
So there's no speculation that you're
peace.
Right. I want to. I mean, I would frame this question by: you are the most successful entrepreneur, industrialist in the 21st century.
What
maybe
a
beyond.
fucking candle! Oh my!
So I want to really get this.
Look at the MACD
what
bouncing.
inspired you? Who inspired you?
Fucking balance.
What was the foundation of your curiosity? And importantly, what was was there a aha moment?
In one fucking candle, like, come on.
Well, I mean, as a kid, I read a lot of science fiction, sci-fi fantasy books.
Yeah, we talked about that.
And comic books, and I always liked technology. I didn't expect to be where I am today. This seems incredibly implausible. But yeah, I was inspired by reading about books about the future, about science fiction, and I guess I want to make science fiction not fiction forever. At some point, turn science fiction to
this
science
VWAP
fact.
site is not good, but like, come on, bro. IWM has so much room. Nvidia has so much room. QQQ and SPY looks fucking bullish. Tesla wants to fucking what?
Like, where we actually have giant spaceships traveling through space, going to other planets. Traveling to other star systems.
I'm just interested if I could be beamed up to go back to New York. I'd like to just be beamed back to New York instead of flying.
Yeah.
Talk about Star Trek.
No, I guess my essential, what I would call the philosophy of curiosity. I'd like to understand.
Speak the truth, Elon.
The meaning of life.
The meaning of life. What's the meaning of life?
Is a standard model of
Say it,
physics
Elon.
correct regarding the beginning of life, beginning of existence, and the end of the universe? What questions do we not know to ask that we should ask?
That's fucking deep. Deductions.
And AI will help us with these things.
AI. I want my own AI deduction
I'm just
robot.
trying to how do we get here? What's going on?
Give me an AI Tesla robot. SpaceX robot. Give me a flying, door dashing, food cooking.
We may encounter.
Give me a robot, Elon.
Find many long dead alien civilizations.
But bring the video down before you do it real quick.
I just want to know what's going on.
176 this bitch.
The universe
next week. This week before Elon.
That's my philosophy.
Do you see yourself ever going to Mars in your lifetime?
Yeah, I mean, I would say like,
That's a long commitment.
I've been asked.
Isn't that 3 years each way?
It's 6 months.
6 months, that's all it is?
Yeah, 6 months, but the planets only align every 2 years.
Okay.
So, yeah, I've been asked it a few times.
It's like we're in space right now.
Do I want to, die on Mars? And I'm like, yes, but just not on impact.
That's a good answer. Anyway, we're out of time.
We're getting Mars questions.
Hopefully everybody enjoyed this. I mean, there's so many myths around Elon Musk.
We're getting fucking Mars questions. Come on.
And I constantly learned so much from him. And I'm totally
it did nothing to Tesla.
By what he has done.
What?
I've been inspired who he is. And I'm totally inspired by his vision of the future. And I don't think it's such a bad future. And I agree with his optimism. So, Elon, thank you. Any last words?
Well, I think my last words would be, I would encourage everyone to be optimistic and excited about the future.
Good.
And generally, I think for quality of life, it is actually better to err on the side of being an optimist and wrong rather than a pessimist and right.
On that note.
Wow. Optimist and wrong and a pessimist and right? Who remembers that video that we sent in the WhatsApp group, right? Who remembers? All right, the optimist versus pessimistic. Oh my, by Tom Hogarth. Who remembers? That's not a coincidence. That's not a coincidence. I refuse to believe it. I refuse to believe that's a coincidence. You just said be an optimistic, blah blah blah, and pessimistic. Man, Spike, you could keep going bullish. Trying with IWM. IWM is bugged out. Damn. Huh. Which one should we watch? The one on JP Morgan CEO Jamie Dimon? Oh, we gotta watch this. Opening bell.
Okay. Let's get the opening bell here in the CNBC Real-Time Exchange. The big board, it's crypto infrastructure company BitGo celebrating its IPO. CEO Mike Belsey will be on the exchange later on today. At the NASDAQ, it's Medical Pharma celebrating IPO.
Opened 80% green. Pulled back and went higher. For now. Green, dude.
On the broader markets, let's bring in Mohamed El-Erian today, Allianz's chief economic advisor. Mohamed, what a week. It's good to have you.
Thank you, Carl.
So we came into the week with the president threatening tariffs on the EU, who thought they already had a deal set, and now backing off. Is policy risk heightened from here on out?
I think it is, but there's two very opposing views right now, and we got to wait and see. One is the market that believes that you can simply reset every time, and therefore the right response is buy the dip. And we see this again, as you've noted, we've almost erased all the losses for the week. The opposing view was highlighted by Prime Minister Carney of Canada, which is, this is not a reset moment. This is a very bumpy journey to a completely new world. And the market right now has put that aside for good reasons. U.S. growth remains strong. U.S. companies are really impressive. But
like
that
to be
debate
part of
is
the new
going to
world.
continue all year, Carl.
Shit.
Right.
Count me in.
Do you think the Carney speech, it's hard to
count
imagine
me
you
in,
writing
master
that and
deductor.
delivering
Count
that
me in.
speech
I know my role.
only to reverse it later on.
I know.
What do you think that speech meant?
I think it meant that Canada now wants to diversify away from the U.S. It explains why they signed a strategic agreement with China last week. And, you know, these two things are really surprising for an economy that is so closely connected to the U.S. You know, the other debate, which was an important one, and Sarah spoke to it, was the one Danish pension fund coming out and saying, we're going to sell all our treasuries. Some dismissed it as a small pension fund in a small country.
All right, bulls are
Others
in
said,
trouble.
you know what, this is a warning sign that we have to take seriously. So
If
we
they
are
break
in
the
this
low of
period
11.
of volatility, dispersion, and fragmentation. And as long as U.S. growth remains strong, and as long as U.S. companies continue to climb this impressive productivity curve, then we have an engine. But that engine is getting weaker. We should not simply rely on what worked last year.
Yeah, well, I mean, Mohammed, when you think about the long-term consequences then
I feel like
of our current policies, you know, I'm curious what the world looks like from your perspective a number of years from now.
I'm worried it's not going to drop today.
And whether that will end up being
like,
good or bad.
I'm worried.
So my worry is that people will be less overweight the U.S. in a few years. They are massively overweight.
I feel like they're going to drop it, but like I just don't know when. Like I don't know if it's going to be. Like this shit is fucking telling me like soon, but like.
It makes sense to be overweight the dollar. It makes sense to be overweight treasuries.
I don't know.
And it certainly makes sense to be overweight U.S. companies.
It just looks so bullish when it's.
You're going to have this decoupling of sovereign from corporate, that people will feel comfortable on the corporate side, less comfortable on the sovereign side, and that takes
tiny ass cycles
away at some of the massive structural advantages that the U.S. has. This is something that the government, that the administration has to take seriously, Carl.
Market open was so bullish.
Yours is part of the whole AI trade. And what we've been trying to figure out now is where are we? What stage are we in this AI revolution? You've always been very optimistic. Where do you think we are right now?
I think we're on the way to the stadium. Hasn't even started.
The game hasn't even started.
It's obviously.
When does the game start?
I think it's getting ready to start. No, but seriously, there is, I would say, extraordinary demand, and you have to understand that we're shifting from calculating and computing, which is what we sort of did for 60 years, to thinking and helping people think. And that is just a total change. And the productivity and efficiency opportunities are very obvious, and we're starting to see those in not all the companies, but a small number of companies. The real opportunity is how you reimagine these companies. And we see this in the cohort of new companies that are born in 2025 are growing much faster than 24, and those grew much faster than the 23 companies. And so I think this is certainly the demand signal that we see from AI and the unlocking of the power of the data and the improvement of these models, which are extraordinary, but they're the worst they'll ever be. They're going to be way better in a year or two. The demand is in excess of the supply by quite a lot.
One thing that Wall Street is asking about now is how profitable for your business and for other businesses that are spending a lot of money on it.
Right. Well, I think there's a clear ROI that we and the customers that understand how to use this are generating. Certainly, our earnings per share have been consistently growing double digits, and we expect that to fully continue over the next 5 years. So, we have a great outlook for our business, and it is both because of AI and how it's helping us be a more competitive company, and because we're making the picks and shovels and selling them to all the great companies out there and the firms that are building these big models and doing all the inference. And I think it really is, we're way more at the beginning of this.
What's going on with pricing? Because a big story has been, for instance, the surge in memory pricing. As you talk about demand outstripping supply in a lot of the parts of the building of this?
Well, this is a challenge because if you think about the way AI works, and let's go back to some of the early days of ChatGPT, right? This was a little over 3 years ago. Well, it takes 4 years to build a semiconductor plant. So 4 years ago, nobody knew about ChatGPT. Nobody was talking about reasoning models or agents and multi-agent systems and all these wonderful things. And so you would have had to have known all that to have put the capacity in. So we have a severe shortage in memory silicon and also in some of the advanced semiconductor nodes. And that's created a challenge, for sure.
This tiny ass move is squeezing the fuck out of me. Nvidia getting squeezed. Back at 9:30 open almost. IWM at the highs. Please pull back IWM.
In many ways, it's fulfilling.
Man, please pull back IWM.
Of course, we're modeling through 2026 and into 2027. We think, the momentum that's built over the course of 2025, even what we're seeing in Q4 results right now, is setting the stage for more of an acceleration in 2026. And so if we can just get a little bit of peace and calm on the purple haze policy front, maybe given today's talk about the weather, it's a blizzard of policy uncertainty, the market can refocus on the underlying fundamentals. And we think the underlying fundamentals are really strong and set the stage for another strong year.
So, Amanda, let's go to the fundamentals here. Earnings, we're just kind of getting into the thick of earnings season here. We had really strong earnings in 2025. What's your outlook for this quarter and this year?
Well, the consensus expectation for earnings growth kept moving higher over the course of the fourth quarter. And so we started out earnings season with an just base expectation of a little bit more than 8%. And again, you said it's early. I'll agree with that. We have a lot more reports to come in, but I think there is potentially some upside to that expectation, even though there's been a lot of positive revisions and momentum behind it. So we're looking at another, maybe 14, 15% earnings growth for all of 2026. There's a long way to go to get from here to there, but certainly at current valuation levels, that's not going to be the driver of the market. We really think the underlying fundamentals will be. So if you're only going to look at one thing this year and try and dial out the blizzard of policy uncertainty or purple haze, focus on the path of earnings growth. I think that's what matters the most.
Is that kind of what's going to drive performance this year? I mean, as opposed to multiple expansion, it feels like pretty richly valued here across the market, broadly defined.
Yeah, absolutely. It's a great point. We've been talking to our investors a lot about, are we in a bubble? Is it frothy? What other adjective you want to use? I think it's just fascinating that at this time last year, we were basically at the same forward PE on the S&P 500. And then we finished out the year basically in the same place. So no multiple expansion last year, but 18+% returns on the S&P 500, not too shabby. So I think that's the story again for this year. A little bit of deja vu. It's not a story of valuation multiple expansion. It's really just the path for earnings.
Amanda, in Davos, they say vous jadez, just so
you're aware of that as well.
Noted.
Just stay with us.
I need like a 2-minute break while the video's playing while I eat. I'm hungry as fuck. My stomach is rumbling. I can't fucking think. Market's making me fucking scared. You know what I'm saying?
Right now,
I need to eat. My heartbeat fucking beating. Like,
there's some little nuances in currency. Thank you, Jane Foley. We've got Count Freeman coming up as well.
Woo!
You say, well, I don't want to follow it. Well, guess what? You got to. It's a litmus paper of the system. Amanda, where you are, do you need a weak dollar to make international stocks have year two?
Why? I'm in for 2 SPX
that's another great
here.
question. I mean, I hope not, right? I mean, that was such a story last year of how weak the U.S. dollar was. I think it was a lot more than certainly what we and other market participants expected. But there were some signs of life in terms of the fundamentals for international, you know, so there was a thesis there. It's not just a currency trade. I think it's going to be hard to put up, you know, accelerating momentum and fundamentals this year.
My head's spinning. Does President Trump, Ms. Agati, does President Trump want a weak dollar or a strong dollar?
I wish you could enjoy this cookie.
Remember about James Baker? We want a strong dollar policy. We're going to have a strong dollar.
This cookie was originated. It says originated from France, but it's a Korean cookie called Sabri.
I think how about a stable dollar, right? I'll take sort of the middle of the road there. I don't think it does us or any of our trading partners or the market any favors to have pretty big swings in either direction. So our view is that, you know, that decline on a relative basis in the US dollar should stabilize this year. It's not going to be a huge rally. You know, most of the decline has already happened. So I think that takes a lot of the currency challenges out of navigating, you know, multi-asset portfolios and positioning this year. But I think stability should be the name of the game here.
It's over anyway. Stability should be the name of the game. Like he said. Got JP Morgan commenting, CEO commenting on Trump immigration.
Davos,
I'm not listening
to that.
First time
is Charlie Sharp. He's the CEO of Wells Fargo. Morning.
Morning.
How you doing?
I'm doing great.
You want to react to that? I'm just curious what you think about interest rates and the Fed and maybe who you might even want to be the next Fed chair. How much do you care?
Care a lot, but thrilled with the choices that are on the table. I think they'd all make great choices, and we've got a process to get from here to there, and I think we're in a really good place.
What do you think about interest rates right now and his growth trajectory?
Yeah, listen, I think, first of all, the growth trajectory is everything that we see.
This is the most craziest shit on IWM.
Really, really good.
Crazier than 2 weeks ago.
It's more likely than not that growth will be stronger
Crazier
than people
than a
expect.
month ago.
And for us, you know, as a U.S. company, where so much of our business in the U.S., we feel
so
great about it.
IWM just fucking,
you know, rates we can debate. You know, they likely will go lower, and that's probably a good thing for a period of time. How low they go, I think, is dependent on all the other data
highs,
that we see, and I think that would be a pretty good place to be. And I think and the markets would certainly feel good about it.
Okay. The other big issue, and I know you've been probably asked and have had to answer the question a million times this week: credit cards. You're in the credit card business.
I like the credit card business.
You like the credit card business.
It's the most disgusting thing ever when IWM does this
a little bit less if you had to cap.
Calling it market rotation test at its finest.
If you had to cap interest rates at 10% across the board.
Yeah. So first of all, remember. The president has not suggested that rates
I don't
cap
like
forever
this at
across
all.
the board. So just as we think about the business, it is a great business. It's a really important business. It'll continue to be that way. We offer products that are well below 10% for an extended period of time. So I understand that. I think, you know, we just got to be very focused on what we're trying to solve. And what we don't want to do is put in artificial price controls that could be harmful at a period of time where it matters most to Americans that need credit.
So Jamie Dimon, you know, said quite publicly that he thinks this is dangerous. And the question is, how dangerous is it? What do you think the true ramifications of something like this, even if it was just for 1 year,
bullish
would
now.
really be?
I'm not sure what this is. I think we'll see. You know, one of the things I've learned a lot from just watching the administration is they've got lots of ideas. They're very, very focused on the outcomes, and he's very focused on affordability.
And the thing about this administration that I think is wonderful is they engage and they want to get to the right answer. They want to do the work. They want to do the study. So, 10% everyone overall, I think would be a real problem. But let's figure out.
But do you think it would have a meaningful reduction? I mean, there are a lot of people out there
reduction in credit
that need that credit. We were talking about, by the way, I think they were a partner of yours, Built. Put out a press
Time is 11:25 here in 5:25 seconds.
That might be a different demographic.
Right. Who are they loaning
to? First of all, I didn't see the press release. My guess is it was capped at 10% for a year, which is what the president asked for, which is what they would do anyway because of interim promotions. So my guess is that's pretty good marketing.
Pretty good marketing. One of the other big questions is housing. And the president has talked about two things. One that he was very explicit about is effectively going after some of the big home buyers. I think he's really referring to things like Blackstone and some of the other publicly traded companies out there to tell them, we can't have you buying these homes because it's actually jacking up the price of homes. And then there's been a lot of scuttlebutt here. It has not come out yet about potentially allowing Americans to use their 401ks to buy, to put down a down payment, for example, on a home. What do you think of that as a mortgage originator?
Well, I don't really know enough about the issue of corporations versus individuals. I do think one of the things that has come out.
Put down their 401ks to fucking buy a home.
Whether it's between institutions, between individuals and institutions in terms of what it means from a tax perspective or whatnot, and when one person is advantaged, that's not a good place to be. So we shouldn't have a policy where it is more affordable for an institution to buy something than an individual. Right. It doesn't make sense and it doesn't get to the right goal that we want, but I don't understand the full extent of that.
Hey, Charlie, just want to congratulate you on where Wells Fargo is and the turnaround that's taken place on your watch. I mean, it's something that the markets have obviously sat up and taken notice of. What are your plans from this point, though?
Yeah, I think, well, first of all, thank you.
Yeah.
And as I think I've said, when I came on here, it really is tens and tens of thousands of people that have done the work, and so I'm appreciative to all of them. We're able to compete on a level playing field now for the first time since 2018.
Yeah.
And so when you look at our results, I actually feel great, not just about the fact that we put these issues behind us, but that almost all of our businesses are growing today, and we were able to do that while not being able to grow loans, grow deposits, grow inventory, and things like that. And so now we're able to do all that on behalf of our customers.
Shackles have come out.
Exactly. And by the way, the market didn't give us any degree of reprieve because we had that. They had the same high expectations for us. And so our balance sheet's up 11% since the asset cap was lifted. We're going out to companies who we had to ask to take deposits away to say, please bring them back. We're increasing our inventories and financing. We're growing loans
There's
again.
two things that could happen.
And so, we're still very, very
breaks
conscious
down,
of being, what Wells Fargo is, thinking about our
or
own risk tolerance is the same way.
It just traps so fucking fast somewhere here because there's so many bears excited once it does.
One of the most thrilling things is to see people inside the company feeling great and being in the marketplace and feeling like they can compete again.
Yeah.
When you think about sort of the next, actually, you know what? I want to go back to the housing for just 1 second because we didn't get to the second part of it. For the 401k piece, do you have a thought on that?
I think it's super interesting.
Like, this shit is just no words coming out of my mouth now.
Under the right circumstances, depends on the amount. I would think about level of concentration within 401k and things like that. But it should be a long-term investment locked up in a long-term plan. The devil's in the details, but I think it's really interesting.
I was going to mention your investment bank has actually had quite a lot of success.
That doji candle made me shut right up.
In that context,
I go like 1025 candle coming in like that bullish at the end made me shut up real quick.
What does that look like?
It's like, no, he's talking about bringing this shit
listen,
down.
The investment bank is one of the great opportunities that we have. It's one of the great businesses that we currently have, and Doug's done a great job. Fernando Rivas runs the business. Tim O'Hara has done a great job in terms of bringing talent on. Listen, we've always been in the business, but we've always wanted to be below the radar screen. It's a natural progression from using your own balance sheet to finance companies, to give them access to public markets, give them access to broader degrees of private credit, provide financing advice. And so, what we've made the decision is that we don't want to keep it under the radar screen. We want to grow the business. We want to continue to serve companies of all sizes. We have competitive advantages. We have treasury services relationships. We lend a huge amount of money to these companies. I think they like doing business with us and have liked doing business with us for long term, and they want more options. And there aren't a lot of companies out there that can do the types of things that we did recently for Netflix with the size bridge loan that we made, or what we did for Quikrete in the non-investment grade market. So this is a journey. I always say the world is littered with companies that have tried to do this and failed. They've failed because they've hired the wrong people. They've done the business that no one else wants to do. They've compromised. They've taken too much risk. And so we're trying to be very, very thoughtful about growing this at the right pace. And we hope it becomes a bigger part of the company, and quite confident that it will be profitably with high returns.
It's literally $1 up, $2 up from what I fucking need.
Welcome.
Oh, sorry.
Week. I am joined right now by the president of the New York Stock Exchange, Lynn Martin. Lynn, it's great to have you. Thank you so much for being here.
Thanks so much for having me on, Maria. It's always a treat to be on with you.
Thank you. And I want to start with what you've announced at the New York Stock Exchange, developing tokenized securities platform. What will that look like?
Absolutely. So it continues our tradition that we've had for 233 years, which is to revolutionize markets and do so in a responsible way. So what we announced this Monday was that we've developed the infrastructure which allows for the tokenization of equity markets. And it brings in all of the positive aspects of a tokenized environment. 24/7 trading, digital settlement, immediate settlement, and writing to a blockchain, as well as what's needed in the equities markets, including fractional shares, trading in notionals, the demand that we've heard from customers.
This is a big deal.
It is.
Yeah,
it is.
This is a big deal to go to a tokenized platform. Do you think every market will eventually be tokenized?
I think aspects of the technology are going to seep into every market. So if I take a step back and think about one of the truly positive implementations of this technology, it's that instantaneous settlement. What instantaneous settlement does is it frees up capital. It frees up capital, which allows markets to become more liquid.
Did you
more
know
liquid
Trump
a market
always chickens
becomes,
out means taco
tighter
trade?
bid offer
Yes
spread
or no?
gets. A great data point where we've seen this in practice is when the U.S. equity markets went from settling T+2 to T+1 just last year. We've seen 40% increase in volumes on the New York Stock Exchange, 2025 to 2024. Now, some of that's due to volatility, but a lot of that is also the freeing up of capital that the shorter settlement cycle really brings into the market.
That's a great point. Now, do tokenized shareholders participate in dividends and in, in buybacks and in everything else that an ordinary or regular shareholder would?
No, someone voted no.
So
okay, cool.
importantly,
3 people
we are
voted
going
yes.
to allow for the ability for
4
someone
people voted
to
yes.
take
2 people voted
tokenized
no.
shares from DTC,
David
the
said yes.
clearinghouse,
I always
and
knew
move them to our platform, as well as the issuing of native tokens on the platform.
6 people voted yes,
Let me switch
including
gears,
David
ask you a little about what you're
Olayo
expecting
from
for
YouTube.
2026 in terms of the IPO
2 people
backlog,
voted
in terms
no.
of what you're looking
7
at
people
in terms
voted
of new
yes.
listings and from where. What are you expecting?
We're
Trump
seeing
always chickens
demand
out.
from all
Taco
sectors.
trade.
I
thought they were talking about
a
fucking
super cycle year in
being
terms of the amount
color
of deals
related
that
to the
come
color
to market.
orange.
Now, I'm not just
Like
talking
cheese.
about the mega IPOs that may
Techno
or
Dan
may
said
not
I had no
come
idea.
to
Good.
market, but there's a tremendous
9
amount of
people said I
demand
knew.
of
4
backlog
people said
companies,
no, I
companies
did
that have
not
been
know.
sitting
Right,
on
cool. I
sponsors'
thought it was
books,
going to be like 10
as
people
well as
saying yes, I knew,
companies
and
that
like,
have
me
just
saying
wanted
no, I
to
didn't
go
know.
for some time and put plans on hold because of volatility.
So are these private equity
I
companies,
honestly thought it was
or
something
are
to
these
do with, like,
original
taco
companies
color
that want to go public on their own?
cheese
Bit of
color.
both.
Bit of both.
Bit of both.
Yeah,
And
because
we're seeing-
private equity has been really busy in terms of investing.
So dumb.
Absolutely. And they're looking
That's
at
so
the
dumb.
opportunity to get liquidity from those companies that are a bit more aged on their books.
Well, there's a lot of
I don't
competition
know,
for the
something
New
with
York
his
Stock
hair,
Exchange
maybe
right
being
now.
wild
I
like
mean, you
Taco.
see what's going on in New York with the new
I thought that
mayor.
was a
You've got
joke.
J.P. Morgan with more employees in Texas right now than
Nvidia
in New
rising.
York. There's a Texas Stock Exchange. How will
Rising,
you compete?
Tesla rising.
NYSE
IWM
Texas,
is
which we announced
cycling lower.
February of last year, brought it live March 31st of last year, and now have more than 100 dual listings on NYSE Texas in less than a year.
That's very interesting that you did NYSE Texas. How's it going? I mean,
well, 11 people
great.
knew,
Why
and
would I
5
go
people
to
did
NYSE
not know,
Texas
so
as
I don't
opposed
feel
to
bad.
NYSE, period.
So many companies have taken the
What a
opportunity
squeeze.
to dual list on NYSE, all the protections of the floor, everything you know better than anyone, as well as list on NYSE Texas. The advantage of dual listing on NYSE Texas is you are able to take advantage of all that pro-business legislation that Governor Abbott has enacted around shareholder rights, around litigation, around protection of C-suite of existing companies.
That's very positive. What about international listings and the
I don't know. I eat a lot of tacos.
Because of course
My
we know
tacos are
that
yellow
London
and orange,
wants
right?
it and Hong Kong
Go
wants
to Taco Bell,
it.
get
Your
a hard
thoughts
shell
on
taco.
the international hub?
Yeah, we
Yellow,
continue
orange,
to see more and more companies working with us interested in a U.S.-based listing. There is no capital market on planet Earth that can compete with the U.S. capital markets.
Planet Earth.
The depth, the liquidity. No, I'm incredibly bullish about 2026 for the capital markets, for the U.S. economy, and even AstraZeneca, who just announced that they are transferring to the New York Stock Exchange at the end of September. They've seen a 25% increase in their share price. We're excited to welcome them to the New York Stock Exchange on February 2nd.
Lynn, as I wrap up here, I want to get your take on China because a lot of our viewers wonder why there are so many Chinese stocks traded on New York Stock Exchange, NASDAQ, U.S. exchanges, even though very often we see evidence that China is a bad actor. What are your thoughts on these Chinese companies that are listed, and do they follow the same rules as other companies in terms of accounting?
So all companies that are listed on a U.S. market have to adhere to the same standards, the PCAOB standards. I think it's important to delineate between the larger companies and then the small caps. The very small caps, the micro caps, the majority of those are not listed on NYSE because they don't meet our gold standard listing requirements.
You're saying that Chinese companies do report the same way in terms of earnings as U.S. companies?
They do.
Look at the way Maria's dressed.
Yeah, because it wasn't the case before that a couple of years ago, and I just wondered if they're actually following that. You say they are.
They are. They are. Particularly a couple of years ago, I remember being with you at maybe like 2 or 3 Davos.
Kevin O'Leary, he's here with me now. That's good news. We said that Trump would never get Greenland, and now he's got the framework of a deal for Greenland. And now he says he wants to go after Canada. Kevin, I can't take that seriously. Can you?
Here's what's going on, Stuart.
I'm
pretty excited because the Greenland deal, whatever it's going to be, may not be purchase of sovereignty, it may be access or co-management to put in this dome of defense that he's been talking about. So you've got Alaska on the west, you've got Greenland on the east, but you can't do this dome with what's right in the middle, and that's Canada. So you saw, if you looked at the text of the 2 speeches within 12 hours of each other, Carney, that's the Prime Minister of Canada, throwing barbs at Trump. Trump throws barbs back saying, Mark, don't say those kind of things. That's Trump speak for let's start talking.
Come on.
He's not going back in buying the country. That's a non-starter. Everybody knows that. But a strategic alliance so that this dome idea, called the Golden Dome of Defense, whatever you want to call it, the technology exists now, but you got to put Canada in the middle.
I don't even want
I went long as soon as I heard that, the Canadian dollar. With Trump, you've got to read the signal out of all the noise in that 2-hour speech. You got to look for the signal. 2 signals. The Canadian go long on the dollar, 100%. I'm 100% going to be right on that. And number 2, I immediately took control of another 13,000 acres in the U.S. because now the big guy's telling me I can get a permit in 7 months on nat gas. And that's all about data centers. I love what happened in Davos. I've never seen so much policy. You just have to listen. You have to listen to all the whatever you want to call it, the bluster. But there's some great stuff coming.
Got it. Different subject. I want you to listen to what the Citadel's CEO,
there's
Ken
an algo
Griffin,
range at
had
11.
to say about economic policy in the Biden era. Watch this.
You cannot imagine how painful it was each and every day under the Biden administration to look at what new crazy proposal was being put into place to solve a problem that didn't even exist. There were so many decisions that were so poorly thought out in terms of economic consequences. It cost the U.S. economy dearly.
Well, Kevin, 1 year into President Trump's second term, can we still blame Biden?
Look at the way they're cycling now, trying to break down this wedge.
You can in this sense. As you know, Stuart, I don't show for politicians. I don't, because they come and go. The policy can be tremendously damaging. What he's talking about is the lingering policy from the previous administration, which destroyed initiative in risk capital. I'm one of those guys. Some of the federal policy was insane. It made no sense whatsoever, and it pushed capital away. That policy is being modified, some of it around deregulation, some of it around state policy, where states are starting to get very aggressive, trying to figure out syncing with federal policy. So if you really want to attract capital, you have to get in sync with a deregulation.
The craziest
That's
shit
what
is
he was talking about.
doing
And
this
yes,
shit with
there's
the
some very
divergence,
bad policy in the previous administration.
Not today.
And I'm not trying to beat up Biden himself. I don't care. That policy was written by lawmakers, many of them, not just one. And some of them were staffers that controlled either the House or the Senate at the time. Bad policy has bad outcomes.
Got it. Kevin O'Leary, always a pleasure. See you again real soon.
Holding with IWM.
Mr. President, thank you so much for talking with us today.
Thank you.
You have talked about this framework, the beginning of a framework that you've spoken with the NATO secretary about. Can you tell us anything about that? Does this ultimately mean that the U.S. will ultimately acquire
U.S. land.
Well,
U.S.
I don't know if I can say
Freedom
that, but
land.
it could be. I mean, it's possible. Everything's possible. But in the meantime, we're getting everything we wanted: total security, total access to everything, have as many bases, have all the equipment that we want. And very importantly, you know, we're building the Golden Dome, we call it. It was called the Iron Dome. Somehow the Golden Dome sounded a little bit better, but we have a technology that's second to none. You saw what we did with Israel, and that's our genius that did that, and it's amazing. It's just, you know, it's foolproof, and we're going to be building it, and it works much better when we have access to Greenland. Just covers more territory, covers it more accurately. Missiles will be more accurate by having it. It's very important strategically as a piece, and we will have everything we want. We're getting everything we want at no cost.
So the Golden Dome will be on Greenland?
A piece of it, yes, and it's a very important part because it's everything comes over Greenland. If the bad guys start shooting, it comes over Greenland. So we knock it down. It's pretty infallible. It's amazing. You know, Ronald Reagan had the idea a long time ago, but we didn't have any technology at that point. The concept was great, but there was no technology. Now we have unbelievable technology. I mean, virtually 100%.
So what are we talking about? An acquisition of Greenland? Are you going to pay for it? I mean,
we're talking about it. It's really being negotiated now, the details of it, but essentially it's total access. It's there's no end. There's no time limit. We're not doing a 99 or a 10-year or anything else, you know, the famous 99-year deals that you hear about, because countries can't do it for that. Countries go on longer. And so I think it's going to be something that's very well, already it's being reviewed very well. Well, I noticed the stock market went up very substantially after we announced it. But the details are being negotiated now. It'll be very good.
So, because the GDP of Greenland is like $3.3 billion, but people are valuing Greenland of between $50 billion and almost $1 trillion. So what are you willing to pay for Greenland?
Well, I'm not going to have to pay anything. We're going to have total access to Greenland. We're going to have all military access that we want. We're going to be able to put what we need on Greenland because we want it. We're talking about national security and international security. So we're going to not have to pay anything other than the fact that we are building the Golden Dome, and the Golden Dome is going to be something that's going to be very amazing. It'll be Israel times probably 100. And we need it. I think we need it. And it's all going to be made in the United States. We have the best weapons in the world. We have the best companies in the world. We want them to produce faster. And, you know, we've put a mandate out. You're going to have to produce faster, whether it's the Patriots or the Tomahawks or the F-35s or anything else. We make the best equipment, but they have to make it a lot faster.
And you've said you want a defense budget of $1.5 trillion by 2027.
This is showing like 80% bullish. Like, what the fuck? HOD testing on the 1140.
Astronomical. You know, we'll be taking in over $600 billion this year alone in tariffs, and that's because we're
doing it nice and easy. We're not even doing it strongly. We hope we have a good decision from the Supreme Court. If we don't, we figure something else. But it certainly makes life a lot easier if we have that decision that we're waiting for. If we don't, we'll do something else. But we have a lot of money coming in. We have a tremendous success. We have over $18 trillion. It could be when I get the final numbers. Could be more than that now because that was a month and a half ago. But we have $18 trillion coming into the country in the form of investments.
No one
we have
knows.
Thousands of businesses being built all over the country. And you see it, you report on it better than anybody else. I appreciate that. But, when you think of 18 trillion plus, no country's done anywhere near that. Like, that's probably 4 times, 5 times more than any other country's ever done.
And I always say money goes where it's treated best.
Well,
so
it's
you've got
good.
the right policies, obviously.
But they want to be treated good. They want to know that, we have a country that's hot. We had a dead country 1 year ago. This was a dead under Biden. You know that better than anybody, but we were a dead country. The king of Saudi Arabia said it to me. I use it all the time. He said, 1 year ago you were a dead country. Now you have the hottest country in the world. We're the hottest country in the world.
Mr. President, are our relations with Europe deteriorating or worsening? I mean, French President Macron called the Greenland situation colonialism. European leaders have these emergency talks to try to retaliate or stop your plans. You're threatening France with 200% tariffs on wine and champagne. There's been a real reaction from the European group. So,
well, they put a service charge on us, which is something that they're going to have to remove. I think we get along good, but I've always debated
all fucking day long since 10. It's been extended.
I've always said that if we ever needed them, because NATO is very much
all
a
fucking
one-way
day
street.
long. It's been extending.
We actually paid until I came along. We were paying for. I think we paid 100% the cost of NATO. They weren't paying, and we were paying. We have hundreds of thousands of soldiers in Germany. We have 50,000 soldiers in other countries. We have a lot of soldiers, not only Europe and other places. And, we want that to be reciprocal. We want to be liked and respected. So I've always said, and we get along very well with NATO, I think, but I've always said, will they be there if we ever needed them? And that's really the ultimate test. And I'm not sure of that. I know that we would have been there or we would be there. But will they be there? And let's hope that that never happens. We've never needed them. We have never really asked.
Fuck. Is it really hard to get?
They sent some
now it's $1.50 higher.
Sudan.
Fuck.
And they did. They stayed a little off the front lines. But we've been very good to Europe and to many other countries. And, now under my administration, that began because we had a very successful first term. That began then, but it has to be a two-way street.
It's been
and it's
hour
been
and a
two-way
half.
street, much more so. And now it's really been a two-way street.
So what should we expect from the European countries? I mean, they've got this EU anti-coercion instrument that would be, services, impacting our services, as you said. And then the Danish pension fund said that they're going to exit U.S. treasuries, $100 million treasuries at the end of December. European countries hold trillions of stocks and bonds from the U.S. Do you worry that they would start selling those in retaliation?
If they do, they do. But, if that would happen, there would be a big retaliation on our part. And we have all the cards.
Mm-hmm. And how much of all of this, you've been so tough on so much. I mean, Venezuela, Iran, et cetera, a long list. How much of this is messages to China and Russia as well?
I think they see what happens. Look, we attacked Iran. We wiped out their nuclear capacity one night. This was supposed to have been done for the last 25 years, and it wasn't by American presidents. And we did it, and it was a tremendous success. We wiped out, as you know, al-Baghdadi, that's ISIS, the founder of ISIS, and he was rebuilding ISIS. I knocked him out first term. Soleimani, that was a big one. He's the father of the roadside bomb. All the young people that you see without arms and legs, and their face was blown to pieces. And that was 95% sure it was al-Baghdadi. He was the father of the roadside bomb. He's gone. Now he's wiped out. And recently Venezuela. But a big one was, you take a look at what we did. We would not have peace in the Middle East if we didn't take out the nuclear capacity from Iran. We wiped it out. Operation Midnight Hammer, it's called. And that was an incredible feat. Every single bomb went right down those chutes and exploded. 100,000-pound bombs, massive bombs. They went right through. In the dark of night, no moon, no anything. Every single bomb hit its target perfectly. And then recently Venezuela, that was, some people think that was sort of the most amazing because this was in a major military fort, one of the biggest military forts, went in, did the job, came out. Nobody can believe it happened. Nobody killed, no equipment lost. Pretty amazing.
It could be that what you did in Venezuela galvanized the people of Iran, and I want to get your take on next steps because you told the people of Iran you're with them, help is on the way. We understand from reports at least 20,000 people are dead. How do you know they're no longer killing citizens, and will you finish the job?
Well, I hear two different reports. I mean, I hear different numbers, much different than those numbers, but I will say that they were going to hang 837 people that you know about, and that was sort of a done deal. And I said, if you do that, you're going to pay a big price. You're going to get hit harder than anybody's ever been hit before. And they decided not to do that. So they didn't hang those people on Thursday. Last Thursday, they were going to hang. Can you believe it? We're talking about this?
No.
It's from 1,000 years ago, right? But that's what we're dealing with. And yet smart,
This is what we're dealing with, folks.
But it's a
taking a fucking screenshot of this bitch.
It's an ancient way of life. They were going to hang 837
This is the fucking shit we're
people.
fucking dealing with right now.
And I said, in the very strongest of language, don't do it.
Things just going up and up in the market.
So that was a big
Everything.
thing. And from there, we'll see what happens. I mean, that's the last we had to do with them for a little while. But if we didn't take out their nuclear threat, there would not be peace in the Middle East. Nobody could have done it. They were all afraid. They were afraid. They used to say the bully of the Middle East, that Iran was the bully of the Middle East. Now, they're not such an effective bully anymore.
Well, if they keep killing people, will you go back?
Well, I don't want to talk about that because I don't want to put myself in a position. I can't say that. I don't want to say it because I think it would be stupid for me to say that.
And I get that. I want to turn to the economy, Mr. President, because when I first interviewed you, when you first came back, it was about a month after the inauguration for your second term, I asked you, Mr. President, what do you want the economy to look like in 4 years? And you were very clear. You said, I want the private sector to rule the day. And since then, in the last year, you've taken a 10% stake in Intel. You've taken a stake in MP, Mountain Pass. You told the defense companies 2 weeks ago, don't pay any dividends, don't do buybacks until you produce the weapons that we need. So please explain to our audience, how is that free market capitalism?
Well, it's very free market. We have defense companies that were making a fortune. They were buying back stock with all their money, and then they come to us for money if they want to, we want to buy something or we want to have plans built, and they'd say, could you loan us the money? And they'd be doing tens of billions of dollars of stock buybacks. So I'm not letting them do it. I want them to put money into, we have the best equipment in the world, the Patriots, the Tomahawks, the F-35s, all of our equipment's the best. Other countries want it, and we want it. We need more. It takes too long to get it. And I said, we're not going to do that anymore. So also, they were making tremendous amounts of money. I mean, 25, 50, $37 million a year. That's a lot of money. That's almost as much as you make. You work harder. You work harder than them. No, but they were making. I asked one of the gentlemen, "What are you making, sir?" I make $24 million. How come it takes me 5 years to get your particular thing that they make, right? So I put a cap on that for a period of time. I said, you have to build more plants. When we need Tomahawks, I want them within 24 hours. When we need any kind of a Patriot or whatever I want to have it quickly. I don't want to be waiting 3 years for it. What kind of a thing is that? And you make all this money. And I'm prohibiting them from doing stock buyback. And they haven't even complained about it.
Well, so free market capitalism, unless it's a national security issue?
Look, it's free market. It's stupid market letting that take. Why would I let them do stock buybacks and we give them, the businesses from us? So I want to buy, and interestingly, their stocks went up because we raised the budgets. Our budgets are higher. We're going to buy more military equipment. We have to. In this world, we have to. We have the strongest military. I rebuilt the military in my first term. We have the strongest military we've ever had. And we're going to keep it that way. And you get a little glimpse of that with Iran nuclear, but you got a really very current glimpse from 2 weeks ago with Venezuela.
Yeah.
We have the smartest, we have the strongest, we have the best equipment. They had a lot of anti-aircraft stuff that didn't exactly work too well.
Well, thank God for our military and for our commander-in-chief on that.
We have the greatest, strongest military in the world, and we make the best equipment. We have to make it faster.
Mr. President, let me talk about affordability, because just in the last 100 days, you announced a list of things that you want to be putting in place, bringing down the cost on a number of things.
Is this about to make a Nike Swish line or no?
$200 billion in purchases of mortgage-backed securities, banning institutions from owning single-family homes. How soon would you expect those policies to actually move the needle on cost?
Well,
people are saying all-time highs now. Let's do the poll.
We're doing great on affordability. You know, that's
in your opinion.
That the Democrats made up. They're the ones that caused the problem. When I inherited this, when I came into office, I had eggs that were 5 times higher than they
Is a
ever
Nike
were.
Swish line incoming?
I mean, remember the famous, like 2 days after I come into, what about
HOD
eggs?
break.
What about eggs?
Yeah. I just got to office.
I said, do we have a problem with eggs?
Oh my God.
Got here, right?
Can't even do the fucking
we have that down now lower. But food prices are coming down. Look at gasoline, $1.99 in a lot of places. We're down to $1.99 in a lot of places. We're $2.30 overall, but we're down to $1. It was $4.50, $500. I mean,
everyone do the poll right now.
You were spending in a lot of places over $5. We have it at $1.99. That's better than any tax cut. In addition, the great
Nike Swish sign would be somewhere up here above HOD.
Now you have no tax on tips, no
burning
tax on Social
every
Security
fucking
for
thing
our
into
seniors,
close.
no tax on overtime.
Still burning.
That bill
as
is
close as
have
everything
huge,
to close,
and you
but
have, of
HOD
course,
break
the
would turn
one-year
everything
deduction
too.
from, you know, build a plant and you can deduct.
I was just going to say the depreciation seems like it's really having an impact on small
We have
business.
thousands of businesses being built all over the country. There's never been a time like this in our country. And
6 people voting yes.
$18 trillion that's pouring in. I spoke
2
with
people
Eli
voting
Lilly
no.
the other day. He's a great guy, a great leader. And I said, what are you doing? He's building 5 plants. They're spending billions and billions of dollars bringing back the drug industry into this country.
2 yeses.
Many of them, I think all of them, they all want to come. And it's because of tariffs. Because they don't want to pay the tariffs. Very simple.
And
I think they were very happy with November 5th, the election.
On the cap on credit card rates, and of course they were up to 28-30% in some cases.
Please vote in the next 1 minute.
How can you do that? Look, I'm all for free enterprise and everything else. But you have a guy goes out and he's a little
6
bit late
people
on
voted
his,
yes,
you know,
3 people
payment,
voted no,
and
counting
he ends up
Yoko
filing for
Slayer.
bankruptcy, right? 28%. Whatever happened to usury? Whatever happened? You know, they used to have laws that you can't charge too much. But 28%, 30%, 32%. I don't think anyone knows that. I think they get a bill and they end up just going bankrupt.
Well, one analyst said it's going to cut earnings for the banks.
I feel like now we're voting because we can't do it.
16%.
It's a one-year deal. We got to let people get back on their feet.
Jamie Dimon says that it's an economic disaster.
They were destroyed. These people were destroyed during the Biden years. They were destroyed.
Okay, cool. 7
the
people
highest
said
inflation
yes.
in history. Look at inflation for the last 3 months. It's 1.2%. Last 3 months, you know, it takes a little time to get there. And I'll tell you, the oil price is coming down so much, gasoline. When you get gasoline down to, you know, less than $2, and we've largely done that.
Where is it less than $2?
We're drilling more than we've ever drilled. We have more coming in.
I have a question.
We just took over, as you know, 50 million barrels
Can
of oil.
someone tell me where it's less than $2? Because I live in the cheapest gas state in the country, and I don't have $2. I have like $3.65. $3.75.
Really well.
Like
our country is
$2.
I mean, you report on it better than anyone else. Our country is doing as well as it's. I think it's done better than it's ever done.
Are you going to release a budget next month? And do you want to see another reconciliation package?
Well,
Texas. Wow, really? Texas has cheaper gas?
Probably end up in another Democrat shutdown because that's the only way. You know, when we came out with the numbers over 5.
Tell me how Texas has $2 and California has $9. Like that makes no fucking sense. Free market capital. You get gas for $2 in Texas. You go fucking.
We'll see what happens.
You get gas for $12
on
Texas.
What's
in California for $9 in California.
You know, we have a long way. You know, that's an eternity when you talk about a couple of weeks.
$2.18 in Nashville. Wow, crazy. I thought I had the cheapest gas in my state.
We're
That's
negotiating
crazy.
health care. I don't want the insurance companies to get the money. I want the money to be paid directly back to the people. And when it comes back to the people,
what?
By the way, everyone is in
what?
You know
Atlanta gets $2.60. Wait, hold on. I'm paying the most.
These insurance companies
I'm paying the most.
1,700%,
Yo, wait, huh?
1,400%. And I say, what the hell? This is money being given by the government.
I have to Google this.
And it has to do with
I thought I had the cheapest gas prices.
Obamacare. The money's going, that was designed to make insurance companies rich. The Democrats are very big for the insurance companies. That's why you probably won't have an agreement on paying directly to the people, because the Democrats are totally owned by the insurance companies. But the money should be paid into a healthcare savings account or whatever, but the money should go directly to the people. You'll end up paying less money. You'll have
gas prices in Texas right now is $2.46.
Think of it. They'll have better health care for less money.
Do you think we'll see another reconciliation plan? Do you want that?
I'd like to see it. It's hard when you have a majority by 3. It's hard because you have a guy like this loser, Massey. He's a real loser.
California is $4.20.
No, Rand Paul. I always got along well with Rand Paul, but he's always, no vote. Someday you're going to have to explain it.
That thing was high.
Psychiatrist ought to go see him. Even a really great vote, they just vote no. I don't know what it is. I think they get good publicity. They really don't.
Rich said, take us back to when gas was $1.09. You're talking about the 2004 days, the George W. Bush days.
The plans
You're talking about the pre-Obama days.
These are communists. These aren't socialists. These are communists.
I don't even remember the gas prices in the Obama days.
They want to upend your agenda. And the probe of Jay Powell, even Republicans, Tom Tillis, said that we're not going to move any nominations through until this.
I almost want to say it's like
he's no longer there. He's going to be out. He
almost had 20% bearish, 80% bullish, but it's like 60-40, I guess. 60% bearish. I don't know. Fuck, it's trying.
And here we are. This isn't the White House, but I'm going to the White House. I'm not going someplace else. And they've been fighting me for 10 years. They're very, very unfair fighters. They're sick. I mean, in many cases, I really think they're mentally ill. They've got a problem. Because when you look at what they do, when you look at the things, even they're still fighting for men and women's sports, transgender for
everybody. There's chance for a pullback.
Open borders. Let the world.
I'm hoping on IWM.
People coming in from the Congo, prisons in the Congo,
bearish.
prisons in Venezuela, prisons from all over the world. Let them come into our country. And that, we've done an incredible job.
Chris said you live in a democratic state, Jeff. And the Gooder said that's not how it works at all.
Because I need, legislation from Congress.
How does that work?
You need a president.
I swear my state had one of the cheapest gas prices
we have
back in the
a situation where
I think it was when it was high as hell. When gas prices were super high.
We're taking people into our
country.
Pretty sure my state had for all these businesses that are opening, but they're coming in legally.
You want legal immigration.
But we did an unbelievable job on the border. And really nobody talks about it. The one thing I find in politics, you solve a big problem. I got elected pretty much on the border and other reasons, but the border was a big. I've won. I made it. I did a great job in the border within 4 weeks. Look at Washington, D.C. Washington, D.C. is a totally safe city. You can walk with your husband down the street. Nothing's going to happen. A year ago, you would have had a 50-50 chance of being slugged.
Will all of this be enough to keep the majority for the Republicans in the midterms?
I don't know. The only thing I don't really fully get, I don't understand how it could be possible, but if you look over 100 years, the president, Republican or Democrat, no matter how well, we're having a great presidency. Even the radical left lunatics say this was one hell of a year for Trump. So we're having a great year, but Democrats have had good years as presidents too, and they lose the midterm. So for whatever reason, I think I saw where it's 2 out of the last 50 years, 1, 2. And you say, how is that possible? So there's something psychological that if you're president, no matter how well you're doing, you don't do well in the midterms. This is Republican, Democrat. The numbers are staggering. It doesn't make sense. We should do well. We should do well. And we're going to fight like hell to do well. Because, look, we don't want to have anything. What we've done is we've created a miracle. This country is stronger. It's doing better than it's ever done. And you're going to see that. And, we inherit a lot of debt, 36,
right here.
Growth will make that.
Guys, let's focus on the market. You guys are both right. I think when the Gator said, though, there's a lot of gas refineries near my state, so he's absolutely right. But Chris, you're absolutely right, too.
We'll be paying off debt.
Let's focus.
Time is 12. We did it with the 1776 for the
Please, $2 lower, $1.50 lower, man. It's not like I'm a fucking dollar store here. Come on.
And I said, well, if you add $1 to 1776, that was meaningful. But we did it for the soldiers, all of the soldiers.
I'm in 4. I added 2.
Navy, Air Force, Marines, all of the.
Sometime up there. I don't know when. I was just getting grinded up.
I mean, I'm just walking over here for an interview. 5 soldiers, good-looking guys, our guys, stopped me. They said, "Sir, thank you for 1776."
Oh, that's great.
So
Mr. President, I know you have limited time, and we so appreciate you stopping by and talking with us. Thank you so much.
Thank you very much.
Congratulations, Mr. President.
You've done a great job. Thank you.
Thank you. So have you.
Oh my. This shit I'm talking about. They drop it, get everybody excited, and then just pop it so fucking quick. But to be honest, I needed this shit at 11, not fucking now. As they were going higher, 11:15, 11:20, but now it's just fucking terrifying. POC is holding control. There's 4 hours left. What a destruction. What a fucking destruction of hope candle. What the fuck? You know, this is one of my worst times too, when IWM does some sort of weird ass shit. It's very hard for me to keep track of it. It just continuously fucking does it. Like, what the fuck? This crazy ass pump. IWM just leading the entire fucking day. Entire day, nothing else. I don't see jack shit except IWM.
Inflation gains, that's the PCE. Just talk us through October and November.
Yeah, we do have the November print here, and it looks like everything came in line with the street's expectations. If you're looking at the year-over-year number for November, that came in at 2.8%. Street was looking for 2.8%, and core PCE for November on a month-over-month basis increased by 0.2%. Once again, coming in line. You are still seeing personal spending actually outpacing probably a lot of economists' expectations, coming in at 0.5%. Street was expecting that, but that's a very high number. That could also lead to maybe some inflation down the road. Just kind of depends on what those consumers are actually spending money on here, but we do not have any surprises when it comes to the inflationary prints that we have for this morning. You already talked about the better than expected jobs numbers that we had for initial claims, and we already saw an improvement when it came to GDP as well. So the macroeconomic data over the last week to 2 weeks has been, for the most part, holding up. Outside of that pending home sales that we saw yesterday, a dramatic drop, it seems like we're kind of holding in there when it comes to the inflationary front, which we're trying to get back down to that 2%. As well as when you're looking at the labor front, which it looks like we are not seeing any meaningful cracks at this point.
Yeah, so net, when you tie all the macro prints together, I mean, all in all, it does look like a favourable sort of economic backdrop here. I mean, yes, you say there are still some pockets of weakness there, but let's catch the overall trend as we go along here. But, I mean, you know, as far as you mentioned, jobless claims, a reading of 200,000 there. We had the continuing claims at 1.849 million. Q3 GDP, 4.4, best in 2 years. What does this all mean when you tie it together with, as I mentioned, the Fed's preferred gauge of inflation, which we got today for next week's meeting, as far as not what they do, but what they say?
I mean, I know it's just going to pull back at some point today in the video, but like, I just don't know how it's
kind of
going to happen
siloed in some respects. On the inflationary front, yes, we
all
are
the
starting to see the move
back
to the
on the
downside, but
video
it has
too.
not been as aggressive as the Fed would like to see. And unfortunately, that last CPI print that we saw, you are seeing the goods component starting to re-rate a little bit higher on a month-over-month basis, especially if you're looking at the food component, not only at home, but the services component for food, the food away from home, both growing by 0.7% on a month-over-month basis. That's not really the trend that you would like to see, because if good prices move to the upside aggressively, then earners or those that are working would demand more wages in order to compensate for that. So that could also lead to greater inflation down the road. I think the Fed's going to look at it in that manner. The labor market itself is seeing some pockets of weakness, but it has not seen an overall trend as of yet. And we still have the government shutdown that's kind of reverberating through some of that data set. And from a consumption standpoint, GDP is really being elevated, and a significant portion of that elevation when you're looking at GDP, especially if you're looking at the Q4 estimates, is also exports of a lot of metals, gold, silver, as well as the industrial metals moving to from the United States, moving overseas. That's going to be a positive for GDP. This is the same exact trend that we saw in Q1 of last year, kind of the reverse, where we were importing a significant amount of metals, and that also then distorted GDP to the fact that we actually had a negative print. So I think each and every one of these particular areas is going to have an impact on the Fed's decision. I don't think that we're going to see a rate cut here in in January, I think I would be highly unlikely. But maybe we do still price in at least 2 rate cuts for the remainder of this year, just given the data that we have so far.
So obviously we're building on yesterday's rally after we saw that so-called taco trade taking us another leg higher yesterday, KG, as we closed out the session together. Obviously we saw those nice gains. We saw a record for the Russell, obviously. Building on that, as I mentioned today, and we've seen that nice global relief rally as
the vote said
it's been
9 people knew,
now to
5 people did not know,
so
now I guess everyone knows.
As far as the commentary is concerned, I mean, no doubt welcomed by some of these European leaders, but there does still seem to be a degree of skepticism and apprehension here. It's just fascinating as far as the moves we've seen in this market as to how sensitive they are to the geopolitical risk premium here. More so,
it's like 70% bullish now. I'm scared as shit.
Just talk us through what you're seeing as far as the market impact right now.
Did they pull back?
Terrifying. On this front, over the next couple of weeks, obviously, we'll probably refocus on that a little bit more as the Mag 7 names start to report. That'll have a major impact when it comes to the equity markets. The geopolitical risk, and rightfully so, is still a little bit uncertain, and that's why we still have elevated volatility. Even right now, we are still seeing the VIX up to about 16.3, so implying more than a 1% move to the upside here. And I think it's really important to note the dollar has not reversed its trend. It's actually still going lower, and you still have yields moving higher. We have not even reversed the yield move if you're looking at the 10-year from before these tariff threats and this whole Greenland situation, or the event that actually took place over the last 72 hours here. So I think there is a little bit of skepticism that is being reflected, and maybe there will be some long-term effects that are going to actually impact these markets and potentially liquidity. I think the last thing that we have to be mindful of, this taco trade that we continue to talk about here, there's components that also add into that. What we saw on Tuesday was actually yields moving to the upside. You had the dollar moving to the downside. Equities moving to the downside. That's something that does not occur all that often. The last time that we saw that type of dynamic was in April of last year, where we did see that taco trade come into fruition. So if we get another event, I think you look at those type of dynamics, and maybe that is going to be the signal that you get a little bit of a change in tone from the White House, which could be bullish overall. I do get concerned about the price action for Microsoft and Amazon, though. Right now, we are seeing those fade here a tad bit. And unfortunately, if we do fade these levels right at this 20-day moving average, I don't think that's really bullish for this market over the next 2 weeks.
All right, and then what about commodities right now? Obviously, we're seeing more appetite for risk. That's why we're seeing, some of the precious metals coming off because we're moving out of that sort of safe haven trade as well. But then when you look across the energy patch too, I've seen that nat gas continues to march higher.
690, we're back at. This is almost all-time highs territory. 690 plus.
Yeah, I think natural gas is actually the most interesting one. Now, you are seeing this situation because of this weather event that's really going to take hold here on starting on Friday, where natural gas prices, at least for the front contract, which is the February contract, has moved to the upside very aggressively, trading above $5.50 at this point in time. But to put it into context, you're not really seeing that same aggressive move across the curve when it comes to natural gas. We have the March contract that's actually still trading in the threes at this point, and we have this split or this spread that has taken place, this massive backwardation where the front month contract is trading higher than the further dated. Right now, Sam, it's trading at $1.86 difference. To put it in perspective, for one contract, that's an $18,000 difference when it comes to just one contract for the CME natural gas contracts. So the February contracts actually expire in 6 days from now. You would expect that spread would actually come in here. I would be very, very cautious around this natural gas trade. This is weather-driven,
I think it's going to do.
Driven, and I would expect that spread
to
move to the downside, meaning front month contract moves lower. Further data contract moves higher here. There's definitely a spread trade.
I'm going to go eat a taco, and everyone here needs to go eat some sort of taco. Okay. Whether it's a gourmet taco, a crap taco, cheap taco,
weather dependent on this Arctic blast expected to hit here. KG, really appreciate it. Thanks for getting us across the data and some of the moves in the market for us this morning. I'll catch you later on.
Fucking Thursday. It's Wednesday. Today is some sort of day.
Is here at Post 9, now advisory partner and chairman at Partners Group. Charles, it's great to have you back.
Great to be back with you and feel the energy here.
Yes. So there's always a lot of drama surrounding Davos, but when you think about actual thematics that we're going to be talking about for a while out of this forum, what comes to mind?
Well, I think there's a big question here about, is the world order that we've lived in for 70, 80 years, Carl, is it broken? And you know, it is under stress and it's fractured. But, you know, as Mark Twain said in 1897, maybe the reports of my death have been greatly
really bringing out
exaggerated.
Mark Twain,
you know,
sir.
I think we still
Oh my
have
God.
a world in which there is strength and solidarity.
Oh God.
And
They're
it
bringing
will
out
be
Mark
important
Twain.
to work with allies in different ways. So I'm particularly glad to see the situation over Greenland diffused. You know, because if the president is going to succeed with his trade policies, he's going to need leverage in negotiations. And right now, for example, 30 years ago, China depended upon our market in the U.S. for 35% of their exports. Today, that number, Carl, is 10%.
Right.
So in order to get that number back up to a point of leverage, we have to work with our allies on this. And I think that we can do that. It's just an area of finding common ground. You know, Europe is a much more sluggish economy. Half the gray hair I have is from negotiating with European bureaucrats during the Greek debt crisis.
Yes.
So I know how difficult it can be to work with Europe. But still, it represents 80% of the U.S. economy. The European economy is equal to 80% of the U.S. economy. And when you add Canada and Japan to that, working with our allies, no matter how difficult, is important.
Japanese news don't even matter.
During the war, when he had trouble
Parliament getting shut down on Friday,
and
market doesn't even care.
Align, you know, the only thing worse than fighting with allies is fighting without them. And I think of that sometimes.
So you think the president understands that?
I think he realizes at the end of the day, you know, he sometimes puts forward a pretty strong and even exceptionally challenging position.
I mean, he literally said we don't need NATO.
He did. But in reality, I'm not sure that that's in the U.S. long-term interest, Carl. I think that we need to reform these institutions. We need to make them useful. NATO was helpful in resolving this dispute over Greenland. Without the leadership of NATO, would be where we are today, Carl. So I'm not sure. I think that these institutions are old and they're tired, but they still might be very useful to America. We're not a hegemon anymore, and we can't run the world by ourselves. Now, I understand.
Isn't that so weird? Like, look at the fucking time, 10:50, 11,
but there are different ways to do that,
12.
and I would welcome an initiative by the president to strengthen economic collaboration in this region, not just worry about drug cartels and rogue leaders.
What did you make of the forcefulness of Carney's speech, where he talked about cooperation with certain countries leading to your own subordination?
You know, it was a thoughtful speech. Carney's a very smart and experienced man, but I think it would be a mistake to walk away, as was implied a bit, from the world order that we built, and to walk away from the importance of the U.S. relationship, Carl. Canada and the U.S., for better or for worse, we joined at the hip. Our trade flows, even with these tariffs, is still massive. And I think we need to rethink where our friends really are.
Well, we are chopping at HOD. I guess Google is rallying too, because they're talking about Google too.
We're back on Morning Trade Live. Here's a look at where mega cap tech stocks are trading this morning. Nvidia is higher, fresh off Jensen Huang's visit to Davos, and Alphabet is close to its all-time high after an upgrade over at Raymond James. Microsoft and Apple moving to the upside as well. So it is a nice day for our mega cap tech today. Alphabet is the focus, though, of the morning trade. So joining us for a closer look is Marley Caden. Good morning to you, Marley. So we've got this upgrade now from Raymond James. We've had an outperform rating on Alphabet, but today upgraded
everything at
to
the top.
a strong buy. What's behind this call?
So this is an interesting move, Sam, and good morning to you, because it already had a buy rating, and outperform is the equivalent of a buy. Now it is an even stronger buy. It's a strong buy rating at Raymond James. The reasoning behind it also got a price target increase here to $400 from $315, is that the firm said that it updated its bottom-up analysis of both Google Cloud Platform and Search, and the results of that bottom-up analysis had them materially upwardly revised their 2026 and 2027 forecasts. For 27, revenue now at the high end of
Look at Ninja
street.
just crying. I live in New York and gases are $3 to $4 crying. All right, guys.
Alphabet is entering a phase where its AI stack is, quote, shifting to high gear. In the note, the analyst says, we believe that Google is likely entering a cycle of improving AI stack narrative and upward revisions that could create one of the highest quality top-line AI acceleration stories in the public universe.
What are you guys even fighting about? It's like you guys are both 50-50 right. Like, what do you mean?
Position Alphabet
They're
in this acceleration
right, bro.
story with fundamentals rather than multiple
Everybody right.
driving
Ain't nobody wrong.
Internet performance in 26. As far as cloud performance, Raymond James is modeling growth of 44% in 26, 36%.
If you really go do the research and you really go think about it, they're both right. So, I mean,
they say that strong contributions from both infrastructure
you guys are both arguing about the same fucking shit.
Like
my state is a liberal state.
As well as growing adoption
like it's impacted by senators and Democrats and sure, but like we do live next to a refinery, so we're cheaper than other Democratic states, other conservative states have cheaper gas prices compared to liberal states. That's just the truth. How do I know this? Because I've worked for Amazon before, driving semi-trucks across this country. So I've been to Texas, I've been to California, I've been to Chicago, I've been to Florida, I've been to Alabama, I've been to South Carolina, at least once, the span of a year at least, or a year and a half, so trust me, I understand, but you guys are both educated, you guys are both logical people, there's no need to argue about bullshit. You guys are both right, that's why everyone's arguing, I mean, that's why everyone's agreeing with everyone, you know what I mean? Everyone's talking about their own personal experiences, they're all right. How do we know this? Because we all live in different states. And we all understand how our states work and how our environments work. Everyone understands how other environments work too. But what I care about is fucking VWAP. So annoying.
Just those last 6 months of 73%.
The MACD volume won't turn down.
Absolutely, and it's been getting a lot of praise, as you mentioned, for Gemini. So more conviction now from Raymond James. Thanks so much for breaking down the details for us, Marley. Let's trade it now with Joe Tigay, portfolio manager at the Rational Equity Armor Fund. So how are you approaching your example trade for Google Alphabet this morning, Joe?
Like a fucking
yeah, thanks for having me as a portfolio manager of the Rational Equity Armor Fund. This
Look at this shit.
Our largest
cup and handle now forming right now. You can talk about a cup and handle. Cup and handle. This didn't go that much higher. There's a cup and handle today. Intraday cup and handle.
Into February, and we've already seen some volatility peaking up here in January. We do expect volatility to be on the rise throughout the month of February. It often peaks in February, so great couple days rebounding from the Greenland tariff news, but we're not sure that we're out of the volatility just yet. That said, I do want to position
Someone's
myself
having a
to
good
the
day.
In this trade. So
Red Plasma says, woohoo!
Someone's having a 10% upside
Mario
in Google.
Party
I certainly
day.
think it's possible, just given the excitement there is behind their name, behind their AI, and their ability to monetize the capital expenditures they put into place the past couple of years. There's been a lot of money spent by a lot of the big companies the past couple of years. Google has done the best in turning that spending into cold hard cash.
Okay, and just your overall thoughts on the markets this morning as we continue to build on these gains here off the back of a little bit of calmer heads prevailing over in Davos with respect to tariffs, trade, and Greenland. What do you make of what we're seeing there?
A great rebound, maybe just a little bit of a shake-up, led people to get back into the market and do a little panic buying, maybe when they realized the tariffs weren't going to happen as they had thought. So just a little bit of a shake-up. That said,
see, what I noticed from being around in different states is that different states have different populations too. So it's a lot harder to do policies that you would otherwise be able to do in Michigan or smaller population states. Then, like, I don't know. I feel like New York or California or New Jersey. I mean, I guess it's just a thing that all liberal states are more populated, like numerically, than conservative states, right? So. I just don't understand how. I mean, Texas, though, I guess they pump their own shit, so they have the cheapest.
Thanks so much for joining
That's
us
kind of
today.
wild.
Joe Tigay there, who is the portfolio
I thought
manager
for honestly,
equity
for
armor
2-3
fund with an
years
example
or a
trade
year and
for
a
us
half
on Google
that my
Alphabet.
state still had the lowest gas in the country. So that's why I'm surprised. But clearly, things change. I think back in the day, though, like America didn't like I don't think we drilled that much. So maybe I'm wrong. Maybe during the Biden days. Bears are pushing right now. Let's see where they go. Let's see where they go. Time is 12:20. I need something big. Not this tiny ass fucking move.
The U.S. taking control of Greenland. So what are we talking about? An acquisition of Greenland? Are you going to pay for it?
Israel times 100.
It's really being negotiated now. The
Iron Dome
details of it, but essentially it's total access. It's there's no end. There's no time limit. We're not doing a 99 or 10-year or anything else. The famous 99-year deals.
There's a divergence at the floor.
Because
I
countries
think
can't
into
do
today
it for that.
or into
Countries
tomorrow,
go
they're
on
going to
longer.
clear the divergence.
And so I think it's going to be something that's very well. Already it's being reviewed very well. Well, I noticed the stock market went up very substantially after we announced it, but the details are being negotiated now.
I know it sounds fucking crazy, but that's what I think.
The GDP of Greenland is like $3.3 billion, but people are valuing Greenland of between $50 billion and almost $1 trillion. So what are you willing to pay for Greenland?
Well, I'm not going to have to pay anything. We're going to have total access to Greenland.
Free Greenland?
Military
oh my God, America land.
We're going to be able to put what we need on Greenland.
Freedom land.
We're talking about national security and international
Eagle
security.
land, guys.
So
free land, America land. Is there gas in Greenland? That's the real question. If there's gas in Greenland, if we find gas in Greenland in a year, I will laugh.
Very amazing. It'll be.
I love free gas.
Israel times probably 100. And we need it. Wow. I think we need it. And it's all going to be
Israel
made in
times
the United States.
Golden Dome.
And I'm back with the panel, Lee Carter and John Lonsky. And John, it sounds like the negotiations are around protecting Greenland. Maybe this is something NATO is going to do collectively, because the president just said he's not going to pay anything for Greenland, but he's going to have total access. Your reaction?
Yeah, I think this agreement strengthens NATO, where the fear was not too long ago that we were weakening.
That's what he said, yeah.
Yeah, in danger of destroying NATO. That's not happening. I think it strengthens our ties with Europe, too. This has to be viewed positively. The most important aspect of this agreement might be that it keeps Russia and China out of Greenland. That's important not only for national security, but also for mineral rights.
Yes, that's absolutely right, because it is rich in oil and gas and minerals. But Lee, he's got everybody on the run in terms of European leaders here in Davos. They're all trying to get a moment with President Trump. I just sat down with him for 25 minutes, and he went through some of the conversations he's having. He was calm and collected and really on point in terms of what he wants for the United States, and his agenda is wrapped in national security.
I think it's fascinating because there's usually so much news that breaks out of Davos. And there really is a lot of news that is breaking outside of Davos, outside of Donald Trump, but nobody's paying attention to any of it because he is the news. He's at the center of every conversation. It's not just Greenland. It's all across the conversation and what is sort of what is happening globally. I do agree, John. We're seeing a huge strengthening of NATO. I think we're going to see a lot of people walking back their comments about Greenland and saying how scary this was,
Send in the
how
jets.
bombastic this was of Donald Trump.
It's
Never
a meme.
bet
It's a
against
meme.
Donald
It's a
Trump.
meme.
He knew what he was doing. He had a clear strategy here.
Greenland has oil. Send in
Everything
the
else
jets.
that's going on.
It's
Look at what's happened with Venezuela. What the
it's
impact of that
what's
is
his name?
on China and Russia.
Keel and
Look at
Peel or
that,
whatever.
like what's
Keel
happening
and
in
Peel
Greenland, the
meme
impact
of like
that's going to have on China and Russia.
of a nation
We're
in
in a
Africa,
changing
and they're
world
like,
order here,
oh,
and
but
it's new
secretary, we
philosophy.
need help, and they're
He's
like,
really
oh, we
laying
can't
out
help you, and they're
America
like, but
first
secretary,
across the board, and he's
we
not
need help
apologizing
defending
for
our
it. It's a very
newly
different tone,
found
and he's setting a whole
oil
stage
reserves,
for
and they're like,
Davos.
oh, mission operations are gone.
That's absolutely right, and I think that is really important what you just said. It is a new world order because the Chinese have been trying to create this new world order. And in the prior 4 years under the Biden administration, it did look like there was a new world order.
Anyone know what I'm talking about? That meme?
Asia run by communist China, but President Trump has taken this back. We talked about Greenland, we talked about Iran, we talked about Venezuela, we talked about the United States with regard to affordability going up into the midterms. I just spoke with the president a few minutes ago, and we also got into what he has been doing in terms of affordability and also free market capitalism. I want you to hear what he said about free market capitalism, so we'll do that coming up. Stay with us.
You know, somebody in our group chat was talking about, oh, defense stocks, oh, Golden Dome or not, blah, 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 like 3 or 4 days ago, but this is what he was talking about. If anyone remembers over the weekend on Sunday.
Welcome back, and we are coming to you from the World Economic Forum here in Davos, Switzerland, and I am talking now with the President of Poland, President Karol Nawrocki, joining us right now. Mr. President, thanks very much for sitting down with me.
Thank you for having me. Great pleasure.
Yes, and it is our pleasure. One of the biggest dominating conversations here in Davos is President Trump's plans to acquire Greenland, and I want to get your take on it, given that Poland is one of NATO's frontline
Ochoa
states,
says, well, guys,
as Ukraine aid, as
all right,
Russia
I'll read what
US
Ochoa
troops
said in
posture
a journeyman,
are all
in
under
a
pressure. What is your reaction to the
Alaskan
president's
explorer
plans,
from the
to acquire Greenland
1870s,
and his plans to
1857's
put tariffs
voice.
on European nations until he gets
Hello,
that support?
gentlemen. I'm going on a journey.
First of all,
The frozen tundra of the Great Lakes right now to get some food.
The Greenland issue is not a new one. It started back in the 19th century, and today Greenland
In
is
this
of
chop,
importance.
if something happens,
This issue needs
time
to be
span
solved
that I'm on this journey, I'll be sad.
for international order within
Well, sir,
NATO allies.
good luck on your
And
journey
I
through the
believe
tundra.
that this
Thank you for
issue
saying
will be
that in such a
solved
dramatic
by
way.
President Trump
We love to see it.
in
We love to see
relations
it.
with Denmark. I'm looking at Greenland as a
He's talking like
place,
he's in
one
fucking
of the
Greenland,
places
man.
around which there is also a certain strategic geopolitical shift
Reporter
going on.
Ochoa.
President Donald Trump is a leader
That's
of
where
the
he is right now. Ochoa is right there on the mountains.
world, of the democratic world, of the civilization to which Poland also belongs, cares about security of the Western Hemisphere, but he also cares for the security of the entire world, of the values and democracy, and he tries to solve this issue. I believe that allies will solve this issue through diplomatic channels, and this is what we are striving for.
I mean, after all, you just saw Russia send drones into Poland, and we were all wondering, what does this mean? So do you see Greenland as that kind of protection? Should the U.S. Be able to be successful here as averting potential missiles into the Western Hemisphere?
If we look at the distribution of funds concerning responsibility for security, then the United States spends 65% of GDP, where the European Union 35%. President Donald Trump is a leader of certain stability and security in the world.
65%, bro.
Of course, course, in agreement and in partnership with Europe. And we need to understand that certain strategic steps around Greenland are done, thinking about constant pressure exerted by the Russian Federation. Yes, as you have just said, we know Russian pressure on our borders. Poland, as a matter of fact, is in the middle of a hybrid war for many years, and today security-related questions are most important for the free world. And in this context, we should be looking at Greenland.
Trapping on everything again.
Steps done by President Donald Trump. These steps are made also for the security in Europe, across the globe, and also in Poland.
You are balancing strong nationalism in Poland and with EU demands. EU demands on courts, on migration, of course, and on energy policy. What can you tell us about that sort of, tension between Poland and the European Union right now?
We want to be part of the European Union, but the tensions which you are mentioning are visible. We in Poland attach biggest importance to the Polish constitution. We are not advocates of centralization.
Every time they get me fucking open, they're bouncing crazy.
We're interested in ideological issues in Poland.
Every time. 12:30 too. Oh my God.
Within the democratic system, we can talk about it. We are concerned about the trends which speak about the Green Deal. We are concerned about certain overregulation of the European bureaucracy, and this is a healthy discussion which we're having within the European Union. We can raise those issues which we do not like, but at the same time, we are a member of the Union.
It was either today expire or tomorrow, and I did today. Fuck.
A strong United States, who is a leader, who is the strongest state in the world, and we need a good cooperation with the European Union.
Well, I mean, there is some debate about stepping up militarily in terms of Ukraine, and I want to get your take on where this is standing right now, the war on Ukraine, the impact on Poland, and most importantly, what happens next if the U.S. and the Europeans slow down their support for Ukraine? Is Poland ready to step up militarily?
Of course, Poles are not ready to send troops to Ukraine. However, Poland has been supporting Ukraine right from the start of the attack of the Russian Federation on Ukraine. We have been supporting Ukraine.
What a HOD. Bruh. Look who the fuck it is.
And joining us now, Kevin Hassett, White House National Economic Council Director.
From a long time ago, though.
Joe, good to see you. Morning.
You love your job.
I do.
You tell me that all the time when I see you.
Yeah, it's the most fun there
President
Except
loves
this job, right? I mean,
we love this job. Yeah. President loves you in that position. He said that many times, even to the point where he said, I'd like him to be Fed chair, but I would miss him doing what he does now, going on TV and making the case for the Trump administration and the policy. So is it going to stay that way? I guess
we'll see. I don't think anything's final until it's final in the president's mind.
He told me last night that it was 3, they're all 3 good, but then it got down to 2, but actually it's down to 1. But I can't tell you who one is, but
he's gone from 1 to 5
Fireman's
to 3
ladder.
to 2 to 1 quite a few times.
Do you feel like you know what's going on now or no?
Yes, of course.
But you can
You'd have
tell
to
us.
kill us if you told us.
There's a divergence at the roof, and there's a divergence at the floor now.
How many times in the security framework the word tariff comes up? And I thought about it. That was going to be the recourse concerning Greenland. Now the recourse concerning Iran, to some extent, anyone who does business with Iran.
This shit is fucking burning on SPX.
And I thought about what Scott Bessent said in the interview I did with him the other day, that tariffs and security and economics are all inextricably linked. And the president needs that tool, which makes me think about the Supreme Court, once again, not deciding, and just all the issues swirling around the use of tariffs and the way President Trump has used them. He needs to be able to use them.
Right. Well, I mean, they're very, very effective. And it's actually interesting to dive into the economics of why they're effective. That if you think that U.S. consumers are going to bear the tariffs, then they wouldn't care. The foreign governments. But if they think that, like, the Chinese have inelastic supply to the U.S. and they're going to just keep dumping their stuff no matter what, then they really, really care about the tariffs. And so the fact that countries move so much when the president threatens tariffs says something about, like, who's bearing the tariff, right? If they're really upset about it, making lots of moves because of the president's tariff threats, that means that their people who study it know that it's not the U.S. consumers that bear it. And if you look at the CPI,
it may just mean that the U.S. consumer's not going to buy from them anymore.
Right.
And that's if you don't have a market to sell into because you've been priced out of that market.
Yeah, they might buy from the U.S. instead. And that's something that we've seen, actually, right, that the president brags about the trade deficit going down so much. So it is true that it advantages U.S. producers some. But again, inflation, there were a lot of predictions about inflation going up to the 3s and the 4s because of the tariffs. And the 3-month moving average at annual rate right now is like 1.5.
But it hasn't gone away. And we had Orzag on yesterday, and I mean, he was in the Obama administration, so
he's a good guy.
Take it for what it's worth. But he wants to bet me that it's going to be, that's coming. Tariffs are 4%.
Oh, you should take the bet.
I did. 4% for 2026.
Inflation,
4% for 2026. Because it's embedded somewhere, and it's been a while, and a lot of people have, I don't know, maybe it's been premature, maybe victory, mission accomplished about inflation has been declared too quickly, but we haven't seen it yet. Not very much, anyway.
Well, I mean, again, we've got data that have been very promising lately. But Peter Orzag, who's a great economist, is right that you need to see a lot more months of that before you really believe that you've killed the monster.
I was just going to on the tariff piece, though. You know, Christine Lagarde mentioned yesterday to me on a panel, and then also Ken Griffin also talked about how it was a regressive tax on the American consumer, and actually cited a new study. I don't know if you saw that study.
We've all seen it.
You've seen the
96 cents paid for, but yeah.
96 cents paid for by the American consumer.
Right. And that companies didn't eat it, foreign countries didn't eat it, that it. So the same people that don't like it are the same people that want to raise taxes on
all I'm saying is that real wages are up. They were down under Biden. The real wage is the W divided by the P. The P includes the tariff. And so wages are going up more than the cost of buying stuff. And that's exactly President Trump's point. So it's in the data.
But I'm just curious, you saw that study?
I've seen 3 or 4 NBER studies. Is this the one you're talking about?
I think one of them was, it just literally just came out about the 96 cents. And whether you think that's...
But these are the guys who have been modeling that we're going to have runaway inflation, that we're going to have stagflation and so on. So the economic models don't account for things like what we're talking about, like the fact that for geopolitical reasons, countries decide that they want to capture a big chunk of the U.S. market, so they have leverage over us, like the rare earths. So where in that paper is the rare earth being modeled?
What
the answer is
I gleaned from it and talked to the Treasury Secretary about it was that the thrust was that the countries and the companies abroad that were exporting here have gone to other places. They didn't eat the tariffs by continuing to sell to the United States. They went elsewhere. But if you think about what that means that the domestic supply chain, that it is changing behavior. Which is what the end.
But again,
trying to do in the first place.
In the end, the final score, right, is what's in the data. And I think one of the reasons why there's some, like, I don't know if you saw the interaction between Lutnick yesterday and Al Gore, but the ideologues in this space are really, really upset that the tariff policies are working because the data are, in the end, it depends on the final score. The final score really is what happens to the real wage of ordinary Americans. And it went up a lot under President Trump before, and he introduced tariffs, and it's going up a lot now.
By the way, we were not at that event. Can you tell us exactly what happened? We've read different pieces of it, but since you were there, what did you see?
I was not there. I got a readout, but I just heard that someone was inappropriately booing.
But Al Gore used to be the belle of the ball here now. Kevin, everybody here, all the former, climate hysterics, are the ones saying we need energy for the data centers. Bring it on. Bring on the coal. Bring on the fossil fuel. It's like the C word has not. I'm talking about climate. The C word has not been mentioned here.
this has been a radically different Davos than anything you've ever seen. And I think it's really good for Davos that a lot of people are coming in with differing views.
Al's lost.
No, I need some water.
Like muttering to
Give me
himself.
2 minutes.
I'm irrelevant. I mean, it's sad.
Yeah, but read the transcript aloud from what Howard said. I heard it was pretty entertaining.
It must have been entertaining. I was going to, what you didn't do was just check off what happened in the last year, good things in the United States. We've heard it a few times. We've heard it from the president, we've heard it from the Treasury Secretary. But
just give us your thought on Rick Rieder, though, because he's the guy. If it's not you, it sounds like he could be him. Well, you kept saying the Kevins, and now it sounds like maybe the Kevin or Rick.
I've been friends with Rick for a long time. He's the best bond guy.
Do we need a guy who?
But the president's going to make
the president did say guy, and he said, and it is a guy. So he said, I'm not misleading. But do we need someone that lets the economy run hot and doesn't worry about rekindling inflation?
We need an independent person who respects the mandates.
But like Greenspan.
And I don't think we've had, like Greenspan, but I don't think we've had that now. And I think the running hot point is really, really important because I was with Greenspan as a young guy, as a staffer at the time, but he saw the computers coming and he said, oh, well, that's like a supply shock, so you could have high growth and it's not going to cause Phillips curve type things that mean we need to hike rates. And so he let the economy run hot without causing inflation because he recognized why the economy was hot. And what I believe now, whoever's the Fed chair, is that the economy's really hot. I think we might end up with 2 quarters in a row above 5 now, right? We really might. And if that happens, then that's a hot economy, but inflation is not taking off. And so it's obvious because productivity is in the 4s right now because of AI and the data centers. And so it looks very, very much like the 90s to me right now. And so I think that the Greenspan judgment would be appropriate now. But then again, you got to watch the data. And if the data start, looking like Peter Orszag suggested to you they would, then you got to do something about it.
All right, Kevin has it.
It's good to see you guys. Stay warm. Stay warm. Yeah.
Did you ever take a nap yesterday? I don't think Trump did. I don't know. I needed one.
We got in late, as you heard.
Thank you.
Well, this is some bullshit. The bulls are pushing it to the fucking max. With some sort of shit.
Time now for Options Corner. Joining us today, a deeper look at this chart is Rick Ducat, lead market technician. All right, this was the outperformer last year among the Mag 7. What trends do you notice in this chart?
Yes, holding up quite strong still, outperforming its own communications sector, not tech as you may think here, but also the S&P to a large degree. Google up about 65.5% during the past year. And kind of as you said as well, showing notable outperformance versus its Mag 7 rivals here, a similar outperformance figure here with the Mag 7 up about 8.3% as a group. When we do look at the chart for Alphabet more specifically here, a rising wedge type shape is prevalent as we approach kind of the conclusion of January here, heading into earnings in early February. We saw highs at 340.49 here, but we've backed off somewhat. During the past couple of sessions, we dipped below this trend line here. You can see that even though we did manage to retest that level during the past couple days, we haven't really made a convincing push back into that boundary of that trend line and that overall pattern there. Some horizontal levels that stand out, as we said, near about 340. Then here near 292, that was some old highs here. We never quite retested that area as well during our downward phase there, so that remains a level of support to keep in mind. We can see now as well we are between our 2 moving averages that we follow, our blue 5-day weekly EMA, our teal monthly 21-day EMA at about 328 and 322 respectively as of yesterday's close. RSI interrupted. We did see some bearish divergence here. We have fallen out of that overbought area and our green trend line has been broken along with price. When we look at our volume profile study, we can can see that the heavy trading areas that stand out are roughly here, which is around where we bottomed out near about 320. That's the level that most of the trading is concentrated around. And then down here near about 280 or so, that's another standout level. Finally, looking at our options expirations here, our February 20th expiration, about 29 days out, about 8% or 8.8% plus or minus expected move during that time.
Okay, thank you, Rick. Now to take us through an example trade, we've got Tom White, co-host of Fast Market and
Good morning, everyone. It's really nice to be back here in Congress Hall. Hopefully everybody had a good day yesterday and are enjoying it today. It is my real pleasure to introduce Jensen Huang, who is somebody I admire, somebody I've watched, and somebody who has been a teacher to me on the journey of learning about technology and AI.
This shit was yesterday. Apparently, he said something really bullish on the video.
And I don't measure myself on comparisons, but I like this one comparison. So since NVIDIA has been public, which was in 1999, same year as BlackRock.
What a coincidence.
Oh boy. Okay. Now.
What?
NVIDIA's total return for its shareholders has been a compounded 37%. Just think about that. What would that mean to every pension fund if they invested in NVIDIA as an IPO? The amount of successes we have with everybody's retirement. At the same time, BlackRock's annualized total return has been 21%. Not so bad for a financial services company, but it certainly pales, and so that is just a really great indication of Jensen's leadership, the positioning of NVIDIA, and also it is a great statement about what the world believes in the future of NVIDIA. So Jensen, congratulations on that journey, and I know we have many more years of that journey ahead of us.
Thank you. I appreciate that. My only regret was at the IPO, after the IPO, I wanted to buy my parents something nice. And so I sold NVIDIA stock at a valuation of $300 million. The company was at a valuation of $300 million, and I bought them a Mercedes S-Class. It is the most expensive car in the world. They regret it.
Do they still have it?
Oh, sure. Yeah, they still have it, yeah.
Good. Let me go into the subject matter now, but I just want to say, the debate on AI is about how it's going to change the world and the global economy. Today, I want to talk about how AI can add to the world economy and how AI can increasingly become a foundational technology that everyone in this room can be utilizing, enhancing our lives, enhancing the lives of everyone in the world. And we need to talk about how it's going to reshape productivity, labor, infrastructure across virtually every other sector. But importantly, how it's going to reshape the world, and how can more segments of the world benefit from AI. And how can we ensure that we have a broadening of the global economy, not a narrowing of the global economy? And I can't think of another person who has a clearer view on not just what AI is, but the infrastructure around it, the infrastructure that is necessary to build around it. And because so many of the major hyperscalers are utilizers of what NVIDIA creates, and the whole engagement around the infrastructure around AI, the potential of AI, I think we have a great voice to listen to this afternoon or this morning. So Jensen, once again, thank you. This is his first time here at the World Economic Forum in Davos, and I know you have a really busy schedule, so it's, thank you for taking that time.
I appreciate that.
So let me go right into it. Why do you believe that AI has the potential to be that significant engine of growth? And what makes this moment, this technology, different than past technology cycles?
Yeah, this is, first of all, when you think about AI and you're interacting with AI in all these different ways, ChatGPT, of course, using Gemini, of course, using Anthropic, Claude, of course, and the magical things that it could do, it's helpful to reason back to the first principles of fundamentally what is happening to the computing stack. This is a platform shift. A platform
Tesla's
is
running.
Where applications are built on top of. And this is a platform shift like the platform shift to PCs. New applications were developed to run on a new type of computer. Platform shift to the internet, a new type of computing platform, hosted all kinds of new applications. A platform shift to mobile cloud. In each and every one of these platform shifts, the computing stack was reinvented and new applications were created. This is a new platform shift in the sense that today you're using ChatGPT. It's important to understand that itself is an application, but very importantly,
why does he sound like AI?
Applications will be built on top of ChatGPT.
I have a headset on, it's hearing from my left and the right.
Anthropic Claude, for example. And so it's a platform shift in that way. AI is really easy to understand if you realize what it can do that you could never do before. Software in the past was effectively pre-recorded. Humans would type and describe the algorithm or the recipe for the computer to execute. It was able to process structured information, meaning you've got to put the name, the address, their account number, their age, where they live. These structured tables that software would then go and retrieve information from. We call it SQL queries. SQL is the single most important database engine the world's ever known. Almost everything ran on SQL before now. Now we have a computer that can understand unstructured information.
Actual cup and handle on Tesla.
It could look at text and understand
no
it.
Cup and handle on NVIDIA.
It could listen to sound and understand it. Understand the meaning of it, understand the structure of it, and reason about what to do about it. And so, for the first time,
IWM testing all-time highs at HOD.
But it's processed in real time, meaning that it's able to take the context of the circumstance, whatever the environmental information, the contextual information, and whatever information you give it, it could reason about what is the meaning of that information and reason about your intent.
Holy
which
fuck.
Could be described in a really
Why does this shit sound
way.
so like AI?
You describe it however you want to describe it.
Is it not me vibrating for you guys?
But you describe it however you like to describe it, and to the extent that it can understand your intention, it could perform a task for you. Now, the important thing
oh my god,
about
what he's
this
saying
is
scared
that
the shit out of me.
reinventing that entire computing stack, the question is, what is
AI already in the market? Man, I don't even know. I'm
AI,
scared.
you think about the AI
Probably.
models. But it's really important to understand industrially, AI is actually essentially
AI.
a
I want a part
cake.
of it. I want to be AI.
At the bottom is energy.
I don't want to be AI.
AI, because it's
I want
in real time, and
AI
it
robot
generates
deduction.
intelligence in real time. It needs energy to do so. Energy is the first layer. The second layer is the layer that I live in. It's chips. Chips and computing infrastructure. The next layer above it is the cloud infrastructure, the cloud services. The layer above that is the AI models. This is where most people think AI is. But don't forget that in order for those models to happen, you have to have all of the layers underneath it. But the most important layer, and this is the layer that's happening right now, the reason why last year was an incredible year, frankly, for AI, is that the AI models made so much progress that the layer above it, which is ultimately the layer that we all need to succeed, the application layer above that. And so this application layer could be in financial services, it could be
Jensen
in
Huang,
healthcare,
the
it could be in
godfather of AI.
This layer on top ultimately is where economic benefit will happen. But the important thing, though, because this computing platform requires all of the layers underneath it, it has started, and everybody's seeing it right now, it has started the largest infrastructure build-out in human history. We're now a few $100 billion into it.
That's it.
We're a few $100 billion into it. Larry and I, we get the opportunity to work on many projects together. There are trillions of dollars of infrastructure that needs to be built out, and it's sensible. It's sensible because all of these contexts have to be processed so that
we just set a new
the models
HOD.
can generate the intelligence necessary.
Let's
to
see if there's a
power
pullback with barely
the
any cycle
applications
confirmation.
that ultimately sit on top. And so when you go back and when you reason about
IWM just set an HOD.
you realize that the energy sector is now seeing extraordinary growth. The chip sector, TSMC just announced they're going to build 20 new chip plants. Foxconn working with us and Wistron and Quanta building 30 new computer plants, which then go into these AI factories. So we have chip factories, computer factories, and AI factories. All
NVIDIA dumping, market pulling back.
And memory, right, exactly. Those chip
Bears are
fabs,
trying.
Micron has started investing $200 billion in the United States.
NVIDIA's
SK
pulling
Hynix
back.
is doing incredibly. Samsung is doing incredibly.
IWM HOD and rejection just now. I don't know what the fuck this is doing.
And now, of course, we pay a lot of attention to the model layer, but it's really exciting that the layer above them is really doing fantastic.
Crazy with this shit.
One indicator is where the VC funding going into. Last year, 2025, was one of the largest years in VC funding ever, and last year, most of the funding went to what is called AI native companies. These are companies in healthcare, they're companies in robotics, and company in manufacturing, financial services, all of the large industries in the world. You're seeing huge investments going in to those AI natives because for the first time, the models are good enough to build on top of.
So let's just dive a little further. Obviously, everybody, I'm sure, uses their own chatbot and getting information.
Tesla just in its own world. Tesla just in its own world after the Elon speech, but only after.
Let's talk about go into a little more upside ideas related to the dispersion of it in the physical world. You mentioned, obviously, healthcare is a great example of that. But where do you see the transformational opportunities in areas like transportation or science?
Well, last year, I would say last year, I would say three major things happened.
They're cycle
in
confirming
in the
before
AI
anything
technology layer, the model layer. The first one is that the models themselves started out being curious and interesting, but they hallucinated a great deal. And last year, we can all reasonably accept that these models are better grounded. They could do research. They can reason about circumstances that maybe they weren't trained on, break it down into step-by-step reasoning steps, and come up with a plan to answer your question, do your research, or perform the task. So last year we saw the evolution of language models becoming AI systems that we call agentic systems, agentic AI. The second major breakthrough is the breakthrough of open models. Several years ago, was it a year ago, DeepSeek came out?
Last year.
And DeepSeek was, a lot of people were quite concerned about it. Frankly, DeepSeek was a huge event for most of the industries, most of the companies around the world, because it's the world's first open reasoning model. Since then, a whole bunch of open reasoning models have emerged, and open models has enabled companies and industries, researchers, educators, universities, startups, to be able to use these open models to start something and create something that's domain specific or specialized for their needs. The third area that had enormous progress last year was the concept of physical intelligence, of physical AI. AI that understands not just language, but AI understands, if you will, nature. And it could be AI that understands the physical world here, AIs that understand proteins, chemicals, physics, for example, fluid dynamics, particle physics, quantum physics, AIs that are now learning all these different structures and different languages, if you will. Proteins is essentially a language. And so all of these AIs are now making such enormous progress that these industrial companies, whether it's manufacturing or drug discovery, are really making great progress. And one of the great indicators is a partnership that we had with Lilly that they realize now that AI has made such extraordinary progress in understanding the structure of proteins and the structure of chemicals, essentially being able to interact and talk to the proteins like we talk to ChatGPT.
This is crazy.
You're see some great big breakthroughs.
Smiley face, but the other way.
So all these breakthroughs raises concerns about the human element. You and I have had many conversations on this, but we need to tell the whole audience there is a huge concern that AI is going to displace jobs. And you've been arguing the opposite. Obviously, the build-out of AI, as you talked about, the biggest infrastructure build-out in history is going to occur, which
energy is creating jobs. The chips industry is creating jobs. The infrastructure layer is creating jobs. Land, power, and shell. Jobs. I mean, right? It's incredible.
So let's get into a little more detail. So you actually believe we're going to face labor shortages. And so how do you see that AI and robotics changing the nature of work rather than eliminating it?
Yeah, there's several different ways that we could think through it. First of all, this is the largest infrastructure build-out in human history. That's going to create a lot of jobs. And it's wonderful that the jobs are related to tradecraft. And we're going to have plumbers and electricians and construction and steel workers and network technicians and people who install and fit out the equipment. And all of these jobs, in the United States, we're seeing quite a significant boom in this area. Salaries have gone up, nearly double. And so we're talking about six-figure salaries for people who are building chip factories or computer factories or AI factories. And we have a great shortage in that, and I'm really delighted to see so many people in so many countries really recognizing this important area. Everybody should be able to make a great living.
He did not include the plumbers in that
statement. The second thing to realize, and so we theorize about the automation of tasks and things like that, and what is the implication to jobs. I'll just offer some anecdotes.
If anyone had to be told that.
These are real-world anecdotes of what has actually happened. Remember, 10 years ago, one of the first professions that everybody thought was going to get wiped out was radiology. And the reason for that was the first AI that became superhuman in capability was computer vision. And one of the largest applications of computer vision is studying scans by radiologists. Well, 10 years later, it is true that AI has now completely permeated and diffused into every aspect of radiology. And it is true that radiologists use AI to study scans now. The impact is 100%, and the impact is completely real. However, not surprisingly, I say not surprisingly, if you reason from first principles, not surprisingly, the number of radiologists have gone up.
Is that because of lack of trust or is that because the human interaction with the results of AI is a better outcome?
Exactly. The reason for that is because a radiologist, the purpose of their job is to
Why did that start?
Disease.
There's only one reason.
To help
to start some shit.
Diagnose disease. That's the purpose of their job.
There's only one reason. To fuck on the hope up there and to start something.
Scans now infinitely fast allows them to spend more time with patients, diagnosing their disease, interacting with the patients, interacting with other clinicians. Well, surprisingly, also not surprisingly, actually, as a result of that, the number of patients that the hospital can see has gone up because there are a lot of people waiting a long time to get their scans done. And so now, because the number of patients have gone up, the revenues of the hospital has gone up, they hire more radiologists. This is the same thing that's happening to nurses. We're 5 million nurses short in the United States. As a result of using AI to do the charting and the transcription of the patient visits, nurses spend half of their time charting. And now they could use AI technology, and one particular company, Abridge, they're a partner of ours doing incredible work. As a result of that, the nurses could spend more time visiting patients.
Human touch.
That's right. And because you can now see more patients, and we're no longer less bottlenecked by the number of nurses, more patients could get into the hospital sooner. As a result, hospitals do better, they hire more nurses. And so, surprisingly,
all right, what the fuck candle was that? Bond?
Not surprisingly, AI is increasing their productivity. Shit? As a result, the hospitals are doing better. They want to hire more people. You have too many people waiting too long to get into hospitals. And so these are two perfect examples. Now, the easiest way to think about what is the impact of AI on a particular job is to understand whether the job, what is the purpose of the job, and what is the task of the job. If you just put a camera on the two of us and just watched us, you would probably think the two of us are typists because I spend all of my time typing. And so if AI could automate so much word prediction and help us type, then we would be out of jobs. But obviously that's not our purpose. And so the question is, what is the purpose of your job? In the case of radiologists and nurses, is to care for people. And that purpose is enhanced and made more productive because the task has been automated. And so to the extent that you can reason about each one of the people's purpose versus the task, I think it's a helpful framework.
Let's move this beyond the developed economies. Help me understand how AI is going to broaden the world and help the world. I read an Anthropic piece this past weekend. It basically said the utilization of AI most recently is very dominant by the educated society. And they're even seeing the educated component of each society being heavily more utilized. And obviously, they're using it against their own model Claude. So it may have its own
if it rejects, it's even stupider.
So how do we ensure that AI is a transformational technology, maybe like what Wi-Fi and 5G was for the emerging world? And when you intersect that, what does it mean for the emerging world? And John, how do we broaden the global economy? And two, getting back to the whole job situation with robotics and AI, there is going to be some substitution there. And there's substitution in the United States already going on.
HOD, IWM rejecting
more
going.
Plumbers and electricians, but we probably
Makes
need
no sense.
less analysts.
Tesla rallied, EQ went higher, spike candle, the SPX, spike candle, NVIDIA flipped up, IWM going lower. This shit makes no fucking
pivot on
sense.
to the emerging world for a second, in the developing world.
What the actual fuck is going on?
Well, first of all, AI is infrastructure, and there's not one country in the world. I can't
fucking VWAP.
That you need to have
I want it done in 15 minutes.
Infrastructure, because every country has its electricity. You have your roads. You should have AI as part of your infrastructure. Of course, you could always import AI, but AI is not so incredibly hard to train these days. And because there's so many open models, these open models with your local expertise, you should be able to create models that are helpful to your own country. And so I really believe that every country should get involved to build AI infrastructure, build your own AI, take advantage of your fundamental natural resource, which is your language and culture, develop your AI, continue to refine it, and have your national intelligence be part of your ecosystem. And so I think that's number one. And number two, remember, AI is super easy to use. It is the easiest software to use in history, and that's the reason why it's the fastest growing and most rapidly adopted. I mean, in just a couple of 2-3 years, it's coming up to almost a billion people. I think, first of all, Claude is incredible. Anthropic has made a huge progress, huge leap in developing Claude. We use it all over our company. The coding capability of Claude, its reasoning capability, its ability is just really incredible. And anybody with a software company really ought to get involved and use it. On the other hand, ChatGPT is probably the most successful consumer AI in history. And its ease of use and its approachability, I think everybody should get involved. And whether it's somebody in a developing country or a student, it is very clear that it is essential to learn how to use AI, how to direct an AI, how to prompt an AI, how to manage an AI, how to guardrail the AI, evaluate the AI. These skills are no different than leading people, managing people, things that you and I do all the time. So in the future, instead of biological, carbon-based AIs, in the future we're also going to have digital versions of AIs, silicon versions of AIs, and we'll have to manage them. They're just part of our digital workforce, if you will. And so I would advocate that for the developing countries, build your infrastructure, get engaged in AI, and recognize that AI is likely to close the technology divide.
Right.
Because it is so easy to use and so abundant and so accessible. And so, I'm actually fairly optimistic about the potential of AI to lift the countries that are emerging.
Someone said,
for many people
dumping.
who haven't had
Someone said, here comes the boom.
All of you can be programmers now.
Boom up, boom down,
so
where?
In the past, we had to learn how to program a computer. Now you program a computer by saying to the
Show
computer,
me.
how do I program you? And if you don't know how to use an AI, just go up to the AI and say, I don't know how to use an AI. How do I use an AI? And it would explain it to you. And you say, I like to write a program to create my own website. How do I do that? And it would ask you a whole bunch of questions about what kind of website you would like to build, and then write you the code. And so it is that easy to use.
At the roof.
And that's, of course, the incredible power of AI, which is exciting.
Two quick questions, then we're going to run out of time. We're sitting here in Europe. When we were talking about a lot of companies, we mentioned a lot of U.S. companies and Asian companies. Talk to us about how AI and the success of Europe and the future of Europe can intersect, and how do you see NVIDIA play that role here in Europe?
Well, I have the benefit. NVIDIA has the benefit of working with every AI company in the world, and because we're low in the infrastructure layer, and we power AI across the board, and we power AI that are languages, their biology, their physics, their world models, and related to manufacturing and robotics, and the thing that's really quite exciting for Europe is, remember, your industrial base is so strong. The industrial manufacturing base in Europe is incredibly strong. This is your opportunity to now leap past the era of software. The United States really led the era of software. AI is software that doesn't need to write software. You don't write AI, you teach AI. And so get in early now so that you can now fuse your industrial capability, your manufacturing capability with artificial intelligence, and that brings you into the world of physical AI or robotics. Robotics is a once-in-a-generation opportunity for the European nations.
It's all up to IWM.
Whether it's, all of the countries that I visit here, industrial base is really, really strong. The other thing to realize is that so much of the deep sciences are still very, very strong.
VWAP is fucking right there. Come on,
the deep
fuck.
Now have the benefit of applying artificial intelligence to accelerate your discovery. And so
$1 would change so fucking much for me. Oh my god, this is literally right where my fucking shit is on SPX.
So that you could invest in the infrastructure layer, so that you could have a rich ecosystem of artificial intelligence here in Europe.
Damn.
So what I'm hearing is we're far from an AI bubble. The question is, are we investing enough?
$2 would fucking change everything. The dollar would change everything. Like it's just
a bubble. But the question is, what I'm hearing from you is, are we investing enough?
115
to do what we
times.
need to do to broaden the global economy.
And so one good test on the AI bubble is to recognize that
they're going
NVIDIA
lower.
has now
115 times.
Millions of NVIDIA GPUs in the cloud.
Thank God.
We're in every cloud.
I was about to fucking panic.
And
Come on,
if you try
man.
to rent an NVIDIA GPU these days, it's so incredibly hard. And the spot price of GPU rentals is going up.
IWM
Not just the
rejecting
latest
on the
generation,
downward trend
but
line or
two-generation
whatever this
old
shit is.
GPUs. The spot price of rentals are going up. And the reason for that is because the number of AI companies
Time
that
is
are being
115.
created, the number of companies shifting
Divergence
their
at the
R&D budget.
roof.
Lilly is a great example. 3 years ago, most of their R&D budget, all of their R&D budget, was probably wet labs. Notice the big AI supercomputer that they've invested in, the big AI lab, increasingly that R&D budget is going to shift towards AI. And so the AI bubble comes about because the investments are large. And the investments are large because we have to build the infrastructure necessary for all of the layers
Trying
of
to
AI
slow my
above
breathing
it.
down.
And so I think the opportunity is really quite extraordinary. And everybody ought to get involved. Everybody ought to get engaged. We need more energy. I think that we all recognize that. We need more land power and shell. We need more trade skill workers. And in fact, that population of workforce is so strong here in Europe. Yes. In a lot of ways, the United States lost that in the last 20, 30 years, but is still incredibly strong here in Europe. It's an extraordinary opportunity you ought to take advantage of. And so I would, I know that where
There may be some
Larry
sort
and
of
I
purple
work,
box here happening.
we see the investment opportunities and the investment scale is going up. The number of startups, as I mentioned earlier, that last 2025, the largest investment.
Please fucking reject.
In VC history.
Come on.
Over $100 billion.
I know you can do it. Market. Purple box, break it down.
So
Come on.
AI companies are building basically the application.
Remember that 105 spike? It's making a fucking box here.
And go build this future.
And I actually believe it's going to be a great investment for pension funds around the world to be a part of that, to grow with this AI world. And this is one of my messages as so many political leaders. We need to make sure that the average pensioner, the average saver,
all these bulls here.
Part of that growth. If they're just
Bulls are in
watching
danger.
it from the sidelines,
Bears are coming.
They're going to feel left out.
And we
bearish.
want to invest in infrastructure.
Right.
Infrastructure is a great investment opportunity. This is the single
VWAP would be 3/3.
largest infrastructure build-out in human history. Get involved.
We're out of time. Hopefully everybody in the audience and everybody on the web streaming is seeing the power of
Algo range
Jensen
is
Huang
trying.
as a leader, not just a leader in
Time is
technology and
120.
AI, but a leader in business and also a leader in
This is crazy.
heart
115 is
and soul,
algo ranging.
which is really
120
important
is
to
going lower than
having that
120.
leadership from the heart and the
115.
soul. So thank you, everyone.
Thank you, everybody.
Previous high today testing. Wow, we watched that whole fucking 40-minute, 30-minute video. Thank you for sitting through that and watching it with me. Jensen Huang, godfather of AI, had to listen.
Let's check the markets. We are rallying yet again across the board, and we're trying to get back to 49.5 on the Dow. S&P is back above 6,900 as well, so you have a pretty good start, and there's the Russell. And that's been a huge story so far this year. And if you look at the markets today, and you look at the markets yesterday, it is almost as if Tuesday's Trump tariff tantrum, the sequel, never happened. The S&P was at 69.40 before that big decline on Tuesday. It hit about 69.30 today, intraday high. We're a little bit below that, obviously, now, but the Dow has turned positive for the week. We have a framework, in quotes, whatever that is, we don't know. But it's good enough for the markets to look like they do over the last 2 days. This sizable rebound. What do you make of this?
Yeah, so I was on the show very quickly after that series of Greenland-related Truth Social posts. And my comment was like, haven't we been doing this for 15 years? Do you honestly need to be told, don't react to the first tweet or maybe even the second? Just like take a beat and let the market digest. It's mostly algos trading that stuff. Why would you join the algos? They're playing a different game than you. That turns out to have been sage advice. The S&P 600 small cap index is the bell of the ball year to date. Up to the first tweet, or maybe even the second. Just like take a beat and let the market digest. It's mostly algos trading that stuff. Why would you join the algos? They're playing a different game than you. That turns out to have been sage advice. The S&P 600 small cap index is the bell of the ball year to date, up 8% versus just 0.5% for the S&P 500. I absolutely love this tape. I know Jenny does. I know Jim does, because it has nothing to do with data centers. Literally nothing. What's happening this year is really exciting. You've got transports in the lead. When was the last time we've been able to say that?
Like, what did he
You've got the small cap trade working, which touches a whole host of sectors that, again, are not data center related. And you still have semis doing well. And now you have energy has decided to wake up. And again, a lot of these were areas that were left behind last year. A lot of them are underowned. A lot of them are lower multiple, have tons of room to run. And that's without even knowing what the earnings will be in Q4. They haven't even reported yet. Right. But the multiple is lifting because people are looking elsewhere from Oracle and Microsoft. They want to do something else.
It is January 22nd, and the Russell 2000 is up 10% year to date. That's unbelievable. The transports, which Josh was talking about, which Ed Yardeni is writing about today, by the way, he'll join us on Closing Bell today, so you'll hear more from him on his outlook for the markets. Only 4% away from its previous high, which was on March 30th of 2022. If you believe, of course, in Dow theory, then this transports breakout is very significant. This is, in many respects, what it was last week. The idea of a run-it-hot economy. That's why we asked you, and we talked about, in the face of that big decline on Tuesday, whether you should ignore the noise and focus on the fundamentals. The fundamentals that David Solomon, who runs Goldman Sachs and was with our Squawk Box team in Davos this morning, said are this.
I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. We're set up for that. That might not happen. A bunch of exogenous things could soften it, but I think we're set up with a better possibility for that than we've had in quite some time.
That seems to be the view. Charlie Scharf, CEO Wells Fargo, says the same. It's more likely than not that growth will be stronger than people expect, which is why the sector sort looks like this. Materials up 9.25% to start the year. Energy up 9%. Industrials up 7%. It coincides with what the Russell, Jenny, is doing as well as the run it hot and tune out the noise continues.
Right. So to Josh's point before, yeah, I'm loving this market this year. It's a lot of fun, but I look at it cautiously too. And so if we're going to go back to the beginning of your comments, Scott, and focus on transports, I just think it's interesting because when I look at our transport holdings, we've got JetBlue, XPO, Uber, and UPS. None of those companies have anything actually in common with each other than maybe that oil, gasoline is a large input.
I think IWM is leading the market right now.
As a much broader market rotation.
Well, they do have something in common. They're all reliant on a good economy. A good economy, and even better than what people thought, like the Solomon Scharf perspective, helps a UPS, it helps an Uber, it helps a JetBlue, and it helps XPO.
But you know what? We had a great economy last year, and those guys totally
We're going to have better growth than we did.
Okay. Point is, they completely lagged last year, so even with a good economy, and they do need that, they did nothing last year. So this is just more to me like a comment on market rotation, a comment on people changing their positioning. It's interesting. I mean, you take like a UPS, for example, right? It's down 17% over the last 12 months. It's up 11% year to date. And you look out on that, and okay, it trades at 15 times earnings, but the earnings growth for UPS isn't amazing. It's just not terrible. And it's in the middle of a transition. People are finally giving the middle of a transition some like positive hope rather than you're not AI-centric, we're ignoring you. So it's just this kind of like thematic thing that I'm seeing across the portfolio, across the market. To me, it's encouraging. I like the breadth. Everyone does well if it's a positive economy. It's nice to see these guys participate.
Yeah. Care. We're at 49,500 on the Dow. So again, we said we're back positive on the year. And we haven't gotten everything back from Tuesday, but we are working our way with it, towards that direction.
So here's a comment that I think is relevant to a discussion of indices. The S&P has 40% weight in a handful of big cap tech names, tech and communication service names. One of them, NVIDIA alone, which is as large in terms of market cap of the 300 smallest names in the S&P 500. If you go from number 201 to 500, all of them fit into NVIDIA. So those $8 trillion worth of market cap can move a lot if you get a few points that come out of Meta or Microsoft, which has been happening, or NVIDIA over the past few months. That can really push up hundreds of names that are outside of the, $1 trillion or $100 billion club, which is a great thing for people who have broadened their investments, have diversified.
That's why candle
their
trading,
portfolio, like the
candle
people on
traders
this
get
desk.
got in the market.
What you might find is that the S&P does very little this year, but these other
there's setups on
indices
NVIDIA
do a lot.
and
They
Tesla
can be double digits. They could be up 20%, and you could have the S&P up 2%.
Don't you think it's interesting, Jim, if you look at over the last 12 months, okay? The Russell slightly beats everything. The Russell's up 18.6% over the last 12 months. In this age and era of AI, where everything seemingly is about that, where that trade, for better or worse, has dominated a lot of the conversation and a lot of portfolios. But that's pretty remarkable when you think about that fact that over the last year, the Russell's up almost 19% and it beats everything else.
Yep. And Scott, and we all know that the market likes to anticipate. It always anticipates. So what is it anticipating? It's bluntly anticipating much better growth in earnings from small caps. And by the way, the other 493 stocks outside of the Mag 7, much better growth rates than we've seen over the last 3 years. And frankly, we're going to see a deceleration of the AI stocks earnings growth rates. That's the signal. You talked earlier about noise. There's a lot of noise out there. For fundamental investors, earnings is the signal. Now, I'm not saying, by the way, that the AI stocks are going to have lousy earnings, but if you take a look just as an example at Alphabet, it more than doubled its net income and earnings per share over the last 3 years. It's really hard to keep that pace of growth going. So it and the rest of the AI stocks may do 15 to 20% earnings growth this year. But guess what? The other sectors, financials, industrials, maybe even energy, are starting to pick up to match that in the projections by the second half of this year. And that, Scott, is why I think the small cap sector, and by the way, the RSP also, is outperforming.
We closed the S&P last Friday at 69.26, pretty much where we are right about now, as the S&P has managed to erase some losses for the week amid some of the drama, especially regarding trade and Greenland and Davos. Dow up about 450 here. VIX still very well behaved below 16, even though bond yields have been pretty sticky in the wake of some economic data today. Meantime, a top-ranking Chinese AI startup limiting access to its coding agent due to high demand. The company says users from both the S&P has managed to erase
1.28%. Dow, NASDAQ composite up 1%. Dow up 0.9.
Some losses for the week amid some of the drama, especially regarding trade and Greenland and Davos. Dow up about 450 here. VIX still very well behaved below 16, even though bond yields have been pretty sticky in the wake of some economic data today. Meantime, a top-ranking Chinese AI startup limiting access to its coding agent due to high demand. The company says users from both China and the U.S. both flooded the site. Our Deirdre Bosa has more on that in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So this is really the first clear signal that Chinese AI models, they're not just catching up on quality, but they're pulling real coding demand from U.S. developers, enough to hit compute limits. Like DeepSeek before, Jipu AI was largely unknown here until recently. Now it is showing signs of a similar breakout. In just the past few weeks, it's gone public in Hong Kong. It's released a major new model, which it says was trained entirely on Huawei chips. And now its coding assistant seems to be having a viral moment. In an email, the company tells us that online traffic has jumped fivefold and calls the subscription cap a protective move to maintain performance for existing users. Now, the most striking detail, Jipu says that the user base for its coding plan is primarily concentrated here in the US and in China. That was surprising to me, so I checked in with a few sources here who confirmed the model's presence in the U.S., one telling me the model is gaining popularity, and it's very good on agents and coding, certainly enough to be in the mix. Now, Jasmine and I tried it out
Are we going to have a
asking
deep seek
Jipu's
part 2 over the
chatbots, make an app
weekend?
that tracks the top public companies in Hong Kong by market cap,
Shit.
notifications when the list changes. Here's what we got from just one prompt.
Remember the name,
this also
folks.
highlights how open source is
Jipu
becoming China's
AI.
edge in
Look
AI.
at fucking
Jipu,
IWM.
like DeepSeek, it's using open models
Finally found some
as a
sort of support,
distribution
some
strategy
sort of something.
because they're
up or
cheaper
down.
to
Finally
run, they're
found some
easier to
sort of stability
customize,
somewhere.
and they're harder to be cut off from. So you do see many
Jipu.
startups using them. And even though people like Anthropic CEO Dario Mode, he's playing
That
down
kind
the
of
China
got
threat.
that kind of got me
Davos,
fucking
he just
feeling
did that the
okay.
past
Jipu's
day.
AI
I mean, look at the
DeepSeek
leaderboard
like
for open
breakout.
source AI models. 7 of the top 10
This is
are
my
Chinese.
only fucking hope on the
and
video.
on
Fuck.
coding across open and
Fuck.
closed source, China
Fucking
is catching
news
up.
gonna help to set up? I
DLM
don't know.
4.7,
But now
that
it's
is
fucking
the
news
Jipu model
hoping.
that I'm talking about.
Fuck.
It's now in 6th place. Another Chinese model
Jipu.
right behind it. Guys, we know how quickly these leaderboards can change, and the Chinese are moving very, very quickly.
Dee, I'm just thinking back to the market reaction when we first heard about DeepSeek back in the day. We've definitely gotten more mild reactions as time has gone on, right?
And bears
Absolutely,
are
and I
coming.
think that
This
there
is
was,
3/3
I mean, it
bearish.
shocked the market,
Sadly.
DeepSeek, but then a lot of folks wanted to write it off, say this was a one-off, and it didn't mean what everyone thought at first, that NVIDIA was going to become threatened by the rise of Chinese open source models. But I would say over the last year, that was almost exactly a year ago, we've just gotten a lot more breadcrumbs, really significant ones, from the Chinese AI labs and companies that shows that they are making real progress. So there's the model side, Carl, but there's also the hardware side. And I think that's going to be really interesting in the year ahead, the kind of progress that Huawei's making, but some of the upstarts that have recently gone public, like More Threads and Meta X. There's certainly something that investors here should have their eye on so they don't get surprised in another DeepSeek-like moment, which, you know, there's a few contenders for those.
Bosa, I got to say it's a big topic here as well, and really interesting to see Jensen Huang, who is here from NVIDIA, being hailed by the administration as our national champion versus China's Huawei.
Huawei coming up. Huawei chips coming up. It's doing it so damn slow. Trump said he had a good meeting with Zelensky at Davos. Really are killing puts into fucking clothes. We got the Prime Minister of Canada coming live. If anyone wants to watch that, 150 people watching jack shit. W formed. W. Still in the purple box. What a crossroad. What a crossroad. Oh my god, I thought that was Kamala for a second.
5, 6. Test, test. 1, 2. Ça marche, Chris? Dan? 1, 2, 1, 2. Test. Testing, testing. 1, 2. 1, 2, 3. 4, 5, 6.
This is Kamala Harris.
7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Good? Dan? Thank you.
This channel is so strong. Just making a new channel every single time on horizontal sloping. Break it down, man. It's not that much time. Time is 2 in 30 minutes. Like, oh my god. Fuck. 30 minutes. Time is 2. Delaying like crazy. This is IWM trying to bounce. Or is it? Or is it? Everything looking sus as shit. Paintball. Red light, green light, red light, green light. Has to be a 5-minute candle breaking above the purple box or breaking down below the purple box. Or they're just wasting time. Sweet time. It's holding. So crazy. It's no movement. Art class. See something. Just fall through. Let's see something at this point. Come on.
Hello, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is a microphone test. Essayez un test de la microphone de conférence presse. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Il y a quelqu'un qui a besoin d'un test? C'est bon? C'est bon? OK, parfait.
Okay, perfect. Alright, pull. This is making you feel bullish or bearish. Or nothing.
One, two, three, four, five,
bulls,
6, 1, 2,
folks.
3, 4, 5, 6. Ça, c'est un test de la microphone de la conférence presse. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Everybody good? Everybody happy? Yeah. I see thumbs up. I see smiles.
One person is bullish. 2 people are bullish. 3 people are bullish. 3 people are bearish. Nah, there's no nothing. You have to vote. Or don't vote. You don't have to vote. Nothing doesn't count. Three people voted bullish. 7 people voted bearish. Counting Dave and Captain. Buddha voted bullish, so 4 people voted bullish. Oh, no, you didn't. 3v. 3v9. 4v9. Bearish. I voted bearish. It's about fucking time. Let me eat. It's about some bullshit fucking time. Swipe my hands. I'm ready for the next candles. Slow breathing still. Like a motherfucking Navy diver. As David Goggins would put this. Dive, motherfucker! Dive! Dive, motherfucker! Who's gonna hold the boat? Nobody. Fucking dive. Who's gonna hold the boat? Dive. Dive. Man. As David Goggins would put this. What the helly? Nah, he would never say that. He would say, struggle, men, struggle. Who's gonna hold the fucking boat? Who the fuck is holding this boat? Oh my. Purple box again. 5-minute candle needs to, or not. 5-minute candle is. The MACD growing bearish on the 5. It can't go any lower. That you're telling me that's it? I refuse to believe it. I need another milk. I'll be back in a minute.
Ça fait longtemps. Merci. Alors, bonjour. Mes chers amis, chers collègues, mesdames et messieurs, cet endroit est chargé de souvenirs. Au XVIIIe siècle, 2 armées se sont affrontées ici dans une bataille.
Guys,
qui a
my dinner plans might
à
change from
jamais
Taco Bell
au
to
cours de
fucking
l'histoire de ce
Applebee's. Gourmet taco.
Lorsque la fumée s'est dissipée, les 2 commandants, Wolfe et Montcalm, gisaient mourants, leur destin lié même dans la mort. La Nouvelle-France était tombée. L'Amérique du Nord britannique était née. Il aurait été facile, voire prévisible, d'en rester là. Le scénario habituel de la conquête. Ouais. Les vaincus sont assimilés, le langue supprimée, le foi interdite, le loi remplacée.
Excusez-moi.
C'est ce que les conquérants ont fait pendant des
Habla español, habla inglés.
De la grande déportation des Acadiens, en passant par le rapport de Rome suite à la rébellion des patriotes, certains ont cherché à imposer ce modèle, l'assimilation, la logique habituelle de la conquête. Mais finalement, ce n'est pas la voie que le Canada a choisie. Et pourquoi? D'abord, grâce à la résilience des francophones. Une résilience parfois silencieuse, souvent combative, mais toujours déterminée à préserver une langue, une culture et une identité. Ensuite, par pragmatisme, les autorités britanniques ont rapidement compris qu'on ne gouverne pas durablement 70 000 habitants contre leur volonté. Surtout avec des colonies américaines instables au sud. Ainsi, tout au long de l'histoire de notre pays, des décisions ont été prises pour construire quelque chose de différent ici, ensemble.
Yeah, we need an L translation.
Cela n'a pas toujours été une ligne droite. Les progrès ont été réalisés à travers des tensions,
SPX put the call ratio has been sent now in the group.
Des échecs. Mais à plusieurs reprises, le Canada a choisi une voie différente. And from that choice, initially practical, even self-interested, something remarkable emerged.
Oh, there we go.
Not a myth, not a miracle, but a growing commitment that coexistence could make us stronger. That we can build an identity which not only respects our differences, but also celebrates them. Un projet audacieux.
Get the fucking
que
juices
deux
out.
peuples récemment ennemis, parlant différentes, pratiquant des religions différentes, vivant sous des traditions juridiques différentes, puissent partager un même pays et build it together.
Shows a lot of puts from 6, 9, 10, 6, 9, 20 to 6, 9, 30, 6, 9, 20 to 6, 9, 30 especially. Shows a lot of calls at 6, 9, 35 to 6, 9, 50.
Are constituted through history. In his words, the past is sedimented in the present, and our choices are shaped by what came before. Our country was built on the bedrock of three peoples: Indigenous, French, and British.
There's only 9 people looking at the SPX put the call ratio right now.
Ships sailed up the St. Lawrence. Indigenous peoples were the original stewards of this land.
I guess we can share a screenshot on the WhatsApp group.
Systems of governance that span the entire
on the YouTube.
The Haudenosaunee, the Anishinaabe, the Wendat, and the Innu shaped this land and were shaped by it. Then the French came. They built a new society adapted to the realities of North America, shaped by the river and forest, by trade with indigenous nations, and by the determination to survive and flourish in this land.
La Francais.
When the British came, that civilization did not disappear. It endured, and now it thrives. La Confédération est née de cette histoire. L'une de ses pères fondateurs, José-Étienne Cartier, a déclaré à l'époque que les Canadiens et Canadiens étaient des races différentes, non pas se faire la guerre, mais afin de travailler conjointement à leur propre bien-être, qui vivent les uns à côté des autres, comme de grandes familles. Ce pacte a été renouvelé lorsque Wilfrid Laurier a gouverné un pays qui avait autrefois conquis son peuple. Il a été renouvelé avec l'avènement du bilinguisme officiel. Il a été renouvelé lorsque les Québécois ont choisi à deux reprises
we are at 6, 9,
du Canada,
30.
estimant,
burning calls a little bit here.
Estimant que ce partenariat, malgré toutes ses frustrations, méritait non seulement d'être préservé, mais aussi d'être renforcé. Les plans d'Abraham symbolisent une champ de bataille, mais symbolisent aussi le lieu où le Canada a commencé à faire le choix historique de privilégier l'adaptation plutôt que l'assimilation, ou le partenariat plutôt que la domination, ou la collaboration plutôt que la division.
Or 2/3 turning into 3/3.
Cette fondation
But I need
était
El
imparfaite.
Necesito Volumio now.
Elle excluait trop de gens. Elle reposait en partie sur la dépossession de peuples autochtones et sur la violation des traités conclus
I'll
avec
send the
eux.
SPX put to call
Mais
ratio
cette
updated right
fondation
now.
reposait sur l'idée fondamentale
Les
que
Français,
l'unité ne passe pas nécessairement
por
par
favor,
l'uniformité,
necesito
que nous pouvons
say whatever
partager
you
un
need to
pays
say.
sans nous conformer à une identité unique, que nos différences reconnues honnêtement et gérées dans le respect sont une source de force. Ce choix résonne à travers notre histoire. Il résonne dans les choix faits par les nouveaux arrivants venus de quatre coins du monde pour s'établir au Canada. Il résonne dans les choix faits par chaque génération déterminée à continuer à bâtir, non pas sur le sein ou sur la terre, mais sur quelque chose de plus exigeant et de plus durable. Un engagement commun à vivre ensemble, à accepter les différences et à rechercher le bien commun. Et grâce à chacun de ces choix, le Canada est devenu plus riche, plus inclusif et plus équitable. What makes Canada a great country? It's a great country for everyone. It's the greatest country in the world to be a regular person. You don't have to be born rich or to a landed family here. You don't have to be a certain color or worship a certain God. Canadians believe in the value of every other Canadian, their boundless potential to make this great country even better. Our ancestors, despite their differences, believed in each other and in us. Now, there are long periods of history where these values can prosper unchallenged.
Burning coals.
Ours is not one of them. Our values must be fought for. That's what we are doing. That's what Canadians want. Canadians are up for it. Our history traces an arc of broadening inclusion from biculturalism to multiculturalism, from being British subjects to becoming Canadian citizens, from being two founding peoples to being many peoples living in true partnership with Indigenous peoples. From William Lyon Mackenzie King's social citizenship to Louis Saint Laurent's liberal internationalism, from Diefenbaker's One Canada to Pierre Elliott Trudeau's Charter of Rights and Freedoms, Brian Mulroney's environmentalism to Justin Trudeau's pluralism and reconciliation, each generation of Canadians has built a modern, progressive, liberal state that embraces the values of caring and sharing, of equity and fairness for all. Institutions make up the body
as
of
the
that
calls are getting wiped
state.
out here, so
But our values are at its heart. Institutions from the civil code to public health, from modern self-government agreements to Parliament's recognition of the Quebec people as a nation. Values of inclusivity, fairness, solidarity, sustainability, and ambition. Canadians are inclusive. We know our country is stronger when everyone belongs, when newcomers are welcome, when minorities are protected, when Indigenous peoples are true partners. That commitment to inclusion was institutionalized, first in the Bill of Rights and then embedded in the Charter of Rights and Freedoms. It was manifest in our adoption of multiculturalism,
they're going south.
first as policy and then as law. In the same spirit, the enshrinement into law of the United Nations Declaration on the Rights of Indigenous Peoples reflects our fundamental commitment to reconciliation and to respecting Indigenous peoples as equal partners in building our country together. And inclusion means going beyond the protection of rights to the commitment to creating a society in which everyone can flourish. That's why we introduced the Combating Hate Act, to preserve the freedom of people to practice their faith and culture without intimidation, harassment, or violence. Les Canadiens et Canadiennes veillent les uns sur les autres,
There's a lot of
surtout
fucking
dans
puts coming in
les
now.
moments difficiles. Et cet esprit de
Big fucking time.
solidarité
There's a lot of fucking calls being left. There's a lot of fucking puts coming in, and there's a lot of puts. There's a lot of calls being left. Bearish, 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 bearish.
L'éducation familiale et la sécurité.
VWAP! Break the fucking VWAP, come on.
Les nouveaux piliers institutionnels de solidarité ont été ajoutés avec la création du régime de pension du Canada et de la loi canadienne sur la santé.
There's a fuck ton of puts coming in right now.
Je suis fier. Vous êtes fiers. Que nous ayons élargi ces fondements au cours des dernières années avec le régime national de soins dentaires, les services de garde d'enfants, le plan d'assurance médicaments et le programme national d'alimentation scolaire. Au Canada, c'est lorsque nous sommes unis que nous sommes les plus forts. Lorsque nous veillons les uns sur les autres et que nous veillons à ce qu'aucun enfant, aucune famille, personne ne soit laissé pour compte. Cet esprit de solidarité et de générosité contribue à définir notre identité en tant que nation.
Oh my.
Canadians believe that fairness includes equality of opportunity, so that every Canadian has a shot at a good and fulfilling life. And the foundation of this commitment is access of every Canadian to comparable public services, particularly education and healthcare. These commitments were institutionalized when equalization was first introduced in 1950 and then embedded in our Constitution.
It looks crazy now.
And by protecting services like childcare, dental care, pharmacare, we strengthen the sense of security that Canadians rely on every day.
Cycling
a strong
to burn
and
some
united
fucking
Canada
puts or
stands
something.
up for families and workers and protects those who are most vulnerable.
There's a fuck ton of puts now out of nowhere.
A person with a disability, or a member of the two-spirited LGBTQI+ community.
That should just jump from
the
fucking
advent
5,000.
Of artificial intelligence
4,000 at 150 to 8,000.
Fairness, inclusion, and solidarity. Well, it creates enormous opportunities for how we live, work, and play.
This is crazy.
And these tensions
There's more puts coming
can
in.
only be reconciled if AI
There's a
works
fuck
for
ton
all.
of calls.
AI can provide powerful solutions.
Oh my.
Better healthcare, better education, better government services. It can empower Canadians with new skills for more fulfilling jobs.
There's a fuck ton of puts coming in at 6-9.
Will require
6-9.
Fundamental reforms to our education
6-9-20. There's a fuck ton of puts coming in at 6-9-20.
And to our social welfare system. Our upcoming AI for All strategy will begin to tackle these challenges to maximize the potential of AI for all Canadians.
I don't know what direction is real with the options chain, but there's a fuck ton of puts coming in at 6-9-20 all of a sudden. There's a lot of calls out of the
sont les gardiens d'un territoire vaste et précieux. Nous avons pris des mesures pour protéger au moyen de traités internationaux comme le traité sur les pluies acides et l'accord de Paris de 2015, ainsi que par nos progrès constants en matière de conservation de notre patrimoine naturel, conformément à nos engagements pris lors de la conférence de Montréal en 2022. Au cours des prochains mois, notre gouvernement mettra en œuvre de nouveaux plans ambitieux visant à accélérer le développement durable au pays, à réduire les facteurs liés à l'énergie des familles et entreprises et à protéger la richesse naturelle du Canada. Canada is ambitious. Canada is an ambitious nation of builders and explorers. We mapped this continent before the Americans had even left St. Louis. We built a transcontinental railway in 5 years, the St. Lawrence Seaway in 4. We created a healthcare system that became a model for the world. This government, Canada's new government, shares that ambition. We've already removed all federal barriers to interprovincial trade, and we're catalyzing hundreds of billions of dollars in investments in nation-building projects. We're doubling our defense spending by the end of this decade. And we're working to ensure that core Canadian capabilities, including in AI, in quantum, in cyber, and critical minerals, will maximize the economic benefit for Canadians of these new security imperatives. Now we need to execute fairly and fast. Les valeurs canadiennes, telles que l'inclusion, la solidarité, l'équité, la durabilité et l'ambition, ne sont pas des idéaux abstraits, mais des guides pratiques qui font partie intégrante de notre identité. Notre tâche est de nous en inspirer pour continuer à bâtir en ces temps révolutionnaires. Dans des moments comme ceux-ci, le Canada doit assumer deux rôles à la fois. Premièrement, il doit être une bastion de sécurité et de prospérité pour nos citoyens. Nous devons défendre notre souveraineté, sécuriser nos frontières, protéger nos communautés et bâtir une économie qui offre des possibilités à tous les Canadiens et toutes les Canadiennes. That's why we're undertaking the strongest tightening of the criminal justice system in generations. It's why we're making the largest investment in defense in generations. It's why we're securing our borders through more CBSA agents and greater surveillance resources. And it's why we're building one Canadian economy and launching nation-building projects that will connect and transform our country. We will give ourselves far more than any foreign government can ever take from us. A core mission, while we're doing that, a core mission of our government is to lower costs for Canadians. That's why on day one we canceled the divisive consumer carbon tax. That's why we've cut income taxes for 22 million Canadians. That's why we've cut taxes for first-time home buyers.
Right in the middle.
It's why we reduced tolls on the Confederation Bridge and Atlantic Ferry fares. It's why we're launched, and we have launched, Build Canada Homes, to build affordable housing construction at a pace not seen since the end of the Second World War. This past fall, we launched the automatic federal benefits for up to 5.5 million low-income Canadians to ensure that our most vulnerable get the money to which they are entitled. We also made the National School Food Program permanent so that kids have the nutrition they need at school. We've started, as we mean to go on, with a relentless focus on improving affordability to help Canadians get ahead. I said we had to do two things. The first is to be a bastion. The second is to be a beacon, an example to a world that's at sea. In a time of rising populism and ethnic nationalism, Canada can show how diversity is a strength, not a weakness. In a time of democratic decline, we can show how rights can be protected and equal freedoms endure. And in a time of rising walls and thickening borders, we can demonstrate how a country can be both open and secure, welcoming and strong, principled and powerful. There are literally billions of people who aspire to what we have built. A pluralistic society that works, a public square that's loud, diverse, and free, an economy that delivers broadly shared prosperity, a democracy that chooses to protect the most vulnerable against the powerful. Now, Canada can't solve all the world's problems, but we can show that another way is possible, that the arc of history isn't destined to be warped towards authoritarianism and exclusion. It can still bend towards progress and justice. There you go. Nous ne faisons aucune illusion. Le monde est de plus en plus dangereux et divisé. Les anciennes alliances sont en train d'être redéfinies et, dans certains cas, rompues. Dans cette nouvelle ère, le leadership du Canada se définira non seulement par la force de nos valeurs, mais aussi par la valeur de notre force. Nous procédons au plus important renforcement de nos capacités militaires et sécurité depuis la Seconde Guerre mondiale. Nous disposons des ressources dont le monde a besoin. Nous avons les talents nécessaires pour transformer ce potentiel en croissance. Et nous avons l'ambition de relever les défis de cette nouvelle ère. Nous consolidons notre force à l'intérieur de nos frontières et renforçons notre résilience en diversifiant nos partenariats à l'étranger grâce à une approche polyvalente qui défend nos valeurs et qui fait progresser nos intérêts. So let me return to where I began, where Canada began. 267 years ago, this ground was soaked with blood. Two empires had collided, one had prevailed, and the question was what will come next? The answer that emerged slowly, imperfectly, not without struggle, but unmistakably, was cooperation, partnership, a shared future. That response was not inevitable. That response was chosen. Chosen by British administrators who eventually saw the wisdom of cooperation. Chosen by French Canadians who eventually committed to build within the new reality. Chosen by the founders of Confederation who believed that two peoples could become partners in one country. And chosen by every subsequent generation who built on that foundation. Les traces de notre passé sont ancrées dans notre présent, dans nos deux langues officielles, dans notre système fédéral, dans notre compréhension grandissante.
Por favor, enough-o. Enough-o.
Rosenberg, the founder and president of Rosenberg Research. Dave, it's great to see you. I can't look, everyone's celebrating the small caps. They're finally participating. It's not just the big guys anymore, the little way. This should be a David and Goliath happy story, right?
Well, I sort of chuckle when everybody's talking about the Russell 2000. I'd probably rather talk about the S&P 600, which at least are quality companies. I mean, there is not a junkier index out there than the Russell 2000. And, you know, when you look at what the stock market's done since Liberation Day, the companies that make no money or lose money, their stocks in aggregate have outperformed companies that make money by 2,000 basis points. So, yeah, I guess that, you know, this is going to the casino. You know, this is what the stock market's become, basically. It just, everything that you just talked about in the intro just tells you how speculative and to a large extent how junky this rally is.
I suppose I would want to look at it and say, you know, finally the Mag 7 are cooling off. Sure, they make money, but people are concerned about how much going forward. And finally, the rally is broadening and going to other, even if we just focus on the S&P 500. I take your point about the Russells, and you could put that to the side. I'm curious, Dave, while you're here, your larger thoughts, because underpinning the broadening of the rally has been falling interest rates, right? Like, that's kind of the real story of this rally the past couple of years. Does that get called into question at all now? What do you make of the PCE data? Are we at 3% and headed there? That's what the market's worried about, I think, for the December figures. And does that stall out kind of the disinflation, if I may, that has helped the market do so nicely?
Right. Well, look, let's just say that back to your first point, I'll get to the second point. You know, the first point on generative AI and the technology dominance has spread its tentacles through so many other aspects of the stock market. You know, investors are buying, you know, energy infrastructure, and they've been buying utilities and pipelines and financials, because financials, of course, are going to make a lot of money from, you know, the M&A boom and the IPO boom. It's all coming from AI. So, you know, talk about the broadening of the market. It's a bit funny because it's all basically connected to AI. It's just these are various derivatives of what's been going on. In answer to the question, I think just what's happening in the stock market is not about interest rates. It's about ebullience and incredible investor confidence over the future. There's no doubt that we've had a massive shift in the innovation curve, but there's still lots of question marks in front of what the total addressable market is ultimately going to be for AI. But investors right now have laid down their money like they did with the internet back in the late 1990s. It's just really about investor confidence.
Right.
That's the bottom line. Is it about interest rates? Not so much, because the Fed's cut interest rates by 175 basis points, but yet the interest rate that should matter the most for a long duration asset, which is the 10-year or 30-year bond yield, they haven't that much at all. Do I think the Fed will be cutting interest rates? Yes, I do, but I think for now they're on hold. They're sounding very hawkish. I thought the inflation numbers today were great across the board, especially the core numbers. And I think there is valid reasons to believe that inflation will be a downside surprise through 2026.
Really?
Yeah.
And why is that?
Well, I'll tell you why. Firstly, the tariff impact, as Jay Powell told us in December, that's the irony of ironies, is that the biggest dove on the FOMC is Powell, but he's a bit of a lame duck chairman. I don't know why Trump picks on Powell so much. They almost have the same view on interest rates. It's a committee. It's not one person. Powell's got a powerful vote, but it's still one vote. The committee is more hawkish than he is. Can't say I really know why. But maybe they just don't want to do anything until we get a new chairman coming in May. So it could be just the timing issue. On the inflation, a couple of things. First is that, as Powell said some interesting things at the December at the podium after the meeting. He said that when you strip out the tariff impact, which has been lighter than people have thought,
right,
core inflation is running in the low 2s. We're almost at target. All these people talking about we're too much above target. You're almost at target once you strip the tariffs out. And then Powell tells us that the tariff impact peaks out this quarter. So what are you complaining about? We're almost at target as is. And on top of that, and Powell, once again, I was there thinking to Powell, I want to go up there and give you a hug. He was talking about the shelter disinflation, because we haven't seen the rents have been deflating for 18 months in real time. But because of the distributive lags in the CPI numbers, it takes a long time to filter through. But that's going to be a dominant theme, and that's 30% of the CPI. Then on top of that, we talk so long about, we're talking a lot about food prices, right? But food inflation has come way down. In fact, remember that I said that, rents and OER are 30% of the CPI. Food is like almost 14%. And food prices in the wholesale market and in the commodity pits, the Goldman Sachs Agriculture Commodity Index is down 12.5% year over year. And that hasn't shown up yet through into the
candle traders might have swapped hands.
We're still talking about food price inflation. Food prices are extremely high, but I think that inflation is not a level, it's a rate of change.
Strats, Tom Lee. Tom, it's great to have you react to the president and what's happening in the market. So, framework to a deal, no force, all is well now for the bulls?
Scott, I think so. I'd say on Monday morning before the open, I think investors were very concerned about Greenland and what's happened in Japan. And they thought of 2025 when it took 8 weeks for stocks to find their low, down 20%. So I think there was a lot of fear. So today's news really does do a lot to diffuse a lot of that anxiety, and I think it's wise to buy that dip.
Yeah, as part of this, of course, the president also saying no tariffs on Europe on February 1st, and that's what really upset the market. Are you still looking, though, Tom, as positive as you might sound for a bear market sometime around mid-year?
That's right, Scott. I think we have been pretty clear that we think that there is going to be a mid-year hiccup. It could be around policy or it could be around the new Fed being challenged. But that's coming from us markets being at a higher level. And I think one of the mistakes people make whenever they hear that commentary is they think it means to go to cash now. As you know, we've advised to stay invested and to buy the dip. But yes, there is a lot of good taking place in 2026, but we do have a lot that's already been priced in because of 3 good years of market gains.
What dip would you be buying specifically?
Well, for instance, I would be buying the dip on companies that have good earnings visibility.
But this sector has traditionally been cyclical in nature, trading on the whims of the computer refresh cycle. So is this time different? Let's ask CJ Muse. He's the senior analyst at Cantor Fitzgerald covering the chips and memory space. CJ, it's great to have you here. This morning, Jim Cramer was looking at SanDisk down 4.5% and saying, is this finally a canary in the coal mine that the trade is running out of steam? But then this afternoon, the stock is trying to break positive.
Yeah, no, I mean, I do believe that this cycle is different. You know, from a NAND perspective, where SanDisk plays, we've been in essentially a 7-year down cycle. And so there's no urgency from any of the NAND players to add capacity. And when you layer in the incremental growth from AI, you know, I think we're going to be undersupplied for all of 26 and 27. And so what does that mean? Tremendous earnings power. SanDisk will report next week. And we've been writing in our notes, who will be first to $50 of annualized earnings, SanDisk or Micron? And quite frankly, it's a toss-up. But, you know, SanDisk is right there. And if you look at the March quarter, Street's modeling about $4 of earnings. And, you know, if you put in some of the crazy pricing that we've been hearing for Q1, they could, you know, earn as much as $10 or $12. And when you think about that seismic beat in the world of semiconductors, you know, I hearken back to Micron in December and, you know, NVIDIA 3 years ago for that kind of, you know, material beat to numbers. And, you know, in that world, it's hard not to want to be there. So, you know, we've got buys across Seagate, WD, SanDisk, Micron. We think the group continues to move higher.
Are we going to have shortages that affect the everyday consumer? And look at those price surges that we've seen in the last couple of months. Are we going to get in a situation where, you know, you walk in to buy a laptop and they say, you know, we don't have one, or the price doubles?
100%. I would tell you that our working assumption right now is that PC unit volumes will decline 10% this year, and that smartphone unit volumes will decline at least 5%.
Because there's not enough chips?
Not enough memory. And so what you're going to see is at the high end, higher prices, and at the low end, you'll see despecking of memory.
Wow. I mean, do you think this partly Let's ask Alex Kantrowitz, founder of Big Technology and a CNBC contributor. It's appropriate that we heard from OpenAI, Alex, as the number of people writing their obituary is quickly increasing. What would you say about that and how significant Gemini's arrival has been on the scene?
Yeah, I don't get the obituaries for OpenAI. I mean, the company only has 800 million weekly active users, the leading model or one of the leading models in this AI race, and a proven ability to show that it can get ahead of everybody else on product, whether that's being the first to release the large language model powered chatbot, leading in image generation, doing great stuff in video generation, and of course, working on an AI device. I don't think this is anywhere close to being over. Yes, Google has a good model. Others will have good models as well. I think a lot of this is about how you productize it. And from my money, OpenAI has been the best at that to this point.
This is what convinced me OpenAI will run out of money. That's a piece by Sebastian Mallaby in the New York Times. That's what I mean about how bad sentiment has gotten. But the argument seems, Alex, quite clear. Google doesn't have to monetize Gemini, right? OpenAI, meanwhile, has committed to billions of spend, is now pivoting to an ad-supported business model they said they wouldn't do except as a last resort. You know, where is their financial wherewithal going to come from? How are they going to fight Google in this race?
Yeah, it's funny. I was speaking with Demis Hassabis, who's the CEO of Google DeepMind, the company's AI effort, this week here at Davos. And what Demis said was basically it's a tell from OpenAI. The fact that they have to go into advertising is maybe a indication that they don't believe AGI or the super powerful artificial intelligence is right around the corner. Look, I think that is certainly a concern. On the other hand, they are a business. They do have to make money. They have all these users. It's like at a certain point, why would you leave the money on the table? And I do think that, if they continue to build on their lead and have this product lead, it doesn't really matter. At a certain point, they're going to figure out a way to make that money. And certainly they have an IPO that's probably going to come in 2027. That's my best guess.
Yeah, but their lead
and
is
they need
eroding.
to show some business momentum.
I haven't seen the latest weekly data, but it's clear that from the market share data, this was posted by a third-party firm this morning, the Gemini's rapidly gaining share. It's OpenAI's edge is, that's coming at their expense and the expense of some others.
Well, look, it's certainly a legitimate concern. Here's the thing. Google has this distribution advantage. They have all these products. They have Gmail. They have Google Search. And they can push their generative AI through those products and build users. So their user numbers are going to look very healthy. And OpenAI has to fight for every user. I think the argument that OpenAI would make, and I think this is a good argument, is if you're going to bolt AI on to existing products, you're not going to have the same thing as if you imagine what a tech product looks like from the ground up. OpenAI is imagining what tech products look like from the ground up. They don't have any legacy business to carry, and they can deliver it. That's why they've been able to build the fastest growing tech product in history. Are they, for sure going to win? No, this is going to be a very, very fierce fight. But do they have a really good chance to do it? Are they definitely going to run out of money? I don't think so. I think they do have a good chance.
Yeah, that's where I appreciate, kind of the understanding this framework shift, which is this is going to be an intense fight. It's the malevolent seven. Yes. They're going at each other with the knives. It's gunslingers, whatever you want to call it. And you can see how Google's rise has cost hundreds of billions in market cap for Microsoft and Oracle and the rest. So if NVIDIA can keep its leadership, all the more impressive with the TPU performance. Alex, we'll leave it there for now, but much more to come. We appreciate it today.
Do want to broaden things out, though, bring in our next guest joining us this morning, Frances Stacy, economic strategist and wealth manager at Scarlet Oak Financial. Frances, wonderful to see you. Thank you for being with us. Before we dive into some of the headlines we're seeing and your outlook for the year, I'd love to get your thoughts on the rebound we're seeing in the market today.
Yeah, the rebound's excellent. You could probably measure it with a Fibonacci retracement from yesterday. But the thing that's very important is that the thing that was roiling the markets was whether or not Trump was going to use, quote unquote, excessive force in his negotiations for Greenland. And he has assured all of us at his speech in Davos that he's not going to do that. And so we see the VIX pulling back pretty substantially on that news.
You bring up a good point of these headlines. We have seen so many headlines coming across, and the market seemingly shrugging quite a few of those headlines off. What is that indicating to you for the setup for 26?
The setup for 26 is going to be dependent on geopolitical risk, which was just ameliorated. It's going to be dependent on liquidity, and it's going to be dependent upon retaliation from Europe or other countries based on these trade negotiations. It's important to understand that Europe actually holds trillions of dollars in U.S. assets. And so while we don't see any sort of dumping going on or any sort of that kind of thing, they do have the capability of doing that. The one thing that got Trump's attention primarily after Liberation Day was selling U.S. Treasuries. When you sell U.S. Treasuries, those yields spike. We have an affordability issue in this country. We have a bifurcated economy and a huge wealth gap, and spiking rates, puts us, increases our credit risk. And the credit risk is the thing that could stop this momentous train of GDP from the U.S. And he's saying we got to grow out of this debt with GDP. That's largely determined on liquidity and not having a credit event. So to the extent that other countries could could increase our credit risk, whether they're successful or not, that's the leverage that they have on the table.
And as far as Europe specifically, and it seems that with some of the commentary coming out of Davos that we seem to be backing away from this, but there was some headline risk here that Europe might respond slightly more forcefully, even symbolically, potentially. How meaningful could that be for markets here, given the massive holding of U.S. assets? And also, how do you think we're pricing in that uncertainty right now, if at all?
Well, we're not really. The thing is that the markets have become fairly numb to the trade volatility and the trade headlines, because there's an escalation and then there's always kind of a backing back down. And so the market has kind of learned not to price in the worst case scenario. However, given Europe's leverage with all of these trillions in assets, they really could cause a repricing. If they were going to cause a repricing, it would be in the bond market. And that a spike in rates would affect, not only our national public debt, but also the private debt. Simultaneous to all of this, we've got the midterm elections, and Trump is really trying to address the affordability issue and the wealth gap, with his ideas about capping credit cards at 10%. The pushback, and now he's, encouraging Congress, so he's not, planning on doing that by executive order, but the pushback on that is that these credit card companies, if they're not allowed to charge huge amounts of interest to the people who are paying, they can't make up for the losses for people who are not paying. So they're going to be reticent to issue more credit. What is issuing more credit? Issuing more credit is liquidity in the market. So the legislation that goes through to address the affordability, should it go through, is going to have to address parameters around, credit card companies just cannot shut off the flow of credit cards because you've got 60% of the U.S. living paycheck to paycheck and putting groceries and things like that on credit cards.
And Frances, I'd love to get your thoughts too, since you mentioned the midterm. We've had a lot of conversation about some of these proposed policies, including the credit rate cap, some of the things trying to fight some of the issues in the housing market. Another host on the network, Sam Vadas, loves to use the analogy of throwing the spaghetti at the wall and seeing what sticks here. Is that sort of what it feels to you like? We're just sort of throwing a lot of things at the wall because it is a midterm year and trying to see what sticks? Or do you think that any of these things actually have legs?
Well, I think that all of the spaghetti per se is addressing a specific issue. And that is going to be that really what Trump has to do. He's trying to revamp the GDP calculation in the sense that it's a formula, right? And so he has this impetus where he wants to take down the government spending and he wants to make up for that in the net trade negotiations and the revenue that the tariffs are bringing in. Obviously, we don't have a Supreme Court decision on that yet, and we don't even know if the Supreme Court decides against Trump, is he able to, run those through other, laws and other regulations? Would those tariffs have to be refunded? Would they not be refunded? I mean, all of that is up in the air. But he's really trying to revamp how we achieve GDP in this country so that he can address the deficit and the debt. Two different things. And so we don't have credit issues going forward. He's going to be a hero or a zero. If he can pull this off, it really is extraordinary for the U.S. In the backdrop, and what the leverage that he has is we have 54% of market cap across the world. We have the deepest, most liquid markets with 30 trillion in the bond market, 60 trillion in the equity market, another 14 trillion in the private equity market. So he's got that juggernaut of liquidity where you have all of these countries all over the world that are, massively allocated to the U.S. The U.S. had the strongest performance coming out of the pandemic. So it becomes a question of, are these other countries able to, on the quote unquote margin, take away enough of the exposure to the U.S. as leverage so that compounding going into the future,
I mean, the 20 people that left should never come back
to our GDP and growth.
Every day.
And Frances, you bring up a very good point in the notes that you sent over. We are getting some important data tomorrow. We're getting a revision of GDP, but we're also getting PCE. But all of the conversations that I feel I'm seemingly having of late are all headline and tied to geopolitics. Do you think that has temporarily overtaken inflation and this focus on data?
You just keep coming back and talking shit and leaving, like, you know what I'm saying? Like, it's so fucking distracting.
That has a repricing in the rates. in the bond market, the Fed is going to have to be reactionary to that. They won't be driving that bus.
I don't even know because they haven't been here.
So that's why the geopolitical is first and foremost. And I think that Trump kind of, he ameliorated that or made it a little bit better. Sorry, I use these big words, but he made that a little bit better today by saying he wouldn't use excessive force in Greenland.
Well, Francis, we appreciate you being with us this morning to break through that. Great insight there. Francis Stacey, economic strategist and wealth manager at Scarlet Oak Financial.
You feel me? At some point.
Top-ranking Chinese AI startup has just announced new limits on its coding product after overwhelming demand from users in China and from the United States. As China's AI tools gain traction globally, Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly. So coding is really the key battleground in AI. It's the first place where models turn into daily tools and where agents do real work. So a Chinese model having a viral coding moment, that's a big deal. Even more striking, it's happening right here in the U.S. So Jipu is the company. Jipu AI just went public in Hong Kong, tells us that following the release of its latest model called GLM 4.7, online traffic has jumped fivefold, and the user base for its coding plan is primarily concentrated in the U.S. and China. Now, that was very surprising to me, so I checked in with a few sources who confirmed the model's presence here in the U.S. One telling me the model is very good on agents and coding. Another says that because it's open source, it's able to be fine-tuned, and that'll make it good at specific tasks over time. Jasmine, Tech Check producer, and I tried the coding assistant ourselves, asking it to make an app that tracks the top public companies in Hong Kong.
If the candles stack and it breaks through too,
notifications when the list changes. You're looking at it right now. This is what we got from Jipu after just one prompt, suggesting, Kelly, that AI coding agents, they're becoming commoditized just as chatbots have. And China's edge here is open source. Jipu, like DeepSeek, is using open models as a distribution strategy. They're cheaper to run, they're easier to customize, and they're harder to be cut off from. You mentioned Dario Amodei, the Anthropic CEO, before the break at Davos. He's really playing them down, but if you look at the leaderboards of models, especially open source, the Chinese ones are right at the top.
We have a headline crossing, thanks to your reporting, that Bank of America and Citigroup are weighing new credit cards with a 10% rate. So for all the pushback that bank CEOs have given the Trump administration about how this is a bad idea, it would ruin their credit card business, it would be bad for the economy, they are taking some steps into looking at this.
The key word here, and what you heard this morning at Davos from Moynihan, is solutions.
Man, bears are coming.
So
bears
the banks
are
huddling together, they're getting their teams, and they're trying to figure out new products that they can offer that would appease what the Trump administration is asking for. So Bank of America has highlighted some products that they already offer, some programs that they have really launched in the last few years to address the affordability issue. And no bank CEO is pushing against that bigger topic here. Everyone is saying, we too want to help out. We too feel that affordability is an issue that we want to address. No one is saying that it's not a problem. It's the economics that they need to evaluate in terms of if they are to offer a 10% card interest rate, then they have to figure out how to balance and take account for the customers that will default and that they're going to be losing money on certain customers at that specific interest rate. That is why some of their cards have the higher interest rate, so that they've been able over time to balance and not just make money, but not lose money on some of the products that they offer to their customers.
And what's notable here is it can feel like they're a little bit behind the curve, because there was a company called Built that responded right away to what President Trump was calling for and offered a credit card with no more than 10% interest rates. But that is a very specific case study, isn't it?
It is. And that announcement with the 10% interest rate is one that is for just a year, which actually does fall under what Trump is asking for. He has also given the one-year timeline. but a lot of these banks offer a 0% interest rate for 18 months as an intro. So it's really a game here on how you position and, again, how you are working with the administration as a bank to show that you want to be amenable to what they're asking for. And again, we haven't heard any pushback from any of the executives that have spoken through bank earnings and through Davos this week on affordability being something that they don't want to address and help out with.
This is very much about managing the president and managing the administration. What is it that these banks as customers want? What are they hearing from their card users? Because there are a lot of, I think of Chase, for instance, and its premium cards, or I think of American Express and their premium cards, and people are willing, a certain segment of the population are willing to pay high annual fees in order to get those rewards.
Yes, it's really a tale of two cities. Those cards that you're mentioning with the travel rewards, with spending that is going to give you access to lounges, this is a client that is paying up because that is a value to them, to be able to go to the airport and have a meal before a flight. That's something that they're willing to pay up for. Now, other card offerings, when you have an annual card that you're not paying anything to access, it's really about, and I think with affordability, the question of your credit line. So Moynihan this morning talked about if you're lowering and you tell your customers, your consumers, you have a smaller credit line, you don't have a window in which you can spend, that is going to pull back spending overall, and that's bad for the economy.
Bearish. MACD and volume on the 5 is bearish. Time is 2:40. I expect it to go lower here. 5-minute MACD is bearish. Even the 10-minute MACD is bearish. 15-minute turning down. Every single time. Should be different now, right? Come on. It should be different now, right? Higher time frame turning bearish. Five, 10, 15. What a shit show though. Trapping like bulls and bears and bulls and bears. Let's see it. Let's see it.
I think the important thing about the dollar is time frame and degree. You know, a lot of the media coverage this week with the threats of possible military intervention to acquire Greenland against its will, and then the backing off it. You saw some market reaction, but it was really just a one-day sell America. And everyone's saying, well, gosh, no one sold treasuries. Everything's fine. It's all hype. I'm like, no, it's not. It's time frame. What we're seeing is a slow erosion of confidence in dollar-based assets. This is something that will play out over years, not a day or a week or a month, but it's happening. We saw news this week that Sweden's largest private pension fund is reducing significantly its treasury holdings. And yes, Denmark is not a large country, but they're getting rid of their treasuries. There's more to come.
I mean, Paul, I just love it having Rebecca. And can you just see the poor soul who had 3 martinis in the city in London, goes back to their desk at a major bank, calls up on the phone and goes, sell America.
Sell America, exactly. So how do we, I mean, what does that mean for the dollar here? We had the dollar sell off early last year.
Bearish.
Then it got stabilized and actually had a decent second half of the year
bearish.
here. Is the dollar still at risk, do you think?
modest risk this year. So, you know, there are a lot of factors that come together that drive currency markets. Part of it is cross-border capital and trade flows. Part of it is expectations for interest rates, so the relative yield of a currency. What helped the dollar in part in the second half of last year? We didn't see as much hedging action, so foreign or U.S. investors hedging out dollar risk. And then we also saw a reduction in expectations for Fed rate cuts, i.e. relatively higher rates. And that also gave us support to the dollar. This year, you know, given how strong the U.S. economy is at a high level and given sticky inflation, which you talked about earlier this morning, it's going to be hard for the Federal Reserve to cut much unless something drastic changes. So that is going to prevent the dollar from weakening a lot. The dollar hedging, the diversification, like I said, this is kind of a slow drip, drip, drip. This isn't a sudden flood. So I wouldn't be shocked to see a stable or maybe slightly lower dollar this year.
Well, given that backdrop, the global geopolitical backdrop, I guess it's no surprise that we've seen gold been ripping like crazy. Is that still kind of the play?
Yeah, so to me, that's the most obvious reflection of the diversification trade that's taking place. We know some of it is investors, and those could be speculative investors as well. But underlying that, we continue to see central bank demand. Central banks diversifying slowly but surely out of the U.S., looking for other liquid assets. You talked to my good friend Mark Sobel at OMFIF, the World Gold Council. Both of them do really good surveys of central banks every year, asking them, what do you intend to do going forward? And the data shows that they're going to keep buying gold.
Across this nation, Rebecca Patterson with us when we continue. She's, of course, a senior fellow of the Council on Foreign Relations. Good morning, the way you listen to us across America. Good morning, particularly on the Pacific Rim, Spotify, which we find is unusually popular.
Just use the
over on Asia and to India as well. On YouTube, subscribe and
I know you want to do it. Let's go! I know you want to do it.
It was not expected. A meeting of the President of the United States with Mr. Zelensky of Ukraine, clearly off the radar given yesterday's festivities. Mr. Zelensky now speaking at the meetings of the World Economic Forum in Davos. Our team there will give you all that coverage. We'll look for the headlines here and bring them to you when we can. I look at your Council on Foreign Relations. I mean, Froman hasn't slept in 6 days.
What the fuck?
It's nuts. Everyone's publishing. I know you're going to publish and give us a head start on that.
It's fucking escalating. Things are getting faster. Am I dreaming right now? It's escalating faster and faster.
And then you followed up with your
I'm dreaming right now. Am I dreaming right now?
Am I dreaming right now? Oh my God. In the frenzy, it's CFR. What are you focused on most? What does Rebecca Patterson study?
I always look at the intersection of geopolitics, the economy, and financial markets because they all influence each other. One of the things I'm looking at now ahead of the Supreme Court decision about U.S. tariffs.
I thought I was going to algo range a little bit.
If we reduce the tariffs, take them off, shift them around, how does that translate into the affordability narrative in the United States? If tariffs are removed, do we actually see any price change that benefits U.S. consumers? How does that play out in the midterm election? So again, it's looking at all these connections. So that is a piece of work I'm working on right now because I think we should get the Supreme Court decision fairly shortly. So that's one. I think the other one I'm trying to spend time on is the Federal Reserve. So we know we're going to get an announcement probably in the next week or so with the next nominee. But none of us ever had to think about the legal intricacies of the Fed before. Now I'm trying to understand things like, could you see not only $200 billion buying of mortgage-backed securities, could you see $1 trillion of mortgage-backed securities?
Paul's got 8 questions. Let me be rude and interrupt once more. At Bessemer Trust, ages ago, you don't go to cash. I mean, with all the cacophony you just mentioned, how do you handle this news at CFR and where else? Zelensky speaking right now to a packed room. How do you do it and not go to cash?
Well, I think the big takeaway for me is that while treasuries, U.S. government bonds still act as a diversifier in a portfolio, you can't expect them to work as
they went down so easy to the algo range, and now I don't know.
Decades. So when you diversify a portfolio, you have to think about it differently. That is part of the
support
for gold prices, which is extraordinary.
New money bears from
it's part of why we see people going into alternatives more, different types of alternative assets. And I think it's part of why, again, so far this year, we're seeing foreign markets outperforming the U.S. So it's asset diversification, geographic diversification. But you're right, Tom. Getting out of the markets, given that risk assets outperform diversifying assets 8 years out of 10, because the economy is growing 8 years out of 10. So to get out to react to the geopolitical headlines, you're doing yourself a disservice.
And Paul, as you know, you got to get back in. I mean, I was in cash, but I took the leverage away and I went further to cash 2-3 days ago.
Fine, no problem.
I'm hammered. I missed this.
Well, and no, I mean, even professional investors, the smartest ones in the world, timing when to get in and out is a fool's errand. That's why you stay in the market. You just make tactical shifts on the margin.
All the news this week coming out of Davos, coming out of Greenland.
I know you want to
forgot about. Japan had a little bit of a problem in their bond market earlier this week. That spooked people big time earlier in the week.
Fucking diarrhea, come on. Below VWAP.
Thing? Should we not worry about it?
Do it!
Is contagion issue there?
Come on.
Yes. Okay. So, yes, you should worry about it. Yes, there is contagion. I'm talking about U.S. Treasuries and are we going to have enough buyers to meet the amount of supply we have to issue to pay for our deficits? But it's important to remember over the last 20 or so years, global bond markets have gotten much more integrated. People own global bonds, not just their own country's bonds today. And that means something that happens in Japan or France or the UK can and will affect the U.S. Treasury market also.
Okay.
So we do need to care about Japan, what the Bank of Japan does at its next meeting, which I believe is tonight, right? And then, of course, Prime Minister Takaichi, when she has this snap election, do we see additional stimulus after that? How does that make people think about the fiscal dynamics?
So, again, I come back to I have to buy U.S. Treasuries. Buy Treasuries in gold.
No. Look, I'm not saying dump all your Treasuries by any stretch, but you want to think more diversified. It's been fascinating to me to see that you are seeing institutional investors looking at more fiscally sound bond markets today. So countries that don't have those big debt difficulties looking ahead.
So you load the boat in Germany? Is that what I'm hearing here?
I mean, some of the European bond markets are attractive. Canada, Australia, relatively better. Norway, Singapore. The problem is these markets don't have as much liquidity. So that's only so far it can take you. But you do want to have a global basket of bonds. And emerging markets. EM is the new DM. So emerging market fiscal dynamics today are much better than they've been in general. I'm not talking about every country for a long time.
My heart is beating out of my chest.
Sadly all negative. So let's just break this out. The framework that the Trump administration is saying they have gotten, and it's, to be clear, it's not clear they have actually gotten it because the Europeans don't seem to be agreeing with that statement. But let's say the Trump administration got everything they said they got. Everything they said they got, they could have gotten with a phone call 6 months ago. Right? Like if we had told the Danes, we want to put more bases in Greenland, we want more mineral rights in Greenland, we want you to, do more to keep the Chinese out of Greenland, whatever that means, they would have said, awesome, we love the idea of you doing that. So everything they got was on the table just for the range. The downside is, I just
wish this happened 1 hour ago.
We have now reached a situation where the Prime Minister of Canada, the United States' oldest, best, and most important ally, is saying that the United States is a predator that is taking advantage of other countries, and that he needs to make alliances with other countries, including China, judging by his actions, to protect himself from the United States. It's almost impossible to overstate the level of the damage there. If the United States had somehow managed to extract ownership of Greenland from Denmark, that would not have been even close to being worth destroying the trust that the United States has built up with pretty much every other developed country in the world over the course of more than a century. You go ahead.
No. So this trust that the United States has built up, is it the trust that the White House is now putting at risk, or this particular White House, I should say, versus the U.S. government overall? Because in 3 years' time,
I'm leaving
in
all
8
one
years' time,
DTs
we could have a very different government in charge. And do we go back to the old ways?
Yeah, I think it started with this administration, and if it had, we were just talking about one Trump administration, it would have been just that. And then I think that's exactly what would have happened. We would have reset to the old ways, and everybody would have said, "Look, every country has a hiccup once in a while. These things happen." But now you will hear Europeans say straight up that Trump is a reflection of something deep about what's happening in the United States right now. That it is not just a case that they do not trust the Trump administration. They do not trust the American public to not keep electing people like the Trump administration. And that creates a completely different set of constraints and circumstances.
All day.
Are you surprised, I guess, going down that thread, Gotham, that we haven't heard really anything from members of Congress over the past week or over the last year even?
I wish I could say I was, but I'm not. And I think what's really striking is even members of Congress who said that who are not running for re-election are still unwilling to criticize the president directly, with like a tiny handful of exceptions, but in the Republican Party. So even Thom Tillis, who's like, I'm out, right? Like he said, I am not running for re-election because I want to be able to speak truth to President Trump, is saying, hey, I don't actually have any criticism of the president. It's all about his advisors. And be clear, like his advisors are not the people pushing Greenland on this. That appears to be sort of from within the president's own head. And so I'm not surprised, both because there's, his control over the Republican Party is total and people want to get reelected. But more than that, I think people are scared, right? Like if you stand up to the president, if you are seen as his enemy, you are deluged by death threats and, things that are not a normal part of American politics. In some sense, I guess you could say that January 6th worked, because there are quite a few Republicans who are in fear for their lives, not just their seats.
So, Gotham, moving forward with all of this, I'm curious, you mentioned Mark Carney and the speech that he gave declaring there's a new world order here, the old world order has ruptured. How does Europe respond to this moment? Because they seem as disorganized
fucking greedy.
Frankly, as weak as ever. And, when President Trump pointed them as weak, it's hard to see how they can come to agreement on how to stand up to him.
So I would never underestimate the Europeans' ability to fold under pressure, and that is. But I think first is you did see they started to put troops into Greenland, right? Like that is not a minor signal, right? So there's a lot of we are really starting to push back in a way that we haven't seen before. And I think if it could actually come down to an American use of force, that has a clarifying, right? As Oscar Wilde said, the prospect of hanging clarifies the mind. I think would have solidified the States together.
Yes! All 0 DTs back. All 0 DTs back. Yes. Oh my God. Yes. That's what I'm saying, baby. 3/3. 255. Fucking God candle. God candle. Save the day. VWAP flip done. Coming in crazy. Look at the IWM pullback. Coming in crazy. 0.5 Fibonacci passed on. SPX coming in crazy. Oh my Lord. I haven't left jack shit. 1 DTE and SPX 0 DT. Oh my God. Crazy. I thought I was fucking dreaming.
Last hour, Fox Business is reporting.
I thought I was fucking dreaming.
Trump has sued J.P. Morgan and CEO Jamie Dimon over alleged political debanking. The bank says the suit has, quote, no merit and
economic disaster. Jamie Dimon issues major credit card warning.
Religious reasons. And then there's this.
News helps us set up, folks. What can I say? News helps us set up. When did this come out? 10 minutes ago. 1.7K views already. News helps us set up, folks. What can I say?
Economic disaster.
Economic disaster.
And I'm not making up because our business, we would survive it. Since there's a huge disagreement of this one, between Republicans and Democrats, I think we should test it. And in my view, and I can't do this, because it'd be antitrust, but the government can do it. They should force all the banks to do it in 2 states, Vermont and Massachusetts. and see what happens.
5 minute coming in bearish.
But the president says it's time for the American people to stop getting ripped off by big credit card companies who are charging as much
30
as
minute coming
30%
in bearish.
rates.
Look, I'm all for free enterprise and everything else, but you have a guy goes out and he's a little bit late on his payment, and he ends up filing for bankruptcy, right? 28%. Whatever happened to usury? Whatever happened? These have laws that you can't charge too much.
Well, one analyst said it's going to cut earnings for the banks for between 5% and
1-year deal.
16%.
It's a 1-year deal. We got to let people get back on their feet.
LOD is testing. I'm
and
fucking shaking.
a new report says Bank of America and
shaking
Citi are now considering new credit cards with a 10% rate
Everything
cap.
is
We got
coming
some
back
views
trying.
About this on the panel.
Everything except
Dagan, I'm going to go to you
IWM and
first
NVIDIA
on this
barely.
one. What do you think?
What
SPX is going crazy.
On in the last 20 some odd years, and I will say it again,
15, 20 points from the top.
To use President
crazy.
Trump's
Bears are here
words,
crazy.
It's
3/3, 3/3, 3/3, 3/3, 3/3. All right, LOD
and
testing.
It is
3/3.
robbery
3/3.
of the American
3/3.
people.
LOD
Where
testing.
the
Now we're below 11
delinquency
a.m.
rates
levels.
are right now is at roughly 3%.
Oh my God. I don't even know what to do.
The spread over prime, the spread that the credit card companies and the banks charge the American people
big-ass red
on their
candle.
credit card
I am
debt
leaving one
has
DTs
blown
here.
the F
SPX, I am back.
when you look at prime.
Big time.
It has gone from about
Big
5.5
time!
percentage points back in
Retard,
2000.
big time.
This was prior to the change in the bankruptcy law by Bushy and Biden that now prevents Americans from filing Chapter 7 and discharging their credit card debts. So that means that they're a better credit
LOD
risk
testing.
when
There's a divergence
issue
at
the
the
credit
floor.
card.
There's
So
a
their rates
divergence at
should
the
be
floor.
lower.
There's a divergence at the floor.
Instead,
This shit could
the
break into
spread
tomorrow.
over
All right,
prime
divergence at the
has
floor.
blown out. Right,
Bulls
so it's
are
gone from
endangered.
5.5 percentage points to
Medium and long
a
term.
peak of 15 points.
That's what setup says.
Within the last year.
If this divergence does not clear
So
today, it will most likely clear
the spread
tomorrow
has
or Monday.
increased by 9.5
There's a
percentage
divergence
points
at the floor. There's a
since
divergence
early
at the floor. There's a
2000.
divergence at the
And
floor.
these
They
rates
can clear the divergence
that
whenever
the
they
likes
want,
of JP
however
Morgan
they want.
charged, Jeffrey
They could
Epstein's
pull this
bank,
entire day back and still
do
fucking
not
bounce it
line
after
up
this gap
with
fill and be
future
like, oh, it's
default
bullish. There's
risks
a gap down there.
or
Don't ever forget that.
expectations of default.
Don't ever fucking forget
So, yeah.
that. Man, news was hella bullish
This is
until
a
all this shit
negotiation
came out.
by President Trump, just as he was happening with Greenland. But what would it do? So JP Morgan's bread and butter is ATM fees and screwing merchants over and credit cards and the spread over
Why are
your
you saying
deposit,
Yogi
which
Yogi?
you
You watch
earn
Yu-Gi-Oh
nothing
or some shit,
on,
bro? Or you
and
call
then
me
the
Yogi Yogi?
7+%
The fuck does
that they
mean?
charge you for
Yogi
a
Yogi.
loan. So what would happen? It would just
like the
send
Himalayan
people
language for guru,
to
Furu or some shit?
payday
'Cause I don't do
lenders
that,
and
bro.
predatory lenders, but you're
Yogi
already
Yogi.
charging them those kind of rates.
What the fuck
Full
is Yogi
stop.
Yogi?
Murphy.
Yes. I think we need, so, the quick answer
I'm
is,
up almost
I'd
on
like to see
100% on
government
all
out of business,
fucking
not involved in
1DTs.
business.
I am
But go back to drugs. President Trump came along and said drug prices are too high, it's not fair, and he got them much lowered. So I think now with banks, when we talk about 30% interest rates on credit cards, it's not necessary. It's
LOD is
probably
testing
not
on
fair, and it's
IWM.
hurting our country as a whole, or anyone who carries a credit card
Yogi.
balance.
I
So
thought he was
what I'd
talking
like
about,
to see is less. I'd like to see it opened up to we invest
what's
in
that?
private companies. I'd like to
Beast
see
from the
an
mountains.
open
Yeti.
market where startups could come
Yeti.
in and
But like Yu-Gi-Oh,
compete
Yogi,
for this
but like you
business
say
and do it at a
Yogi.
lower rate. Like an open market
Yo-
where
Yogi.
if someone's charging you 30 and I'm offering 25,
fuck is it,
you're going to switch over to me. And if Jackie offers 20, you're going to leave me and go with her.
Love you.
So you don't see that. It's kind of like a big 5 or 6 companies
People like you,
that I think
DSD,
have
should
the
be in the
bulk
WhatsApp
of
group, man.
balances and
Chayaka,
are
you
making
should be in the
money from
WhatsApp
this.
group.
So I think what President Trump is
you
doing is the
active
right
a lot.
thing.
I just
couple
know,
of days,
Jackie, I'll
couple of
come
last
your way.
days. You should
I
join
do
the WhatsApp
think
group,
Senator
man.
Roger
People
Marshall
should just
has
request
some
to join the WhatsApp group.
legislation
Not if
out
you're not.
there that deals with the
Not if you're
competitive
channel hopper,
aspects
though,
of
or not a watcher.
who merchants can choose to use and over what
people that
lines
are
payments
always
can
active
run.
in the
So maybe
YouTube,
there is a
people that are
solution like
always,
that. Would you rather see
Time
the
is 3
president try to
p.m. is
move in
bounce
that
trying, yeah.
direction versus saying 10% cap on
Yes, because
rates.
I just don't like the idea of him telling a business what to do and how to run the business.
SPY
We've
is
seen other
reverting
examples
trend.
of this that we haven't
That's a
necessarily
30-point drop.
agreed with. Now, I'm an advocate of credit-free living. Everybody knows that. We've talked about it very sort of Dave Ramsey style. If you're in debt, get out of it. Don't go in it. It's made to bog you down so that you never can move forward. I've never paid an ATM withdrawal fee in my life because I always make sure I plan ahead and withdraw at my bank so I don't have to pay those fees. These are the kinds of things that they just kind of get you, and they're preying on people in that way, but people play into it also. When President Trump says we need to just do it for a year to let people get back on their feet, I hear him on that. I know he's trying to address affordability. But again, Brian, I don't love the way that he's going about it. Maybe a different, more competitive way would be the right way to do it. And I also sit back and remind myself, well, why do people need to get back on their feet? Actually, during COVID, because they weren't going out, because some were getting, stimulus checks that they weren't spending, that savings rate had skyrocketed in a way that we had never seen before. They were actually in great financial
went down
shape
like we've never
to be able
seen
to
before.
springboard and move forward. But then 9% inflation happened,
Right.
and it made it incredibly difficult to survive in this country. So when we're getting back on our feet, it's like, well,
Jamie
he
Dimon
knocked us off of
made out of diamonds.
our solid footing in the first place.
Now, I will say, Taylor, one idea that Jamie Dimon had, which is sort of interesting, is if Bernie Sanders and Elizabeth Warren really love price controls on credit cards, run the experiment in there. Let's do it in those states and find out.
Like you're running the communist experiment in my city.
That's federalism. I don't know. If you want to find out, go ahead, you guys. Persuade your brethren in Vermont to do that.
Sure. Easier said than done. I don't really know how you
Oh,
would do
hell
that.
no.
What if you cross state lines? I
Look
guess
how
the credit
perfectly
card
it
cap
aligns
in a
with the
certain state
0.5.
would only apply if you're a citizen of that state, or if that's where your home
of that
address
state.
is. A resident.
Is that it or
that
what?
Gets a little
Come
complicated.
On. Or is that going to reload here? Is this the
I
fucking
like-
balance? Is there a bigger balance
theory,
or what? Come
I
on.
like the idea, not in theory, in practicality. I like the
¿Por
idea
qué?
of lower regulation to increase,
Que no? ¿Por qué?
decrease barriers to entry so that more
I don't even know
entrants
what
can
that
come
means.
in, more competition goes where capital is
Said when.
treated best. I think
Why
that's
not?
the best idea. But again, I mean, what did JP Morgan say in their statement about the lawsuit? Oh, it's regulatory issues. So they're always going to say we need lower regulation. But does that actually just play to their book?
They burn off the fucking
worry,
puts
and
here.
maybe
I don't
you
know.
brought this up last week. I like lower interest rates
Man.
on credit cards.
This is the most crazy
But
shit
I
ever,
get
right?
worrid about how we use taxes to incentivize
You guys think this is set up?
behavior.
Yes or
And then
no?
did you tell
You guys
me,
believe
does
this
that
pullback
not
is
then
set up?
encourage
Yes or
people to
no? Or
spend
do you
more
think this
if they know
pullback
that
is
they're
just on
only getting
news and it's
10%
just like
worried
money
about
shit and
that.
it got pulled back to the fib or some
Again,
shit?
that's up to individuals to decide how they spend their money. I'm not going to
that a crazy-
cap a
what
credit
bull
card
should we
rate
do,
at 20 instead of 10
What
because
bull
I'm
should we
afraid
do?
that 10 will make you spend more. That's not my job. But there's just some other
Higher or
ideas to
lower?
ponder as we sit here.
Higher,
I
lower,
said they
into
need
close,
to offer up
or
a reasonable
was
explanation
this a setup?
as to why
Was this a
the
fucking
spread
setup, yes
over
or no?
prime has blown
Oh my
out
God.
when
Is
people
this still the
have
setup, yes or no? What
actually
the
become a
Oh my God.
better default risk because the banks and credit card lenders have a much easier time at extracting money from somebody who files bankruptcy. It doesn't make any sense other than just profit. Fine. But do not rip the face off of people and then tell them or have the audacity to tell them to read the fine print. We do things as a nation to protect individuals, like not selling OxyContin over the counter. And Washington, and Trump knows this using his bully pulpit, has been steamrolled by Jamie Dimon and his ilk for 25 years.
And my favorite protection for consumers always has been, always will be, more competition.
Talk about interest rates. Let's get to yields. Obviously, they've calmed down. Do you think this is just a temporary?
Taking a screenshot of this bitch. Yields are down fucking 4.8%.
Sort of respite because I mean the fiscal profiles in the U.S., for that matter, over in Japan, are not looking good.
Look, Martin, we're going to have
U.S. Treasury yields are down
day, maybe a week, maybe more,
4.2,
because Trump has backed down
3.5%.
about
That's a
his
motherfucking Bill
absurd
Ackman move right there.
militaristic type of ambitions.
That's a big whale move.
But it hasn't changed the underlying fundamentals, which is, you know, he has got tariff revenues of $180 billion. He wants to give $480 billion to U.S. consumers in the form of checks for every adult, and he wants to spend another $5 trillion on the military. Well, I mean, you know, the $180 billion doesn't fund those two things. So if you want to ask me where the budget deficit is going, you know, you could ask my little dog, and it'll tell you it's going up. And that problem has not been resolved. It has not been resolved in Europe, where there are different reasons, and defense will be an even bigger one. It has not been resolved in Japan.
I like this guy. I told you your dog could tell you if the candles are bullish or green or fucking green or red.
Got an idea about economics which escaped me in all of my education and 60 years in the business.
I guarantee you, I was the fucking goddamn minority saying this is a bear cycle. When did I say that?
To be honest, and with full of respect for the office,
this is a bear cycle.
But not for the man. I think Trump is talking absolute rubbish.
Goodness. Okay, which is why goes at least part of the way to explain why you were staying short dollar, as well as treasuries looking for yields to stay elevated, if not go even higher. On Japan, very quickly, you know, it seems like the situation at their long end is even more dire. There's been literally an explosion, a 5, even 6 sigma move. I mean, it was just like just eye-popping. Are you concerned that if she actually does win the elections, the snap election coming out on February 8th, with a stronger mandate, etc.,
cup and handle my ass. All right,
this could get even worse?
Oh yeah, it could get much worse. In fact,
this is a cup and handle.
My modest forecast, which is usually wrong, and therefore I counsel you against paying any attention to what I say, is that Japanese yields, Japan having worse fundamentals than Germany, will equate to German yields within a year, which means that at the 10-year level, you're looking at 290. And the reason for that is very simple, Martin. This lady is going to add between 3 and 4% per year to a stock of debt, which is 240% of GDP, and obviously this is not good news for the market.
That's not normal.
So
everything's going down. It's not
the
like,
likelihood is
Japan yields are going up as the U.S. yields are going down. It would be a different story.
But
what's going on right now is everything is going down. This is not good news. This is what smart money people are talking about.
And then Japan goes back to being governed by a load of ineffective and effete coalitions, of which she may possibly be a member.
Tell me how the U.S. yields are going down and the Japanese yields are both going down.
For Japan, because it would be a time for no economic decisions when you need a lot of economic decisions to put Japan back on a fiscal course, which is in some ways sustainable.
Do you think, David, that the BOJ has its back up against the wall right now? I mean, sure, they could intervene, right, to try and tame or cap.
What did I say when the view count died to 98 earlier in the day?
There's no way out of this. Then yen gets even weaker, right? Or are they going to
have to? I'm telling you, the realest fucking watchers on my shit remember it because this happens every day.
Yield curve
it's not a
control.
one-day thing. This is like literally every fucking day thing,
no
matter
look,
what.
Martin, I mean, Ueda is a man who sometimes talks in Japanese terms, and remember, we're talking about whispering at a tea ceremony. He sometimes talks tough, but when he comes to deliver, it's usually pretty soft. I don't think he'll do anything in this week's meeting. I think he may talk about doing something down the road. But the reality is the only thing he can do is tighten monetary policy. And the reason he has to do that is because inflation is way above his target, and it's damaging consumers because it is eroding their wage gains, and will do so more after the next Shunto. Of course, the Prime Minister wants to print a lot more money and spend a lot more money. But, you know, this is basically the big battle about central bank independence in Asia. Who is going to win?
This is not being biased at all. This is understanding that we're in a 1/3, 2/3, 3/3. We're creating technical patterns, and we're also doing things. We're creating cycles.
Donald Trump's fiscal policies.
We talked about Greenland situation, the Fed situation, what Trump has been talking about, and now Japan. Does that solidify, make it even more bullish around gold? That central banks are going for gold, and perhaps bigger allocations will come through for gold because that will make
guys,
people
last poll today.
want to avoid
into tomorrow,
all the fiat
into next week.
currencies
You are bullish or bearish?
That's really the trend. No one is talking about spending less at this point.
Look, it's absolutely a part of that, together with a number of other things. I mean, central bankers do not want to own fiat currencies as reserves, because when you put money into a reserve, you're thinking 12 years, 15 years. And during that time, you're going to have a lot of things happen to fiat currencies, like happened to Russia, like the US's new brilliant idea of having stable coins, whereby, you know, the entire current account surplus of the world will end up in the US Treasury to fund the budget deficit. I mean, who the hell wants to get involved in that?
IWM at all-time highs,
do?
slowly rejecting.
You will buy gold, and the Chinese will help because they'll internationalize the renminbi. They will have exactly the same surplus as before. Half will flow into Chinese assets, which is why I own them. But the other half will belong to people who don't want to own any fiat currency, including the renminbi. And they will flow into gold too. That's the gold story.
0 people voted bullish, 7 people voted bearish.
Greenland-related developments so far this year. Does that somehow entice or attract or introduce some of the European countries to do more business with China in RMB? Is that part of your premise?
Based on today's move and what they see, based on candles, they are bullish.
You know, the Chinese component, dual-use components are killing Ukrainians at the moment. So how do you do a trade deal and expand your interest with Europe if you're killing Europeans? But I would say the Europeans will ultimately move to China because it is a counterweight to the United States, and it makes sense because the technology which Europe needs, i.e. EVs, comes from China, and it will come as investment. So that is the new block which will happen, and it will be a further isolation and diminishment of the power of the United States. And Martin asked at the beginning, well, what's the cost of what Trump did? It's nothing.
Anything above 180 on NVIDIA means bull territory, so...
Let's talk about the cost of oil, energy space. I feel like
there's a lot of bears on Tesla, retail bears. This is the only reason why I didn't want to play Tesla down, because I did not know how it was going to play here. But when I heard that there's a lot of fucking retail bears here, I don't know what happened here and here, but I just have not been playing Tesla at all.
You have all these nice countries in the Middle East and elsewhere which are busy pumping the oil as they get up every day, and they pump the oil and they go to bed and then they get up again. They do the same thing. So that's kind of a stable forecast. What is different is Russia. People have decided, I mean the Europeans and the Americans, for different reasons, and far too late, have decided that all this Russian oil is scooting across the world to China and India is not going to go anymore. First of all, they attack the users, mainly India, of course, because nobody dares confront China, but it's actually much more important. Then they attack the tankers. And that is what is happening. That's new, because that means that those whole 1.6, I think it is 1.6 billion barrels of oil in these tankers, it's frozen. So that reduces supply. Now, the other thing is, will the Iranians, as the regime declines, which it is declining, it'll be gone in a year, another forecast, then will the Iranians close the Straits of Hormuz? And the answer, in my view, is no, they won't. Partly because the mullahs can't, and secondly because the IRGC, they actually make their money out of shipping oil, their own oil, through the Straits of Hormuz, so no, they won't. The big thing is, if the regime in Iran falls and somebody reforms Iran, which will be easy, it'll make Venezuela look like a horror movie compared to the reform story of Iran. Then Iran can pump 2 to 3% more oil than it does today, and that would bring down oil prices by 10 to 12
But that would be after the very initial sort of hiccup and a lot of a freak out over the oil prices.
But it's part of supply, it's part of the risk.
I hope this shit fucking reverts a little bit downwards into tomorrow, but holy fuck, there's a divergence at the floor. Sorry for my language. Oh my gosh, I just said that. Sorry for my language. I'm sorry.
To the markets and the one and only Clayman Countdown Floor Show with all the breaking news. We've got a perfect person here. Franklin Templeton, Chief Market Strategist, Stephen Dover with $1.7 trillion in assets under management. Let's get to this breaking news. What does it change about how you felt when you woke up this morning?
So we've argued broad market now last year and this year, and we've argued
45 minutes left.
So this is yet another case. We talk about the taco trade. The taco trade circular, if everybody believes it, the market doesn't go down, then it doesn't discipline Trump. So I was trying to think of a new acronym. Trump always causes oscillation Volatility, opportunity.
Okay.
I don't know what we got there.
I like that. Okay. Instead of Trump always chickens out, which was the original hedge funder.
Yeah, I think there's a difference here. This is what I think is going on today. We'll see how we mark this day when we look back. But
that must be a thing that
U.S.
smart money said, and now retail is picking up on it.
Before. This is a tipping point on globalization. If you look at such different speakers as Howard Lutkin and the Canada Prime Minister Mark Carney, basically saying, let's look at reality. Globalization's not going to continue. How do we move?
Our poll says there's
my instance, how do we invest going forward?
Given look at the 3 people bullish on WhatsApp or on the YouTube, and it says that there is
Carney,
1, 2, 3,
from Canada, the Prime
11
Minister,
people bearish
came out and
on
said,
the WhatsApp and YouTube combined.
We are not going to
I don't know what you mean by keep track of your surveys, but my surveys are pretty, it's always up there. People see it. People that are here, people that are on the WhatsApp group that actually use the polls for, their own opinions and all that, see the poll.
He said he would impose new tariffs. So again, a lot of oscillation.
People that don't, referring to with Carney is his saying we have to face the reality
1 a.m. when it's not relevant.
The old system is not going to be around.
And that reality is that he said Canada will double its defense spending. You are saying go with defense names, but not necessarily American defense.
Not necessarily American, Canadian, European.
I appreciate
those that are
everyone
related.
that is.
Look, the Europeans were playing a little bit of a game for a while, and had this thing called non-lethal defense spending. Go figure that one. But I think that's changing. We're very positive and have been very positive on the defense industry in the United States, but outside of the United States specifically.
Well, European names, Rolls-Royce, Rheinmetall. Yeah. We've been talking about that here on the show for, I believe, since late last year, and they have been on an incredible run. So you're looking at that point of view, but you also say, look at the financials. So I did. I looked at financials this morning, and it wasn't necessarily the J.P. Morgans and the Goldmans spiking. It was other names like M&T Bank, KeyCorp, Truist Financial, major gains from 2.5% to 3.75%. Which part of financials do you like?
Part of that is you want to be where they're going to benefit from the steepening yield curve, right? And so you want to be in the banks that are actually loaning money. And most of your listeners probably know this, but the big banks don't loan money anymore. Right, they're on fees. So that's why these banks are performing now in a different way.
Folks, I'm looking at another headline that is crossing. Emergency EU Leaders Summit will go ahead as planned tomorrow, even though President Trump has put out on Truth Social that there is a framework that has been met. Keep in mind that there have been past situations where he said a framework deal on tariffs have been met with certain countries, and then it was months and months. I'm thinking India, I'm thinking of the UK, although they finally got a deal with the UK. So it can take a while here.
It can take a while, but I think the pressure's off on that. I think the real big issue was tariffs, not a military action in Greenland. It's really curious to me. There's 2 other bits of news, of course, at the Supreme Court. It looks like the Supreme Court will rule in favor of keeping Federal Reserve down, and it also we haven't heard from the Supreme Court on tariffs, but it's curious that Trump would make that comment on tariffs at the same time the Supreme
Federal Reserve Lisa Cook.
Yes, thank you. And then the separate issue is really tariffs, which could have been ruled even today, and that's the power that Trump was using for the Greenland tariffs.
Stephen Dover, good to see you. And thank you for rolling with the punches, which keep coming. And again, I'm just keeping an eye on the wires, folks, because we are seeing lots of this. And
all I need is one candle down for 5 minutes. That's fucking crazy. I'm even saying this shit. There's 40 minutes left. It's like lottos. Shit's already lotto's power hour, so 3 p.m. Nobody fucking knows what shit's about to happen here. It's 3 p.m. It's crazy. IWM 3 p.m. is crazy. Look at this shit fucking finding support again. Oh my lord. Can't even close my eyes in peace.
It seems as though the president's heading into there, and he's expecting basically Europe to bend to his will. So I think it's very
dangerous to opine on what will happen given the volatility of the situation and given past precedent in terms of just last year. If you look at how tariffs turned out, there were so many twists and turns. So I think it's almost a fool's game to try to predict what will happen. We've done a couple of things which maybe can add some value. I was thinking about this before coming in.
Looks like I'm going to fucking goddamn Applebee's, folks.
Did some
Come on,
sensitivity
man.
analysis that if 10% tariffs are imposed and come through as has been indicated, that could result in maybe 0.1 to 0.2% decline in European GDP if that works through for the entire year, and somewhat more of 25%
which
tariffs.
they could handle.
Yeah, which could be there. So just to put at least
any
one
fucking
number out
candle,
there
switching my fucking life right here, 320. Come on, baby.
Some perspective. What I might say is, from a broader perspective, two added things, which is maybe broadening out from, say, Greenland specifically to the larger issue of geopolitical risk. Because obviously geopolitics, just with the 2026 having just being a few
Time
weeks
is 3:25.
old, already we've seen Venezuela, Greenland, and some other areas. So I think we can say two things. One is that markets, having had a very good 2025 and having, particularly the Asian markets, which I'm responsible for, having run up very strongly, 27% for the MXAPJ
Almost
index.
Back at 100% on my one DTs here again.
Without a meaningful pullback.
Zero DT is.
The historical clock is ticking in terms of markets being overdue some sort of a correction. If you go back over 15, 25, 35 years, on average, you get a correction once every 8 to 9 months, 10% correction or more.
Fuck.
And we've not had that.
We're overdue. Okay.
And valuations, of course, are high. And we started this year off on a good note.
So close.
So if there's a catalyst in the form of geopolitical risk concerns, then I think investors need to be aware that there could be some sort of a pullback. Indeed, we just had a series of investor conferences in Europe last week, which I was attending in 4 different places, over 1,000 people in different locations.
And all that bullish
and when we polled the audience, the largest risk element among a variety of different questions was geopolitics. Like over 40% of the audience raised their hands or voted electronically to say that geopolitics was a big risk.
Let me interject here. But why now? Because we're 4 years long into this Russian invasion and ongoing war in Ukraine. Right, oil's at 63-ish, right? Yields are where they are. It seems as though markets have ignored all of the geopolitics.
So that's right. And I think the reason, in part, Martin, is that the relationship between geopolitical risk and markets is not linear.
It's so fucking close to 4.
The metaphor that I find helpful to describe this is like those high school chemistry experiments when you are dropping some liquid into a beaker,
my God, it's back.
And you keep dropping, nothing
Come
happens,
on.
and with one
Come
final
on.
drop, the color changes.
Please.
Right? So you hit this sort of state change where nothing matters until it does. And I think that's an apt metaphor for geopolitical risk because markets tend to ignore it until it really matters. And then when it matters is oftentimes
twitches
a
in my
function
leg.
of the psychology of the moment as well as obviously the fact pattern. So really the point I'm trying to make, two if I could. One is that markets are overdue some sort of a correction, and the current elevation in geopolitical tension could be a catalyst to have some correction taking place. If that's the case, there are modalities that we're suggesting to help mitigate that. There's either some derivative strategies or some so-called one delta, just lower beta, higher Sharpe ratio trades.
I'm leaving in 1 fucking minute here. Oh my God!
You're an equities guy, right?
Wow.
When you take a broader look, folks take a look at your classic 60-40 portfolio, 40 being bonds, of course, and they're looking bonds. I don't know if they are really going to do it for me.
Time is 3:25.
Maybe what folks should be looking at would be in the equity sleeve.
$4,000. I'm out. 0 DTs.
Energy names. Even if they're ETFs.
I'm still on 1 DTs, fucking 110% now.
Good yield, and in this kind of environment, could provide the kind of protection that bonds are not right now.
Oh my God.
I have actually a lot of sympathy for what you just said for 2 reasons. That if you look at valuation of long-dated fixed income, it's okay, but not great in terms of the amount of term premium that one's getting, and given the longer-term dynamics and concerns. Just for example, in the U.S. bond market, about 6% of GDP fiscal deficits.
Time is 3:25,
et cetera. So you might not get as much protection as you indicated from that sleeve of the portfolio. On the energy side, I have some sympathy with that. We're actually underweight energy right now and have been last year.
Holy shit.
But one of the points we made in our 2026 Outlook piece we published just about 10 days ago was that as we go through 2026, we might want to start thinking about taking a more constructive view on energy.
My
For the
one
reasons you
DTs are
mentioned.
going crazy
One,
right now.
that you get a good dividend yield, you're paid to wait. Two, the valuations are low relative to historical ranges and also the amount of the implied energy price that's discounted into share prices. And three, even though we expect energy prices to be lower this year, we think the demand-supply balance will tighten as we get into 2027.
I'm out of three. One DT puts here for $6,000.
Being forward-looking entities may start to anticipate that in the
That's
latter half of
crazy.
this year.
I have
our
two
view
left
is that
for
maybe a little
4K,
bit early
4.4K now.
to pull the trigger
Holy
on energy,
fuck!
but certainly warming up to it.
Let's go! I had one DT, 6 fucking K. From the top somewhere in the purple box. Oh my god. Oh my god. Time is 3:30. Time is 3:30. Floor is testing. SPX is losing it. There's a 1 minute gap down. If this 1 minute gap down does not fill, they may fill it tomorrow. I don't know. They may just go down with the 1 minute gap. There's now a 1 minute gap on SPX. Alright, SPX 1 minute gap. Dude, you know how fucking crazy bullish it looked up there? Man, this is what I'm saying. Every fucking time it looks crazy bullish. Look at the 1 minute gap now. Alright, let's see what happens with this shit. They're going crazy low now. Everything getting left. Every fucking thing getting left. Look at the QQQ fucking dump. Look at the QQQ fucking dump.
So let's get right to the floor show to assess market reaction. We've got trader John.
Man, this shit is from yesterday. Oh, what a fucking day. Today was the most insane day in quite a while for me. Today. Fuck me.
At Davos, White House AI and crypto czar David Sachs, he said America needs to stay ahead
They were
in the
crazy
global
bullish.
AI race.
They were crazy bullish. To think that there was going to be a pullback today was literally to be insane. That's how crazy bullish it was.
Said that the
realists remember, I'm not bullshitting right now. I am not bullshitting right now.
Can get to work.
Man, look at the fucking dump. I leave so early. I'm still in one DTs. Crazy. I can't believe the 0 DTs came back.
Kind of worry
I
is
fucking
in the
can't
AI
believe
race,
it.
that if
Oh
in
my God.
a fit of pessimism,
Oh my God.
we do something like
Oh
what
my
Bernie
God.
Sanders wants, which is he wants to stop building all data centers.
Crazy
or
bearish.
if we have
Right, since
1,200 different
our
AI
poll was
laws
done
in
at
the
3
states,
p.m.
clamping down on this, clamping down on
Right.
innovation.
Look
I
at
worry
this shit.
that
Our
we could
poll was done at 3 p.m.
lose the AI race because
Somebody
of
was like,
self-inflicted
oh,
injury.
it looks like to me they're set up. Oh, it looks like to me they're
concerns
set up. And they
around
were
the
fucking
technology
patiently
and
waiting.
children.
Man, crazy fucking market was
People are
patiently.
worried about what impact
Damn!
this have. And that's something we're definitely looking
Yep,
at. And I
IWM.
think child safety has to be part of a larger regulatory framework. At the same time,
Okay, so in
LOD
general,
is
stay out of the way,
testing right
but
now.
yes, some guardrails for kids. We do need to protect the kids and train them as well on the technology. Companies wasting no time on doing that. Anthropic, Google, and Microsoft all made moves in just the last week to gain a foothold in classrooms across America, a move that OpenAI has also made. Anthropic is bringing AI tools and training to more than 100,000 educators in 63 countries, reaching 1.5 million students through a partnership with Teach for All. Over to Google, they have SAT practice tests with Princeton Review, as well as Notebook LLM for study notes and research, as well as a Gemini-powered writing tool with Khan Academy.
I'm still in 6 920s into tomorrow. I have 2 and they're at 5.2K right now. Insane.
Today could shape how Gen Alpha learns and
What
which
a dub.
LLM they use for years to come, Stu.
Guys, LOD is breaking. Divergence is clearing. They want to clear the LOD. Who remembers the LOD divergence? Who remembered? Right? Who fucking remembered the LOD divergence? Because this is a shit smart money fucking remembers. I'm telling you right now. Be honest. Yes or no? Right? I fucking told you candle traders are done for, right? When did I say this shit? 14 fucking days ago. When I've been saying this shit every day, right? No joke. Who remembers the divergence at the floor? Right? I said what? Medium term, long term fucking calls are in danger. Why? Because of this shit. They can do this shit whenever the fuck they want. Oh my
Let's
god.
start this hour with your money and big tech because there's a big new note out that is sending
LOD
Meta
divergence
skyward.
was ages ago,
Jeffries
but the
laying
fact
it on
is
the
the
line
LOD
and laying
divergence
out
exists.
5 reasons
It's
you
still
need to
there.
think about buying the parent company of Facebook, Instagram,
This is all a
and
part of the
WhatsApp.
game. They
Now,
might
those
not
reasons
clear it
include
now. They might not
valuation,
clear it
as well as a
tomorrow,
bullish
but
look toward
it
earnings.
exists. That's what
Meta
people don't give a
had
fuck
a bit
about.
of a rough run lately. It is
But
down
I'm telling
5
you
of
right
the
now,
last 6
that's the
months.
fucking mistake. That
Let's
people
shut
don't
up
give a shit.
and
They
get
don't
more
care
now
enough.
with the lead author
They
of
say
that
they
note,
care.
Jeffries Tech
They
Research
say they
analyst
want to learn.
Brent
They
Phillips.
say they
He's got
want
a
to know
buy on
everything,
Meta, a
but they don't because
$910
everything is too much.
price
That's
target.
the
And
majority.
Brent, I'm
That's
gonna
life. That's
just
the truth. That's
wildly
the fucking brutal
speculate
reality.
that the fact that Meta
If you
has
wanna,
been
you
down
know,
5 of the last 6 months makes
I
the
mean,
valuation
I'm just saying this shit. I
more
learned this shit
attractive
the fucking
to you.
hard way. I'm not fucking making shit up. It's just that's the
Hey, Brian,
fucking
yeah,
brutal
that's right. I
reality.
mean,
The
I think
majority
there's
is
several
not caring about the
factors. So
divergence
remember
at
at
the
the
floor.
beginning
The
of
majority
last
is
year,
not caring
everyone
about
hated Google.
any
It was an
fucking
AI
thing.
roadkill.
Why
It
am
went
I
anywhere.
saying
And we
this?
think the
Because
same
that was
thing is
me.
happening with Meta at the beginning of this year when we traded
That was me.
that they are nowhere in
matter
AI
if the
and that all
LOD
these
divergence
investments
was
are a
20
waste of
minutes ago,
money.
40 minutes
So
ago,
we
2
think
hours
that
ago,
there's
4
an
hours ago,
analogy, which
1
is
day ago,
last year, if you
2 days
bought
ago.
Meta on all the
Thing is,
concern
success
that all we
things
were
like
going to
that
do is use
means
ChatGPT to
that's a
find
setup and
everything,
it could be used. There's
that
a
was
1
an
minute
amazing
gap here.
opportunity.
Why isn't
And
this
Google
filling,
has
right?
gone
This could
up,
hold 5, 15,
60+%
20
since
minutes,
that
40
moment.
minutes,
So
1 hour,
we
1
think
day,
there's a
2 days,
playbook
nobody
in
knows.
internet, which is buy the most
At
hated
some point,
name
that thing will
of
clear.
the biggest names that aren't
Best
going
believe at
anywhere,
some
and
point,
that is
but
Meta
that doesn't mean
right
now. That just
secondarily,
means
the fear of all this AI
using
capex
cycle at
that
some
they're going
point.
to blow all the money and not have any return. I think that's silly. I think
This
we
is what
still
I mean
see
by the market
an
has
incredible
everything, man. It's
platform.
not just
The
you know one
engagement is
thing
off
and you
the
get
charts
everything.
in
It's
terms of
literally you gotta
their
know one
ability
thing
with
and you know the other
advertisers
thing and you
to
see
gain
that
ad
thing and you see
dollars.
that thing and that thing and
There's an
that thing and then
emerging
you
business
realize at the back of
in
your mind that you
enterprise.
realize that the LOD
Jeffries
was there,
is
divergence was
looking
there, and blah
at
blah blah.
using some of their enterprise technology.
Candle traders will never
that
understand
they've
what I'm
developed
saying.
for
Candle
consumers
traders
with
will not
Llama
get what
to
I
use
am
for
saying.
our own
They will just care about
organization at some
candles
point.
being
So
green or
we
red.
haven't gone there
And it will
yet,
just
but I
be
think there's an
good
incredible
times or bad
opportunity.
times.
Remember when
But the
Amazon
thing
launched
is,
AWS?
all times are
Everyone was like, "Wait, what is this?"
times.
There's an interesting
There's a time.
on-ramp with their open source solution in AI that enterprises can use, not just advertisers or consumers looking for the newest golf club if TaylorMade comes out with something.
IWM
So
going
there's
lower.
just a bunch of different call options that we think could go right.
Bears are still here.
And again, it's the most
Bearish
hated
still.
story right
I
now.
want to go
So
lower with the
great
1 minute
stocks
gap
have
on
great
SPX for
controversy.
now.
This name has incredible controversy going on, and so we could be wrong tactically when they guide.
Time is
that
3:35.
Maybe
This
they
is
come out with
power
a really
hours.
aggressive guide in capex and it disappoints, but we use that as a buying opportunity.
This is power hours.
Let's cut through the drama. Let's get to the big point, the elephant in the room. What happened at dinner time the other night? I've heard all kinds of stories, booing, Lagarde storming out the room.
Time
what
is
happened?
3:35. Bears are crazy right now. They just dumped $4 from the top again.
An op-ed in the Financial Times. And so they called on me. I gave, I don't know, 2-3 minutes of my FT.
Divergence is testing right now.
Which basically said that
divergence
globalization,
LOD.
right, and the outsourcing of your industry to the lowest cost in the world, right, had really harmed America. It had harmed Europe, and it had failed. It had failed us. And that we need to reshore, need to take care of our own citizens. So that's basically
From
the model.
622, we're at 619, low of the day
2 or
today.
3 minutes. One person of the 200 odd people in the room booed, and I felt honored because it was Al Gore. You know, Al Gore booed, and I was like, really?
So Madame
I thought
Lagarde
it was hysterical.
Madame
It was
Lagarde
really
wasn't
hysterical.
throwing bread rolls at you from the back. That wasn't happening.
There's one people that is bullish into Friday and next week, and 17 people that is bearish into Friday and next week. Who remembers the poll at 3 o'clock?
And the idea of
3:10.
global supply chains and finding the
Crazy
lowest
poll.
cost. I mean, that is just
I said
not the
insane
way
poll
to take
results
care
at
of your
3:20. It's
auto
the most
workers,
insane shit ever.
right?
And
Who
they
are in
went at
Ohio and
3:20.
Michigan.
Time is
And so
3:35.
we're bringing
Bears
that
are
back. So
crazy. They
think
want to
about
break the floor, and
this.
divergence
When we were
cleared
done
today.
with, we started auto tariffs. We started
Hello,
working
the
on it in
divergence
March.
is clearing.
And we finished in November. And we were done. The last day when we finished, General Motors and Ford stocks each went up 10%.
QQQ's
General Motors
dumping.
ended the year up 60%. If I told
Nvidia
you
is
on
going
January
lower.
1st that General Motors was going to be on 60%, you would all said, "Oh, stop it."
I almost want to say Nvidia is dumping. IWM is dumping.
Who runs the United Auto Workers called me and said, "I can't
LOD
believe
is testing
I'm
on
calling a
IWM.
Republican Secretary of Commerce to say, thank God for you and your administration. You're the first administration who's actually taken care of the auto workers of America. So think about that. You can, if you really think it through, you can take care of the company and the worker. You don't have to pick sides because we want union labor growth in America.
Please type yes or no. Who remembered the LOD divergence at the floor? Because barely anyone remembered. That's why someone said the LOD divergence was ages ago. I'm telling you, you have to remember this shit. I don't give a fuck if it breaks the floor or not today. You need to remember what I'm saying, right? The shit that's going on is deeper than just candles. The shit that's going on is literally fucking something deeper than just candles. So when I literally am asking yes or no, just be honest, you know what I'm saying? Like, I'm not saying, did you remember the LOD divergence next time? Oh, it's the only thing. I'm literally saying, just remember it happened because it's a part of what's going on. It's a part of the system. It's a part of everything. So you have to remember that there's a 1 minute gap here. You have to remember when they're going to fill it, and when they do, you just experience, right? If they clear it, all you're like, all experience. But when it was super bullish, I guarantee you, the majority did not, because this is 10:05 showing right here, and the low of SPX literally shows as
it's like a small thing.
My spouse doesn't go out there and deliver a speech after that argument. That's the end of the relationship.
Fair enough, but
wait, there is no divergence. It's weird. There is a divergence at the floor on this QQQ.
Because a day or two later, there's a framework that makes sense.
All right, that's the weirdest thing.
What did we say?
But this is the QQQ that I go off. So.
Security. Right? We said we care about it in national security.
10:05.
I mean, it's obvious we care about it for national security because if you're going to build a golden dome over the United States of America,
I understand people are like, Jeff, you're talking about a 1 minute difference, you're crazy, blah, 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 blah. But if you really think about it, people that don't decipher the 1 minute candle into the 5 minute candle don't see, look at this, 10:07, right? 10:10. I'm telling you, people that are not looking at these 1 minute candles and that are not looking at the candles and not understanding setup, not looking at the 5 minute candles into the 1 minute candles, are not even understanding that the divergence is there, and then they literally get trapped on these candles. Right? There is a divergence at the floor. SPY is 10:10 right now.
That's what the United States cares about. We
gotta go look at SPX. SPX low is 10:06. So there's a divergence on SPX and SPY. That's stronger. They want to clear that bitch now. Today. There's a divergence. Literally SPX and SPY divergence. It's not even just. It's not even just SPY and QQQ. There's a SPX looks like QQQ. That's the most craziest part. Thank you for saying yes or no, so we can all see, and you guys can just see what happens today. Later on too.
And like within 4 days.
But it looks like there's a divergence at the floor. That's the most craziest part.
By the way, that's a pretty
because SPX and SPY divergence is clear way faster than not, but they held the thing the entire day.
The threat of them are coming on for February 1st. What does this do now for the agreement you and your team struck with Brussels? Because the legal implementation has now been put on hold.
Oh, I think it'll be put on hold probably tomorrow.
That's the most craziest thing that stands out for me today. That's, you know, because I've been through the other bullshit to kind of understand the other bullshit, but yeah, that's the most interesting thing for me.
Military people to
SPX is showing the low
didn't send military people to Ukraine.
Like,
why did they send military people to Greenland? Wait,
hold on. The low at 10:07 is
we spoke to the Finnish leader, and he suggested that was a miscommunication, and he cleared that up pretty quickly. There's something I want to get into with you.
There's a divergence on the floor.
This, of course,
on SPY and SPX. They want to break the floor.
They
want to fucking dump it all. That's crazy. Oh my God. Today's entire day turned into a bull trap. That's the most craziest part.
He tried the same thing with Canada and totally upended the
election
election
of today
in
turning
Canada
into a
north
bull
of the
trap
border.
almost.
Poilievre was going to sail away
They
with
want to
that.
break this
The
shit.
reason Mark Carney's here as Prime Minister is because
if they clear the divergence, though, the gap is so close, they might even go down there tomorrow. But that's so fucking crazy. Everything
then the Canadians started lighting up the Bloomberg
little spike
sending
candle
messages.
not
They were
pull back,
deeply
but it went
offended.
way
And you've seen that damage the economic relationship with Canada and the United States.
It might not clear today too, but this is the most crazy. I'm just watching out at this point. I'm in 1DT small, but this is crazy to me. I think it's going to clear at some point.
Are valid points.
I don't know if today or tomorrow.
By lots of Europeans, but the style in which it's being delivered at the moment, some of them are finding it offensive. Do you think there's a risk here that we damage the economic relationship with the Europeans in the same way we do with the Canadians?
SPY and
for that
SPX.
matter,
That's the weirdest
the
shit ever.
conservative movement in Europe that's well underway.
That thing must be like a magnet.
I don't. I think the fact is that you need to rethink. I think Europe is amazing, and it's got extraordinary opportunity and a $20 trillion economy. But think about this. If they had the right digital rules, meaning similar digital rules to the United States, we have $6 trillion worth of committed investment to build data centers in America, and we have a $30 trillion economy. So if they had a $20 trillion economy, you'd say, okay, if they had the same rules, they could get $4 trillion. Or how about $2 trillion? You realize $2 trillion for their economy, right, would be 10 points of GDP spread over 3 or 4 years. I mean, that would produce amazing growth. And let me sort of explain how that works. So we did a deal with Micron, right? They're going to build $200 billion in America. So on Friday, last Friday, we did a groundbreaking of their mega fab, $100 billion fab. And where did they do it? They did it in upstate New York in Syracuse. Now, there hasn't been industrial building in upstate New York in probably 40 years. But if you think about it, it had a huge industrial.
You know what's the craziest thing too? So I know for a fact if I do the poll, do you think there's a SPY and SPX divergence? The answer is going to be yes and no too. And I used to be a part of the no too. But like, there was a time where I did good on it, and there was a time where I got fucked on it too, thinking about it, and I was like, yeah, I mean, it's just
thinking in this arrogant kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results?
You could argue it's making bulls and bears hope on it too, right?
Or their economy is decaying, right? Is it necessary to provoke the visceral
There's a reason why they left the damn 1 minute get there.
Among a lot of leaders here and in conversations with international investors. I mean, is there any other way? Is that style more harmful than it is helpful?
I would have seen them too.
Well, I think it creates listening. Like people pay attention to it and listen to it. If you just sort of blend in, no one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right, that Canada has never expressed to the world that they have the best deal, the second best deal in the world. The best deal in the world is Mexico, because remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him, but do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain?
Mr. Secretary, in fairness, you've seen from the airplanes, you've seen about a 30% decline in Canadian visitors to the United States, if not significantly more. You've seen a similar type of decline from China. European travelers inbound have come down. There is a sense that people do not want to come to the culture of the U.S., and there is this anger about it. And I just wonder if you think that that's just temporary, or you just sort of dismiss that, or you think it's irrelevant to the actual issues.
I think what that
is at the .618.
Right?
SPY
the
is
Canadians have the second best deal in the whole wide world. If they continue this path, right, which is a political path of a certain thing. I'm going to go fly to China. I'm going to open up my markets to China. I'm going to take Chinese electric cars and do all sorts of this stuff. Then when USMCA gets renegotiated
this year,
sort of like towards the end of the summer, in the middle of the summer, do you think the President of the United States is going to say, you should keep having the second best deal in the world? I mean, you guys are such great friends. I mean, they are playing with a set of rules that they haven't really thought
I can hear it in your voice. You're excited about negotiating this, aren't you, later this year?
Well, they've sort of given a sort of a roadmap of saying, so I guess we should change the whole deal, right? You want to be like the rest of the world. You don't want to be this favored neighbor because you've taken it so for granted that you're willing to come to Davos and say there's two hegemonic powers in the world and we're going to decide which one we're going to work with. Really? You're going to either work with the United States of America, where 75% of your economy is totally tied to it, or China? Why would you say that? It just, I think it's political. You know, I think if we take it correctly, we should look at it as just political noise coming out of a prime minister. And maybe this is working for his election, right? Because I don't think it can be real. Because if you took out the math of Canada's economy and it doing business with the United States of America's $30 trillion economy, there's no such thing as changing what they have today. No one would vote for changing what they had today. Now, maybe they're marketing it well, but they're just for their politics. But they're
Insane
surely
chop.
not marketing it
Well,
well
it's going
for
lower,
their
making it
fundamental
look not
economics
bearish,
for
making it
long-term
look bearish.
The U.S. is doing deals with China, and I'd love you to walk us through what's going on with the H-20s. Is it accurate now that basically for China to get the H-20 chips, Taiwan needs to send them to America for us to put a tariff on them to make money off it and then send to China? And is it your understanding that China might be suspectable now to these chips, suspect because they're entering through the United States?
So it's the H200, right? So that's the chip we're talking about. And Jensen Huang came to the Oval Office and he argued that this is a better chip than they can actually make at any scale, right? So if we sell them to China, right, and Chinese businesses, then they'll start using them and they'll develop on the American tech stack, and that will take some money away from the Chinese tech stack. And it's an interesting argument. There are two sides. There are strong two sides. We shouldn't sell them any, or we should sell them the H200s.
Where do you sit?
And I stand right in the middle. It was a really, really good discussion, okay? And the president decided that, fine, we'll sell the H200s to them, okay? And he made that decision. And after he was done, he said, and you know what? I think if we do that, we should get 25% for the American taxpayers. Right, because we're creating something that didn't exist.
Do you think China wants to buy them, knowing that they're going from Taiwan now back to the U.S.,
they're coming
then to
the
China?
United States because in order to collect 25%, right, the process matter to do it right is you import it, put a tariff on it, and then export it again, okay? And so that's the model. It's the process model to execute a plan that the President of the United States of America made. Right? So that's just the execution model of how to do it. It's just process, right? And it's the same H200 chip. And the question we'll find out is that businesses in China want to buy it. That's for sure. The question is, does China's central government, right, want, when they have that same argument, do I want to give my companies this chip that they're all clamoring for? Or do I want to force them to take the pain of using lesser chips that are domestically made, but helping our domestic companies grow?
There's 10 minutes left.
A question we're going to see how it goes. But I think the president put that question out there, and I think it's a really interesting one. I didn't say there's not two sides of that coin, right? Yeah. But the president thought having Chinese developers on the U.S. tech stack, right, given sort of the middle, he falls that way. And it was a really robust discussion. Both sides of the discussion were in the room. It was a deep and thoughtful discussion, and that's where he came out, and that's why he's the president.
So, just a final thought. Just listening to this engaging conversation of the last 15 minutes or so, do you fancy the Fed seat over the Federal Reserve? I can see Commerce Secretary in the Eccles building.
I fancy it?
You can see him in the Eccles building.
Oh, my God.
Can you imagine the magic of that news conference? These news conferences are pretty dry.
I would definitely sign up for the news conference. I'd be going.
You know what I call that? I call that an Amy Winehouse. No.
I call that box office, sir.
What a spike. QQQ spike, SPY spike, and IWM spike down.
And whether it means it is once again time for stocks to surge. Let's ask Ed Yardeni. He is the president of Yardeni Research, and he is with us, as you see, at Post 9. I mean, nice to see you. It's a noise versus reality market. It continues to be. You're smiling because, I mean, we've seen this movie so many times before. We try and fall for it, and then here we are. What's your view?
Well, my view is that the economy has been remarkably resilient through thick and thin. It's been hit by all sorts of shocks, really since the beginning of the decade. Last year we had the tariffs, and we had remarkably strong second, third, and now probably fourth quarter real GDP numbers. And as a result of the resilience of the economy, guess what? Earnings are extremely resilient. So I think we've got a earnings-led melt-up in the stock market. Earnings are melting up, so the market's melting up.
I mean, I think you lay out the reason why people say ignore all of the noise, and bluster is not policy.
Correct.
And focus on the prize. And the prize is exactly what you lay out, as did David Solomon this morning with Squawk Box. Listen to what he said. All right, well, I'm going to tell you what he said. I will. He said, I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. May not happen, but Certainly, that's what people are betting on, right?
Well, Scott, I hate to push my brand here, but I've been talking about the roaring 2020s since August of 2020, and it's been working pretty well. I mean, we're 6 years now into the decade, and stock market's at an all-time record high, GDP all-time record high, and so all we got to do is what's going to happen the next 4 years, and I think it's a reasonable bet that the economy does not have a recession. If it doesn't have a recession, then PEs stay here, and it'll be earnings driven.
What about the idea that, if nothing else, the erratic policy making is just going to lead to more volatility? It may not lead to a big and prolonged drawdown as we keep witnessing, but it may at the very least, the minimum, just increase volatility.
Well, I think the market's kind of getting used to it, right? I mean, last year, the volatility to the downside was pretty terrible as we got towards Liberation Day. And then a few days later, we saw the president moderate his views, and the market went straight up. I've observed that geopolitical crises are very often buying opportunities, and it looks like everybody else knows that because they all jumped on the geopolitical crisis we had on Tuesday with Greenland, and by Wednesday it was, so what?
Yeah, but it was more than geopolitical. It becomes with the tariffs, then it becomes potentially economic again. And we don't want to have to get our pads and our calculators out again to try and figure out what additional and increased tariffs are going to mean for GDP here, there, and everywhere else.
On Tuesday, we could have had a really bizarre situation where the president was talking about 10% tariffs additionally on Europe, and the Supreme Court, we were all waiting for them to rule, and they might have ruled that they're not constitutional. Now I think we have to wait until February to get the results from them. But look, this is the art of the deal. It's very noisy, it's very loud, it's full of bullying, and at the end of the day, deals are done.
Right now we have a framework.
Exactly.
Maybe we'll learn what exactly the framework is coming up.
But as long as it doesn't really affect the U.S. economy.
Well, that's the bottom line.
Yeah, that's the bottom line.
Well, that's why the market has reacted the way it has the last couple of days.
But it's not just the bottom line. I think the economy itself is demonstrated as like, make my day, hit me. And we've been hitting the economy with all sorts of shocks since the pandemic, and the economy just keeps moving along. Consumers spend and businesses spend.
Market para close. Look at IWM trying to climb from the low of the day. The fuck?
Hearing a lot from the president about some of these investments in the U.S. Some of those investments also involve the tech space. What are you hearing there in Davos about the idea of tech companies internationally really investing here in the United States?
Look, Frank, for the first time in 30 years, U.S. is ahead of China when it comes to tech because of the AI revolution. And I think, there's one chip in the world fueling the AI revolution. Godfather of AI, Jensen, NVIDIA, you look at Microsoft, you look at Palantir and others. And I think that's really what I'm hearing here at Davos in terms of talking to tech leaders. More and more, how do they invest in AI? And the biggest beneficiary of that is U.S. tech stocks.
All right. I want to talk about your most recent note that you wrote from Davos. Obviously, it's kind of informed by some of the conversations that you're having there at the World Economic Forum. Now, this was interesting. You say in 2026, chips are going to take leadership and also software is going to take leadership. We've seen software under quite a bit of pressure. I was speaking to a lot of different tech investors and tech voices, including Ben Rietzis most recently. He said the real issue when it comes to software is that AI is reducing the number of seats in every company. What are you hearing there that's changing your opinion or maybe informing your opinion about software where everybody else has some concerns about it?
Yeah, look, there's clear concerns, but look what Palantir has done. I mean, front and center. I mean, the use cases are being led by software. And I think MongoDB, Snowflake, and some other good examples of it. Look, is it a back against the wall for a ServiceNow, for a Benioff and Salesforce? Yeah, but I believe this is actually going to be a year where I think software surprises. Right now, New York City cab driver, even the Davos cab driver is bearish on software stocks. I think that's actually going to be a big trade in terms of bullish that we are going into this year.
All right, I want to talk about some breaking news as well. Reports crossing just about an hour ago that Alibaba plans an IPO of its chip unit, its AI-focused chip unit. The timing certainly is interesting because the World Economic Forum is very U.S.-focused. We're hearing from a big Chinese company. What do you make of that? What does that mean for the chip trade and the chip complex globally?
Yeah, Frank, it speaks to my view. You have to own some of the China plays. Alibaba's actually been one of our favorite plays in the IVE's AI 30. I think they are front and center as a huge beneficiary in terms of China tech. Look, in this AI arms race, obviously it's U.S. tech, but it's also China tech as well, Baidu and others. And I think it speaks to our view. Look, this is in a 9-inning game. It's third inning, one out in the AI revolution. This is not a bubble. I've seen it at CS. I see it here at Davos. It's actually accelerating into this year. I think investors are, underestimating, both in the U.S. and China, about this AI party we talk about. Still only 10:30, 10:45 p.m., goes to 4 a.m.
You continue to go with that metaphor, Dan. I do want to also ask you more broadly about some of the dips that we've seen when it comes to tech. We had a guest on earlier saying, yes, there's sometimes you should buy the dip, but you should also be taking some profits. So at this point, I know you're always saying it's the early innings when it comes to this. It's the fourth industrial revolution. But at this point, with some of the big run-ups we've seen in tech stocks and some of the volatility that could be coming up this year, is now the time to take some money off the table?
I don't think it is, Frank. Look, my view, the next few weeks, it is going to be a monsterly bullish earnings season for tech. And I think that's not factored in. Look at Microsoft, the way it's trading. I think look at some of the hyperscalers. You look at the second, third, fourth derivatives that we see across tech, Nebius and some others. I do not think it's the time to take chips off the table. I look at NVIDIA. I think that's a stock we've talked about. It's a lot of sort of upside here, AMD and others. This is the time to sort of own the winners. Do not panic. In my opinion, especially coming after this week in Davos, more bullishness with, I think, a better geopolitical backdrop relative to, 4 or 5 days ago.
Yeah, in all fairness, I think it'd be hard for you to get more bullish than you already are. I know you have your IVE's 30, but very quickly, can you give us one or two picks that you see really shining in this earnings season coming up as we await for more tech earnings? Obviously, we already had Netflix, but we're still waiting for the Mag 7.
I think cybersecurity, CrowdStrike, front and center. I think that's going to be, a name that's going to shine. And then I also look at, to me, I think Microsoft's going to be the one where everyone thinks it's negative right now, the way that stock's selling off. I think that is going to be a clear standout. Microsoft and CrowdStrike, those are the two that I highlight.
All right, guys, I am short into tomorrow. We shall see. For 6.5K, I added some on SPY. All right, and kept 2. Holy shit. Today, tomorrow. What a day. What a fucking day.
I don't think I can go to sleep now. Fuck. I'm about to be up all night. All right, have a good day, everybody.
Kerry, it's good to have you here. Your thoughts on this market and what we've learned from this interview with Joe and the president.
Well, it's been a fascinating couple of days, that's for sure. I think that what we've seen, in addition to this question about tariffs and what's going to happen with NATO, is that we keep bumping up toward the highs, and we get there, and there's a backing off. And what we saw was what appeared to be a tipping point right as we're about to hit through new highs, and then there is this fear about what happens with tariffs or NATO or escalation. But you begin to wonder if there's something around the corner that keeps stopping us from getting through those highs, because we've had 3 years in a row that have been fantastic years in the market, 25%, 25%, 18% roughly. I mean, honestly, everybody's been saying 8 to 10% this year. That feels high. It feels to us as if the market really isn't so set on pushing through and back up another 10%.
We've seen this movie before, quite obviously, and we're conditioning ourselves, and maybe we will even further, to ignore what some would suggest is simply noise. And the fundamentals and the backdrop of what got us here in the first place and what we think is going to take us to the next stopping point in this record-setting rally are still in place.
Yeah, we're definitely in a good economy, right? We know that GDP is growing, there are going to be tax cuts, consumers have money, they're spending money. We also know that what's powered the market are the Mag 7 and Mag 7 adjacents that have moved us to where we are right now. And the idea that we're going to move up another 10%, not on the back of those stocks, but on the back of the rest of the S&P, becomes tougher, because the 300 names that are the bottom 300 in the S&P, I've been asking people all day if they could identify how big those are. That 300, they're roughly the size of NVIDIA. All 300 of those names, the size of one stock. So if you don't have participation from the top names, it's very hard to push the whole market higher without the rest of the market, the lower, going up 30%, 40%. It just makes the math hard to work.
Are we to assume that we are in, at least for the near term, a renewed environment of volatility?
I'd say right now we're on back on risk on. I think Mike alluded to that. Right now, people are feeling good. They don't feel as if we're going to have a war in the North Atlantic. It's pretty good for my 4 Danish grandchildren. And I think the market is, enthused. We saw it react so quickly. But it worries me that we had that big drop yesterday. I mean, it was just, like cataclysmic right there. And, who knows what can precipitate it, but we're not going to have that tomorrow. Tomorrow, I think we could, continue to look good.
What looks the best to you in the market right now? What's going to dominate the story for the year in terms of returns? AI is going to dominate the story in terms of, the environment. But what's going to lead, do you think, this year?
All right. Well, I'll tell you a category, and then I'll look at sectors. So, as you know, I've said healthcare was going to be a top sector. We've not seen it great. It had a very good fourth quarter. It's the industries that figure out how to play ball correctly in this administration with this environment that we're in. And, right now the energy companies are looking good because their stocks have been strong. They're concerned about what happens to them if the president has the price of oil capped at $50 or whatever is his choice. So if you can figure out how to manufacture your goods cheaply and sell them at a price that doesn't attract scrutiny, those are winners.
I thought Kathy Wood of ARK made an interesting comment today on the halftime report when I asked her why, if she's so bullish on the AI story, and she owns some of the names that play right into it, she has around 1% positions in the hyperscalers, the Metas and NVIDIAs of the world, and she has obviously had a history with her ownership of NVIDIA, and she talked about the return of invested capital, that traditionally it's been so tremendously high for those types of companies. But now when you're spending all this money and you're not exactly sure about what the return on that capital might be, it could be a bit of a comeuppance in the way that you have to think about those names as to why she has what some would suggest are smaller size positions for even somebody who's so bullish on the story.
Yeah, and she probably had 10% positions in 4 or 5 of them 2 years ago, right? So I would agree that the return on that capital investment is a big issue. And when I grew up in the business at Fidelity, we all were under the impression, and we traded in a way that if companies were beginning a capital investment cycle of huge proportion, that was not the right time to own them. You waited until they began to see the return, the cash return on that investment, and that would not be this year.
Well, it's great to have you here. And I want to start with what stocks did here in the U.S. really well last year. But if you look at global stocks, you could say that there was certainly some underperformance by the U.S. You've invested in a lot of U.S. names, but also a lot outside the U.S. And I think about Chinese companies, BYD, Baidu, Alibaba. Are you looking for more opportunities outside the U.S. at this point? And I wonder if you think it's time for maybe U.S. stocks to take a little bit of a breather after 3 years of double-digit gains?
Well, I think we're very focused on the deregulation, lower taxes, and what we believe will be lower inflation, much lower inflation, and lower interest rates in the U.S. And we think the combination of those is actually going to drive the returns on invested capital in the U.S. up relative to those in the rest of the world. And I think many people are underestimating, especially on the corporate tax side, that thanks to the new depreciation schedules, our effective corporate tax rate, not the statutory, but the effective, will drop to one of the lowest in the world at roughly 10%. Certainly near a record low for the U.S.
So do you think, Kathy, that's not priced in yet to U.S. equities? Like, have investors not realized that, and therefore it's not priced in yet?
You know, it's very interesting. Maybe a lot of your guests have been talking about the depreciation schedules, how massively they are going to encourage capital investment here in the United States. So we've never had full depreciation in year one of manufacturing facilities, full depreciation in the first year of service. That means corporations will get huge tax refunds that they will be able to reinvest into innovation, because we also equipment, domestic R&D, and software. Those three, full depreciation, first year of service, that has been legislated. Normally we get, a few years of this, this cut and that cut. But that has been legislated. Now it's all the time. So we don't think people understand how profound some of these tax changes are.
So what does that mean for something like the AI trade specifically, Kathy, where I think people are worried about pockets of it with being in a bit of a bubble? Does it benefit everyone who is somehow associated, whether it's the chip companies, whether it's the energy companies? Do you see the benefits playing out there and giving it more room to move to the upside?
Absolutely. Absolutely. I mean, we're having huge build outs of data centers and power facilities. All of that, all of those depreciation schedules will apply to this boom in investment
crazy
and
on
contribute
1DT
to
now.
it.
I'm
So
fucking
yes.
terrified.
Carol, I was just going to say, many people think we're in a bubble, and yes,
all
the
this shit we
data
did
center
today.
spending last year was about $500 billion, and you can see all of this in our Big Ideas report. We just released it yesterday, and thank you, Bloomberg, for featuring it. But $500 billion is a 2.5 times increase from where it had been trending for years. So big increase, no doubt about it. But we think that number needs to go to 1.4 trillion in the next 5 years to accommodate the AI boom that is now underway and is going to drive productivity gains incredibly.
I want to get into that in just a moment. I'm really also interested in the healthcare aspect of it because I feel like there's a lot going on. Before we do so, we also have your 2026 outlook. And what's interesting is you note that this is an important economic historical moment. How so?
Well, we're in a technology revolution. And many people thought that the internet was a technology revolution, and to some extent it was. But today, instead of just one major platform evolving, we have 5. So robotics, energy storage, AI, blockchain technology, and multi-omic sequencing in the life science space, which we believe is the most profound application of AI, healthcare. And so this boom, if you look back at the railroad boom, the amount of investment that we saw back then was about 6% of GDP at its peak, 5 to 6%. The internet boom was more like the auto boom in the early 1900s. It was more in the 3 to 4% of GDP range. We believe this 5-platform innovation strategy or boom is going to move to 12% of GDP. And we do believe also that productivity growth will accelerate to the 4 to 6% range and be sustained there. Normally we see a cyclical peak around there and then it falls back. We think it will be sustained, and we think that by the end of this decade, real GDP growth could be averaging more than 7% per year. Wow. And I know that sounds shocking, given that we've been at 3% for 125 years. But it is the history associated with technology revolutions, a step change up in GDP growth.
The productivity increase, the GDP growth that you are forecasting as a result of these disruptive technologies, to what extent is that the result of fewer people doing more? My question is about job losses as a result of this technology, because if everything that investors are betting on when it comes to this AI revolution comes true, it means that companies aren't going to need as many people to do a lot more. What does that look like?
Well, GDP growth at 7% plus per year tells you there's going to be a lot of economic activity, more economic activity from a sustained growth point of view than we've seen in quite some time. The history of technology is it's a net job creator. In the early 90s, when developers were evolving the internet, we could not have imagined Uber or Airbnb back then. And I think the same is true now. We cannot imagine the kinds of jobs that are going to exist in the future. And the other thing that we're excited about from a job creation point of view is we're seeing new worlds being created. And by that I mean most of us think about Earth, but now we're moving into space. Even data centers, we think, Elon leading that charge, will start moving into space, and we won't have the not in my backyard and the bureaucracy associated with data centers. There's going to be huge job creation around the space exploration and all of the opportunities out there. And then the other one, and you'll find this in our digital assets section of Big Ideas, is the digital world, immutable private property rights. We know from economic history
took a screenshot before they said I couldn't.
And countries
took a screenshot before they said I couldn't.
With private property rights that are immutable. Well, that is now moving into the digital world for the first time, thanks to blockchain technology. So we're not worried about job creation, but for those who are, because there is something happening that I know is concerning to many people.
Tesla is reporting next week.
The unemployment rate for 16 to 24-year-olds has
next
moved
week on
to
Wednesday is huge. FOMC
12%,
decision,
big increase.
rate cut,
and
earnings.
What is that saying? That's saying that entry-level jobs are not being created the way they used to be. To those people, I say, you know, you must have in your mind an idea for a new business, something that frustrates you, an unmet need. Well, now you can go to ChatGPT, you can go to Grok, and you can have an assistant help you build out that business.
Talking about fucking chat.
Just interview for jobs, but also think about new business ideas. I think we're going to see entrepreneurial explosion here.
Well, and, you know, speaking of entrepreneurial explosion, I think about, you know, how long you have certainly been with Tesla and a backer of Elon Musk, a long time. And I think about, you know, when we first talked and you likened him to Mr. Einstein, Albert Einstein. But I just wonder, Elon at Davos earlier today, and he talked about the car makers' fortunes will be increasingly dependent on humanoid machines. Kathy, how are you modeling this? I mean, into the thesis of Tesla. And is that where the growth is more so than EVs for Tesla going forward?
Without a doubt. We've always said Tesla is not an auto company. It is actually the convergence of three of the platforms I mentioned. So robotics, energy storage, and AI. Each one of those technologies, it has its own S-curve. And now they're feeding each other, and we're seeing that in robotaxis. Robotaxis, we believe, will account for 90% of Tesla's valuation by the end of the decade. We're in print at 2,600. That includes nothing for Optimus robots. And we're beginning to understand how quickly Tesla is moving on that front. Why? Because it's the convergence of the same three technologies, robotics, energy storage, and AI. So I think that price target, obviously, if Optimus is successful, and we believe it will be, we think that humanoid robots is evolving into a $26 trillion opportunity, half in the home, half in manufacturing plants.
We're speaking with Kathy Wood, CEO and CIO of ARK Invest. Kathy, you mentioned Tesla. We're talking about Tesla, the regulatory environment. Certainly it's a less favorable regulatory environment for Tesla than it was just a few years ago, just 2 years ago, just 1 year ago. You also talked about the Trump administration and the ease of regulations that we're going to see through the Trump administration. You've talked about that with us in the past. I'm wondering, a year into his presidency, what do you still want to see in terms of deregulation? What have you not seen yet that you want to see?
Well, I think it's constant chipping away. In his first administration, I think President Trump said for every regulation you put in place, you have to take away two.